Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy.
Good morning and welcome. This is NDTV Profit. My name is Alex Matthew and you're watching All You Need to Know. Like the name suggests, we get you up to speed with everything that you need to know at the start of your day. Let's start with the headlines. US President Joe Biden for the first time says he will halt shipping American weapons to Israel if it launches an invasion into Rafah. Indian markets set for another day of volatile trade. Profit booking continues and action is stock specific. US markets run out of steam after Dow closes in the green for a sixth day. The S&P 500 ends unchanged. The RBI lifts restrictions on Bank of Baroda. The bank can now get customers through its application. The stock could in fact open gap up. Delhi's Labour Commissioner pulls up Air India's management for failure to address concerns raised by employees. Larsen & Toubro reports strong earnings. Profit is up 12% and order inflows cross as much as 3 lakh rupees in 2024. Hero MotoCorp meanwhile clocks its highest ever profit and revenue in the fourth quarter. And the rural economy is showing signs of recovery according to FMCG firms. Let's start today with the top news from overseas. US President Joe Biden has said that he would halt some shipments of American weapons to Israel if Prime Minister Benjamin Netanyahu follows through with plans to invade the city of Rafah, which is believed to be primarily populated by refugees. In an interview with CNN, the president also acknowledged that American bombs had been used to kill civilians in the region. Biden is under extraordinary pressure, including from members of his own party, to limit shipments of arms amid a humanitarian crisis in Gaza. The report has said that the US has already paused a shipment of high payload munitions due to Israel's possible operations in Rafah without a plan for the civilians there. That's according to the Pentagon, though it said that a final decision on that shipment has not yet been made. Shifting focus to international markets then, and US stocks ended mixed with the Dow gaining about 0.4% and the S&P ending almost completely unchanged. In fact, the Nasdaq 100 also ended just marginally in the red, and currently the Dow futures are not pointing to any major cues going forward. So let's talk about where we stand here in the Asia Pacific region as well before we turn to India. And you had 2 of the 3 early rises that began in the red. The exception, of course, was the Nikkei 225, which continues to gain ground. It's up about 1/3%. And you have the Shanghai, so the onshore market in China, as well as Hang Seng in Hong Kong that are trading with gains right now. But what's in store for the Indian equity markets, and what major cues can you take from the F&O space? Agam is here to break that down for you. Agam, it's been quite a bit of chop and churn and of course stock-specific action. Does that continue today?
It does, and it is once again going to be all about earnings. We haven't seen as much when it comes to the benchmarks, but let's start by taking a look at how Nifty's panning out today. Of course, we have yet another weekly options expiry there, so that particular index will be in focus. This is perhaps for the first time in the history of the Nifty and the NSE that the index remains unchanged on a day-to-day basis, absolute down to the first and 1 tick. So that's how you see that it is closed at around 22,302 at 0.50, and this is exactly where we will close in the session before. So this perhaps will be one of those which could go down in history for, well, it doesn't really mean anything, but well, this is as flat as it can get. Of course, in terms of open interest, well, there you have it. We have seen about a 1% increase in OI there as well. Coming down to the Bank Nifty, well, we're looking at once again a less than 1% increase in OI, but the Bank Nifty, while it lost out on the 49,000 mark, 48,500 mark as well, at one point in time it was trading below 48,000. It does seem like it's moved back above, and that perhaps could be a little bit of a solace point for those who are longs in the markets. But moving on to the options market, and of course today is the weekly options expiry, and we are seeing a lot more writing coming around levels of 23,000, 22,300, 22,400, 22,500 and thereabouts, those strikes in terms of calls and puts. Where does it leave us with your overall open interest distribution? Well, continue to see a lot more writing around 22,800, but we did see a lot of traction around 22,500 yesterday as well, and 22,000 puts also continuing to see a lot more writing coming through. But in terms of stocks to keep an eye on today, and as Alex mentioned that it is going to be once again about earnings. Well, we have Pidilite. TVS Motor Company came up with strong earnings. Of course, there was post-market, but I reckon that we may very well see a reaction there as well. Voltas, of course, reacting again to its Q4, ABB and Piramal International, among others, which are also seeing a good increase in open interest towards fresh positions. But about a short covering for Navin Fluorine, UBL, Gujarat Gas, Lupin, as well as Max Financial. UBS specifically, it started off with a 2% cut and eventually recovered and ended up with gains of around 0.5%. So, and of course today, Alex, plenty more earnings to keep an eye on as well.
Absolutely. Thanks so much, Agam. In fact, let's talk about those earnings, and let's start about L&T. Of course, it's reported its Q4 numbers yesterday, and the PAT number is quite strong, and more importantly, the order inflow seems to be robust as well. Anushi is joining in with the key details to watch. Anushi, what's your reaction to the earnings?
Hey, morning, Alex.
Morning.
So I'll break down the P&L part first. So revenue about 15% of an uptick, healthy growth over here, which was led by its infrastructure and high-tech manufacturing segments. If you look at the EBITDA, about 5.9% of a growth, while the margins did see some decline, about 10.8% versus 11.7% last year. Again, this was on the back of higher cost in the staff costs were higher, and also the sales and admin cost went up. So both the low base effect played out of last year. Also, because of the higher execution, the sales and admin costs were about 51% higher. So that led to the dip that we are seeing, the marginal dip that we are seeing. Net profit, healthy growth again over here, about 12.4%. But now I want to focus on the order positioning of the company. So the total orders received this quarter declined to 5%. So in Q4 for L&T is particularly a stronger quarter for them. But again, with the elections, this was supposed to happen. The management had indicated earlier the Q4 and Q1 would be impacted. Total order book about 20% of a growth over here, and international order inflows were down this quarter. But overall, if you look at the FY24 picture, quite a strong order inflow growth coming from the international side, especially the GCC region. Now, for the guidance going ahead, the company has guided for 15% of a revenue growth, while the order inflow growth has trimmed down to 10% compared to 20% that we saw this year. Again, this is on the back of the elections that is going to impact the first half of FY25. So that is why we are seeing the company guiding for a lower growth. Also, if you have to look at the margins, now they are expecting margins to more or less remain flat. So again, that seems on a watch out for, or how the market is going to react to this. So this is an overall view on L&T for today.
Right. Thanks so much for getting us those details, Anushi. Let's talk about a couple more companies in the automotive space this time, and we're talking about Hero MotoCorp as well as TVS. Of course, Hero reported its numbers around 3:15 last trading session, but then some management commentary coming in post-market hours. Puneet is joining in to give you the key highlights here. Puneet, what's the key takeaway?
Yeah, so for Hero, the numbers were slightly better than what the analysts had expected. Both on the revenue and the margin front, there was a beat by the company. Do know that the company has reported revenue growth of roughly 15%, while the margins have come in higher, roughly 14.3%. Now, the management highlighted that these margins would have been higher by roughly 1.3 basis points, so roughly around 15.6%, had the EV portion not been, which is currently loss-making for the company. It said that the net profit rose roughly 18% compared to the previous year, coming in at roughly 1,016 crores. Now, what are the brokerages saying? Citi has a buy call with a target price of 5,500 rupees, which is a 19% upside from the current levels. They say that the healthy realization as well as the margin trend for the company is a key positive, while the first half should see launches in the 125cc scooter segment under the brand Zoom for the company. It is also seeing a Zoom 160cc launch going forward this year. They have said that the management's efforts on premiumization have borne fruit, and finally they have slightly trimmed their estimates on very positive outlook, but maintain a 19 times price to earnings ratio for the company. MK also has a very positive view on Hero with a target price of roughly 6,000 rupees per share, which is a 31% upside from current levels. They see that the management highlighted one key point that there is a return of first-time buyers for their vehicles, and efforts around product actions as well as upgrading performances is very, very key. Quickly, if I could also highlight what's happening with TVS, the numbers did come post-market hours. When we look at the revenue growth was strong at roughly 23%. EBITDA has been one of the key drivers here, rising roughly 36% to come in at roughly 11.3%. When you look at the key highlights, the company mentioned that this is the first ever year that they've sold 40 lakh motorcycles in a financial year, while they will be announcing multiple launches of the electric vehicle iQube. There are chances that a lower variant to compete with the likes of Ola do come into place. And finally, what are the brokerages saying? Citi has a sell call on the company with a target price of 1,555 rupees per share, which is roughly a 23% downside from the current levels. They said the results are slightly upbeat on the operational side, but valuations are a key concern for the company. They say that they expect healthy demand going forward, and the trend of scooterization should continue, which will be a key benefit for TVS. But just on valuations, the company has the brokerage has maintained a sell with a target price of 1,550 rupees per share. Back to you.
Right. Thanks so much, Puneet, for getting us those details. Tata Power is the other stock to watch out for on account of earnings, and it is a beat on the profit number, and it's registered as much as double-digit growth in profit. Let's talk about why. Mika is joining in to tell you more. Mika, morning. What are you picking up?
It was a profit beat. Profit was up 11.3% up to 1,455 crores. However, it is key to note that revenue and EBITDA as well as margins did miss estimates. While revenue and EBITDA did show growth between 20 to 30%, I think it's key to note the margin miss. Estimate was 17%, margins were at 14.7%, lower than the year ago numbers. When you talk about the segment-wise revenue, the growth was led by the generation segment. Revenue was up almost 70%, whereas the transmission and renewables revenue was up 8.8% and 35% respectively. A key focus for Tata Power this quarter was the solar segment. Now, the utility scale EPC order book was at 13,385 crores, with the company's order wins winning orders of 100 megawatts, which were worth 470 crores during the quarter. Now, 47% of this order book is from the Tata Power Group, whereas 25 and 7.5% respectively is from SJVN and NTPC, who are the other three top holders. When you look at the solar segment, rooftop, especially the rooftop one, they won orders of 286 megawatts of solar rooftop during the quarter. Now, group captive order book is at 2,095 crores, whereas the third-party rooftop order book is at 772 crores. Now, it is key to note that Tata Power is a key beneficiary of the government's rooftop solar project, which only takes in domestic manufactured modules and will only accept the ones produced locally. And when you look at their solar cell and module manufacturing plant. Now, the 4.3 gigawatt solar plant did start commercial production during the quarter, and the company produced 130 megawatt modules during quarter 4.
All right, thanks so much, Mika, for getting us those details. Now, it's going to be earnings heavy today as well, with several Nifty 50 companies posting their results, and among them, of course, is State Bank of India. And we're expecting the net profit to come in at about 12,340 crore rupees. The net interest income is seen at 41,329 crore rupees, and the NIM, the net interest margin, is expected at 3.3%. Remember, the context, of course, is that a lot of lenders have been facing a little bit of pressure on their net interest margins. So we'll have to see whether State Bank of India is contending with these. Of course, loan growth might just be a little bit of a pain point for this bank. It's registered loan growth of as much as 14%. The question mark has been in recent quarters about deposit growth. That has stood at 11%. So the guidance on how this is likely to pan out is going to be watched very closely, as well as the impact of higher operating expenditure on the Q4 numbers. We spoke about the margins, whether or not the OPEX is going to have a bearing on the NIM as well is something to watch out for. Now, let's talk about the next stock which will be reporting its earnings today, and that is Asian Paints. There is increased competition in the space. Is that going to be weighing down on the earnings? Agam is here to tell you more about that. Agam, what are the key numbers to watch here?
Right. Well, Alex, it's going to be a quiet quarter, pardon me. And this is perhaps also unexpected lines because we really haven't seen any uptick whatsoever, not from the urban space, nor from the rural areas when it comes to consumption of paints in general. Yet, the company has gone ahead and, in fact, cut prices. But I'm going to talk about it in just a bit. Let's talk about the headline numbers. We are expecting revenue to grow by around 4%. Your EBITDA margins expected to come in at around 21.2% with a 21.3%. Pardon me, with perhaps a little bit of an expansion in margins, and net profit likely to climb as much as 8% on a year-on-year basis. We're not expecting too much in terms of volumes growth, which is expected to remain subdued because of the weak demand environment. We're also keeping an eye on the decorative segment, especially because that's where we have muted expectations. The company did take price cuts, but that's not really expected to improve your overall volume substantially. That said, we're also going to be keeping an eye on the elevated crude prices and the consequent impact on crude derivatives that may mean for the company's input costs and margins going forward.
Thanks so much, Agam, for breaking that down for us. We have to slip into a very quick break. We've got more on the other side, so do stay tuned. Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back. You're watching All You Need to Know. It's time now to focus on some of the stocks that will be buzzing in trade today. And Varsha is joining in with some of those key details. Varsha, what are you picking up? Morning.
Good morning, Alex. So let's start with Bank of Baroda, wherein the Reserve Bank of India has lifted restrictions on Bank of Baroda's BOB World app with immediate effect. Now, with this, the bank will resume the onboarding customers through mobile app. Now, this development comes after RBI barred the bank in October from onboarding new customers on the BOB World app after it found material supervisory concerns. Now, NDTV Profit had previously reported that BOB World app mess was a tale of leaky app with a poor security employee and third-party workers gaming the system in order to earn incentives. Then we have NBFCs, wherein RBI on Wednesday sent an advisory to select NBFCs asking them to strictly adhere to income tax rules on cash dispersal. Now, this means that NBFCs must stick to a cap of 20,000 while disbursing cash loans. Now, this is weak after regulator imposed restrictions on IIFL Finance gold loans business for violating this norm. A letter was sent to gold NBFCs, including Muthoot Finance and Manappuram Finance. So, these two stocks should be in radar for today. Then we have some of the stocks which has won orders. Now, starting with NBFC, where they have received order worth rupees 400 crore from the Supreme Court for Amrapali project in Chhattisgarh for 250 crore and Kerala project for 150 crore. Now, order book as on Feb 2024 stands at 55,300 crore. Then we have Rail Vikas Nigam, wherein they have received order of 167 crore from South Eastern Railway. This is for design, supply and testing for upgradation of electric traction system. And with this, the order needs to be executed in 18 months. And lastly, we have TVS Supply Chain Solution, where they have win new business deal from VE Commercial Vehicles in MP. Now, this is to manage in-plant warehousing and logistic function at the Eicher bus factory. Now, this new deal for VE CPS bus plant is for 3 years. So, these are the stocks which should be on radar as of today.
Got it. Thanks, Varsha. And let's also focus in on earnings, because there are several stocks that will likely react to numbers today. And Kanika is joining in with a list of stocks. Kanika, what's on your list today? Morning.
Good morning, Alex. So the first stock on my list is BSE. Now, while its revenue was up 110% year on year, its EBITDA and net profit both declined by almost 20%. Now, talking about the key growth drivers, first of all, there's trading segments. Now, the company has focused to increase the market share across all segments, and one of the key highlights here which stood out for me was transaction charges, which were up 320% year on year. Additionally, the Star Mutual Fund platform, the number of orders here also rose up to 55% in FY24 compared to FY23. But the key thing over here to note is SEBI's directive to BSE to pay regulatory fees. Now, the management has provided for the SEBI demand of higher fees on derivatives of rupees 170 crore, which led to sequentially flat earnings. Now, near-term margins also face headwinds from the higher SEBI fees. Jefferies also notes that while BSE had announced a price hike of 20% recently on May 13, the margins will still remain impacted. Additionally, Jefferies notes that the medium-term outlook for BSE remains healthy because derivatives will make up about 48% of BSE's FY27 revenues. Second stock on my list is Godrej Agrovet, where its revenue was up 1.8%, but its EBITDA and net profit was up 98% and 179% respectively. Now, the growth drivers over here are market share gains in animal feed, where mainly cattle feed and fish feed both rose 11% and 19% year on year, both sustaining volume growth. Additionally, domestic crop protection business also saw 37% growth in revenues, with in-licensed volume rising 40%. Also, structural turnaround of dairy business was experienced, where significant improvement in operational efficiencies and improved milk spread was observed. However, Aztec Life Sciences and oil palm businesses were impacted by challenging environment, where Aztec saw realizations and demand headwinds in enterprise products, which was severely impacted the margin profile. The final stock on my list is Kalpataru Projects, where revenue was up 22% on account of strong execution and healthy order book for FY24, and its net profit was up almost 20%. Coming to its order intake and order book position, its order inflows were at a record high of almost 30,000 crores, and this does not include L1, but if you include L1, it add around more 5,000 crores, and the consolidated order book stood at almost 58,000 crores for FY24, which was fueled by robust business activity in transmission and distribution of power, oil and gas, and civil construction. Additionally, the company expects strong tender pipeline of nearly 1 trillion rupees of projects to be awarded over the next 24 to 30 months. That's all about it.
All right, thanks so much for getting us those details. Just want to clarify, in case there was any confusion, BSE has reported a nearly 21% increase in PAT for the fourth quarter, but of course that's one stock to watch out for. Let's move on to brokerage reports, and Harsh is joining in to tell us about a couple, including what Nuvama had to say about KC International. Harsh, what do you have for us?
Well, Alex, it's a note which stands out largely because they've downgraded KEC International, but they've hiked the target price a little bit. Now, I'll talk about the Q4 numbers and what they suggest from the Q4 numbers. They believe revenue was largely in line with expectations, but margins is a bit of a miss. 6.3% margin versus the 7% guidance is a bit short. and they believe that that is a concern, and that's what's really impacted profit after tax for the company. The PAT miss was 20% vis-a-vis street estimates, and that they believe is a concern. Why has that happened? Around 400 to 500 crore rupees of sales has been pushed and deferred to FY25, and that possibly is part of the reason for the miss in terms of margins as well as profit after tax. Sales have been deferred largely because of issues surrounding logistics, and they believe that all news factored, the stock looks decently well priced. They've rolled forward their estimates to FY26 and therefore hiked the target price a little bit. It's probably a 10 to 15% upside from here, but nonetheless what they've done is they've downgraded it from a buy to a hold. So keep your eye out on this one. Of course, many more coming through, including a CLSA on HCL Tech. Very interesting upgrade coming there as well.
Absolutely, and one we'll talk about in the near term and over the next half an hour or so possibly. Thanks so much, Harsh, for getting us those details. That brings us to the end of this particular edition of All You Need to Know. It's been a pleasure bringing it to you. Do stay tuned, lots more coming up before the start of trade, and you'll find all of that right here on NDTV Profit. Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell?
Hello and welcome to India Market Open. It's Thursday morning. Global cues are mixed, and interestingly, Neeraj, yesterday we created a history of sorts. The Nifty closed exactly where it opened, down to the tick. Even though it was volatile, but the closing, of course, was interesting, I thought.
In funny media conversations, the producer was telling me that we can't show
the closing chart because
it looks exactly the same. Yeah. So you could have recorded a morning link and pretended like it was a closing link, right? But yeah, I think it's going to be consolidation. Positional traders, I guess, will trim positions ahead of elections, and there is a little bit of nervousness. But the good news is the WIX didn't do a number on us yesterday. So I think I'm taking a little bit of relief from that.
And even when you volumes, Samina, you were pointing this yesterday as well, both on the derivative and the cash side, the volumes have just plummeted. So maybe pre-election jitters out there on the volumes front as well.
Yeah, you'd rather buy expensive than buy when you're unsure, right? I think that seems to be the strategy or the trade, at least for D Street, for the next couple of weeks. But this morning, global markets are pretty much in the same mode. No major excitement. While I was looking through important takeaways from global markets, I didn't come across too much. Pretty much a flat day for Wall Street. Yes, the Dow has eked out gains for the 6th straight day, but the Nasdaq and the S&P continued to see a little bit of consolidation. Tech, remember, is seeing some sort of softness in selling despite numbers beating very high street expectations. The Nasdaq actually continued to end or go home on a flat note. The Dow, like I said, has been on a good run, and the S&P also going home flat. Well, you had Neil Kashkari on Tuesday who said that you might have to wait a little longer to see the Fed moving on rates. This morning, of course, what we also believe, it's the Boston Fed President, Suzanne Collins, who furthered that move, saying that it's going to be a while till you see inflation easing below 2%. And that's how long you're going to have to wait until the Fed moves on the rate cycle. Bond yields, 4.5, so nothing much on that. The dollar index around 105. Remember, closer to levels of 100 is when you actually see a lot of action and flows pulling back into emerging markets. Well, Asia as well this morning is having a flat morning. You've got a little bit of data that you're watching out for. Interestingly, Japan, that was trading slightly lower, has turned positive now. China, so you can see Hong Kong and Shanghai, both those markets looking better. You've got economic data coming out of that, so that's what the street is going to be tracking closely. Remember, Hong Kong's been on a pretty good run from the start of this month, and the gains in the buying continues. And what we believe, the flows coming into those Asian markets are fairly sticky. Japan, on the other hand, has been giving up or letting up some of those gains, but this morning, though, it's a flat to slightly higher start for Asia. A couple of things that UBS said, and this, of course, struck my attention, and that's largely the sentiment for world equity markets. They've said that investors should stay vigilant amid global uncertainties and diversify across asset classes. What they mean is that while it's risk on trade, what we have been seeing across the world, you also have assets like gold, which are risk off trade, that have been seeing buying interest, and that may be a trend you want to continue to focus on going into the next couple of quarters. Apart from that, crude, worth a mention, it's down 7% from its recent record highs. Lower again, it was lower, but of course recovered by the time we closed, largely on back of a sharp fall in US crude inventories, which came in unexpected. So that was one space that saw some buying. The Asian markets flat. Wall Street as well not giving us much to cheer about or weep about this morning. Implied Nifty indicating to a marginally lower start this morning. So that's what we have, Neeraj. I've done the global setup for you. It doesn't, I don't think we're getting too much from world markets. It's going to be focused on domestic cues again.
Yeah, most certainly. And you know, as Samina and me were talking about, if you just look at what the trade setup is looking like, essentially it's lower volumes both on the cash and the derivative side, even the derivative side, which has been a really interesting part, because it's almost been that the derivative traders have been on some bit of testosterone when it comes to volumes, and that has pulled back a little bit. But the market action yesterday I thought was a bit positive. We ended close to marginally in the green, if you will, at the last minute of trade. Mid caps and small caps did okay. So the action seemed mildly positive, and therefore it almost seems that the index is doing what it is doing, but look at specific pockets, because that is what will do well or not well. So what comes out, and I don't know if Samina will agree with me, but there are two or three things that kind of stood out for me. One, the commentary from Bharat Forge suggests that there are green shoots for export-oriented sectors selectively, because much as in February they mentioned that how things look choppy, yesterday Amit Kalyani on our channel came out and said that we were overcautious. Now we are correcting that stance of caution, and things are looking very, very robust on the global front in select pockets. Industrials, defense, and even on autos, so for the forging piece. So that is part one, that maybe selectively some of the global pieces might be looking okay. 2, FMCG stocks were up as a defensive bet for 2-3 sessions on a trot, but yesterday came off, and somehow the results are mixed, the commentary is mixed, and therefore the necessary tailwinds to take the index up for multiple days is amiss out there in FMCG. And Samina, I mean, you'll talk at detail about L&T, but just the fact that without getting into L&T in particular, but if L&T is saying that because of election season, the guidance is lower, you might well, I mean, people might well want to consider that why get into construction-linked stocks for the next month and a half? There are other pockets to bet on. Let's leave construction out of the picture.
And that, for every reason, is fair. Brokerages as well, though, they don't seem too concerned about this. So even though the next 2 quarters for the likes of an L&T may be slightly slower or weaker, it doesn't seem like a concern. Management, of course, has reviewed its guidance marginally lower, but like I said, the brokerage is not concerned. Talking about what you said with Bharat Forge and how the global piece is looking okay, L&T draws 38% of its order book from international clients, and they seem quite convinced and certain that that piece of the business is growing, looking good. They're hiring employees. Very diverging, right? Because when you think global, you think pharma and you think tech. And you think those are the 2 pieces that are critical when it talks about exports or building businesses for outside. But to tell you, I mean, there are businesses outside that are doing okay. And Middle East, that's a market that's once again seeing a very sharp recovery.
Yeah. But Samina, I must tell you, I mean, you go to the US and the consumer out there is spending like there is no
They have
tomorrow.
no idea, right? They're so far away from reality.
So therefore, even textiles for that matter or stuff like that, which is getting exported, might actually not have that bad the next few quarters. I mean, everybody's concerned about what's happening to the globe, but it seems okay from the commentary.
But you know, while you say that consumers are spending, and I'm sure you've done a lot of fine dining over the last couple of days.
No, actually, a very local based.
But expensive. Haven't things gotten a lot more expensive in the US now?
But which is why I didn't go to the fine dine places. I went to the Chipotle.
Chipotle is still expensive. I thought, and a Starbucks has increased prices as well. So inflation, truly is a worry. But like Neeraj said, there's zero impact on consumption, consumers. I think, like we said, the general public is so far away from what we see and read about every morning as we gear you up for trade or what the markets globally believe. But going back to earnings, and L&T was very interesting because it was a good quarter. The management sounded very promising, very convincing, but also at the same time, I think taking heart from the fact that they were very honest and upfront about what election could do in terms of execution for the business over the next 2 quarters. But let's quickly take you through what those numbers was, what those guidances put out by the management was. Revenue was up 15% to come at 67,000 versus 50,335. EBITDA was up 5.9%. Margins came in actually weaker, so they've seen a slight decline of nearly 100 pips to come in at 10.8%. Net profit was up about 12.4%. What led to the performance for L&T in the 4th quarter? Strong execution in infra and high-tech manufacturing segment. Higher sales and admin led to a marginal dip in margins. International order book looks extremely well placed. 38% of the orders come in from the international marketplace. And there's also been a little bit of a cost impact due to execution ramp up and previous year benefit on NABA projects profits. Apart from that, as we look ahead, they've said that they are anticipating their order book to grow by 15% in FY25 versus 21% in FY24. They've said that elections could lead to a delay and a little bit of a slowdown over the next couple of quarters. They've also said employees usually have gone away on the pretext of voting. So of course, things are going to slow down over the next 2 quarters. But post that, it will be back to serious business for L&T. In terms of what the brokerages have said, not too much in terms of weakness. They seem to quite like what they saw with the earnings for L&T. You had Citi that has continued to maintain its target price and call on L&T. And I'm going to quickly take you through that and take you through what they do believe on L&T. They've said that the price target of 4396 remains. They believe a 10% order inflow growth guidance and strong base is actually a big confidence booster for the stock. F525 management guidance remains flat, and project and manufacturing was a bit underwhelming. So they've said the margins there could be 8.25, but of course at a consolidated level they will maintain margins in that 10 to 11% range. So that's L&T for you. What I want to also mention is BSC this morning. couple of reasons why. We had numbers from NSE, which actually were pretty solid to say the least. Even BSE operationally has had a really good quarter. No surprises there. Capital market players across the board are doing well, and this is the epitome of, or the benchmark for capital market participation. Good numbers on BSE, but of course what you see is not what you really get in this case because of a recent norm by the SEBI. In terms of what they've reported, let's take you through how they've done. Revenue was up a whopping 110% to come in at 545 crores. EBITDA, though, like you can tell, is coming in 152 crores versus 127 crores. Margins are also down to half, so 27.98% versus 49.11. Net profit was up 20% at 106. Now, the impact that you're seeing on the earnings, so clearly there's a diversion between what you see on top line and bottom line, is because the company had to accommodate for a payout of 169.77 crores to the SEBI as a regulatory fee on notional value of options contract. This, of course, came in a few weeks ago. The stock had reacted negatively, has lost out substantially since that, so no surprises there. But I don't know, do you think there could be a negative reaction? Because I think that's in the price after that big fall.
One, you could argue that, but two, Samina, interestingly, one or two of the notes that I mentioned, because I'm not completely sure of how much of the total provision have they taken already in quarter four. Because one of the notes said that the near-term margins continue to face headwinds from the higher SEBI fees. So I wonder if that may well continue, and therefore that keeps the stock under
check. But they
check.
also say in the same breath that medium-term outlook remains healthy.
Yeah, it does.
So you want to...
Because there's a one-off, I mean, 1-2 quarters.
And I think what they've also said, what the management has said, that they will be talking to SEBI to try and revisit this and renegotiate this. So if that happens, forget about a correction. The stock will do a very sharp recovery. Maybe not today, but over the course of the next couple of days. But tough to call whether the street will view this as a glass half full or half empty. Well, that was BSE for you. TVS Motors, again, great quarter. I think Neeraj will talk about Hero in a minute, but I'll just quickly take you through what TVS managed to do. Good earnings. Revenues were up 24%. EBITDA was up 37%. Margins were also seen an expansion, and net profit was up 18%. So largely in line with what the street was expecting, and in line with what we've seen from the auto pack. Month on month, those numbers have been actually pretty phenomenal. Well, apart from that, Citi has maintained, unfortunately, a sell on TVS Motors with a downside of 23%. They believe that while the numbers are operationally upbeat and the outlook is positive, they believe that they'll find it difficult to maintain market share or margins in the case of TVS Motors. So good earnings, but maybe in the price, and the outlook doesn't look as promising.
Yeah, and apparently they have
multiple launches.
Catalyst. No, the Citi has a negative Catalyst watch open on TVS as well. So interesting out there. Okay, so that's the first three stocks from Samina's end. At my end, I want to start off with Manappuram and Muthoot, with a disclaimer, of course, that Reuters yesterday spoke about this piece during market hours, and the stocks had fallen a bit. But multiple media outlets are reporting this, that RBI has written an advisory note to few gold loan NBFCs, and they've asked the NBFCs not to not to exceed the cash disbursement limit, and therefore no NBFC should disburse a loan amount in excess of 20,000 rupees. Now, this is as per various media reports. The point I'm making is that because there's so much of reportage, you might well see maybe some more reaction here. But if you look at the intraday of a Manappuram, light there, that sharp dip that you see probably already accounted for a bit yesterday. However, if the stocks fall further, you should know why they are correcting. It's because of this news flow that is around Manappuram and Muthoot and everybody that is into gold loan financing. So bear that in mind. Speaking of news flow, positive news flow, Bank of Baroda. RBI has lifted the curbs on Bank of Baroda's Bob World app with immediate effect. Bank will resume onboarding customers to the Bob World app. Now, this, RBI actions typically take between 12 to 18 months or what have you, but when they are off, it should be a positive. This should be construed both as a sentimental positive as well as an actual positive for Bank of Baroda, and therefore I wouldn't be surprised if there is a reaction on Bank of Baroda in the session today. So that's to be watched out for. And then we move to results. Samina spoke about a couple. I want to speak about one for now, and then we'll move on to some of the others too. But I thought amongst a lot of mid-sized companies which came out with results, and some positive, some negative. The one that stood out for me the most was Kirloskar Oil Engines. Their Q4 numbers, revenues were up 20% at 1,660 crores versus 1,384 crores. So 20% is a good number. But then look below that revenue number and the operating numbers. So the margins were up 450 basis points at 18.23% versus 13.72%. That's a big jump on that base, really, 450 basis points for Kirloskar Oil, and as a result of which the net profit was up 86% at 147 crores versus 79 crores, circa 79 crores. So I would suspect that, Samina, this stock could actually have a very positive reaction in the session today.
Yeah, it should be interesting. Some of these counters will see good moves. Sula Vineyards, not a big company, but I still want to bring up and tell you what those numbers look like. Interestingly, while a lot of their competitors have actually done well this quarter, Sula's had not such a great quarter. Their net profit came in at 13.6 crores, which was down about 4.5% if you compare it to the same quarter last year. They were impacted by very weak operating margins. Revenues from operation grew 12%, as you can tell, but of course, on the bottom line, they've taken a hit. So Sula should be getting a little bit of a thumbs down in today's day of trade. Two stocks which I'll come back to earnings, but which may see moves because they usually react to news flow such as this. RVNL, another order win for the company. They've backed a project worth 167 crores. So RVNL, it was up on a day like yesterday, could see a gap up in terms of trade. And NBCC as well, they've secured orders worth 250 crores and 150 crores from Chhattisgarh and Kerala. NBCC, there you go. The move on that stock was evident, 6% higher yesterday. Could see another gap up in trade this morning. So good run on both of these mid-cap stocks, which are beyond earnings. Apart from that, Neeraj, you want to add to a few? You've also got Asian Paints, SBI, that the markets will very closely watch out for. And Bank Nifty, I think, will be very keen to see what SBI does today, especially after that breach of 48,000 yesterday. Yeah. And a recovery for sure, but yeah.
Yeah, and a PNB. But I mean, just before we get to today's numbers, just one or two other names which stood out. I think, amongst other things, SKF could well turn out to be a one key stock to watch as well in the session today. Remember, it doesn't show too much of variation, and as a result of which, the numbers that they have posted, revenues up 10% at 1203 crores. The Bloomberg estimates were 1123 crores. The margins up 247 basis points at 17.72%. The Bloomberg estimate was 16.4%. And the net profit up 42% at 175 crores. The estimates were 137 crores. Relative to estimates and even otherwise, this margin performance up 247 basis points, PAT up 42%. All of this should actually aid the cheer on the street, I would reckon, on SKF. So watch out for this one. Could well be one key mover in the session today to watch out for. And then some companies with strong margin performance and some companies with below estimate performance. So Godrej Agrovet and Gujarat State Petronet, both of them, revenues were completely flat. But look at the margin performance for both, very strong. And therefore, don't be surprised if there's a bit of a reaction on the positive side for these. And below estimate performance for Bajaj Consumer Care and Kalpataru projects. So these are the other two in which there could be maybe negative reactions, because relative to what was estimated, particularly in the case of Bajaj Consumer, relative to what was estimated, the numbers have come much lower, and therefore you might see a bit of a reaction on both of these as well. And Samina, you were talking about sectors. IT could be interesting today. Yeah, because Jefferies is saying Infosys is our only buy. CLSA is saying that we are putting out a note on IT, multiple companies, but the one stock that we are upgrading to a buy is HCL Technologies, because there is no change in investment thesis, but there has been a recent correction.
I think it's lack of finding themes to trade on, but defensive
the stocks
generally, yeah. Also, I don't know whether you mentioned Hero MotoCorp.
No,
so while we talked about how TVS has done what it's done and the brokerages may not seem too excited about the outlook, Hero, on the other hand, is also, numbers were phenomenal. Revenues are up 15%, EBITDA was up 26%, margins have also expanded to 14.3%, net profit was up 18.5%. And Citi on Hero has come out and said that they maintain a buy with an upside of nearly 20% from yesterday's close. They believe that the company will continue to have healthy realizations and margins, and the focus which remains on premiumization will actually work out for Hero MotoCorp. They have trimmed their estimates by 3 to 5%, but they maintain a 19x on the company. So diverging sort of calls by brokerages, while TVS not looking so great in terms of what the brokerages think. That's a clear disclaimer. Hero MotoCorp 3% up move yesterday, and the brokerages also quite enthused. And one more quick one, if we have another minute, is Piramal Enterprise. Weak numbers, stock is going to get trashed as we expect in the early minutes of trade. And you also had Kalpataru Projects. They've actually run a good quarter. Small company, but it's usually the small ones that actually, no, maybe that's not completely true. You also have big companies these days that see big swings in trade. But they reported good profits, operating numbers look good, margins have come in better. Bottom line, top line, a clear beat in terms of Kalpataru Projects.
Well, and speaking of TVS, speaking of Hero, speaking of Bharat Forge's numbers as well, I think autos is in the fast lane. Let's get in Abhishek Gaushinde, Deputy Vice President Research at Sharekhan by BNP Paribas, who joins in right now to talk about all of this. Abhishek, great having you. Thanks for taking the time out. This is Neeraj here. Good morning. Let's start off with the two-wheelers first. What did you make of the numbers thus far, and particularly the slight beat that Hero seems to have shown?
Okay, so broadly, you see that numbers from both of these companies have been slightly better than our estimates, and side by side touching the upper end of the street size estimates. So, what is the critical thing to see in the Hero MotoCorp and the TVS Motor at this point of time is that they are reporting consistency in their EBITDA margin, despite having investment and the increase in the focus on the EV business. Say, for example, Hero MotoCorp has reported an EBITDA margin of 14.3%, but there was a drag of 130 bips in EBITDA margin due to the EV business. So excluding the EV business, IC business EBITDA margin is above 15.6% kind of a thing. Similarly, TVS Motor has been consistently maintaining 10% plus kind of a margin for last 11th quarter, and this was the third quarter when it reported an EBITDA margin of above 11%. And despite that, it's increasing market share and in the EV business. So going forward, when the EV business will mature and started to contribute to the EBITDA, we will see a definite improvement in the blended EBITDA margin going forward. Plus, second thing that what is happening across the two-wheeler sector is that they are continuously expanding their product portfolio. In FY25, we will see multiple launches in EV segment from all of these legacy players who have been considered as a laggard in the EV segment 2-3 years back, but now the larger part of the market share is being considered by these players. And on top of that, one thing also we have observed common in most of the commentaries from the two-wheeler players is that they are now started seeing some kind of a revival in the rural sales, and a similar kind of thought process or the commentary we have also observed from some of the FMG players. So in FY25, we believe that beyond this premiumization, uptick in the rural sales is one of the important things to watch out for.
Abhishek, we did catch up with FADA yesterday as well, and we tried to understand what the dealer checks were looking like. And while the numbers that have come in look actually pretty phenomenal in terms of growth, and we've seen that on monthly sales numbers, we've seen that in the form of earnings by some of these companies, he seemed fairly cautious that into the next quarter things could turn a little rough. And he believes that the downfall in May and June could largely be on back of the election uncertainty, delayed spending. Those factors would impact the way some of these auto companies do. So looking ahead, if I had to ask you, while the reporting has been pretty good, do you think the next 2 quarters could be a little slower for some of these two-wheeler companies?
Next 2 quarters, I can say, but for next 2 months, definitely retail sales will slow down. That is largely due to the seasonality. In April month, we have a Chaitra Navratri and Gudi Padwa, so there was a lumpiness in the retail sales. But as we are going into the May and June, we do not have a strong marriage season or a festive season. So seasonality will play out. Along with that, obviously there is some kind of uncertainty in the environment related with the elections also. So that would dampen the retail sales, but that has already been factored in. What we are building up here from here is that high single digit kind of a growth in the volume for FY25, but sustainability of a margin. As for last 6-7 quarters, we see that the performance is largely driven by the improvement in the model mix and the improvement in the EBITDA margin than that of the volume. So I suppose that themes will continue going forward. And once but beyond that, Hero MotoCorp has indicated that it is seeing some kind of uptick in the first time buyers also. If that trend will come up into the reality, then it would be a cherry on the cake kind of a thing. But at this point of a time, we are not expecting a significant growth in the volumes or high double digit kind of a growth in the overall industry volumes at this point of a time. So as we go forward toward the festive season, we will see improvement in the volume trends. But what is important to look out at this point of a time is the volume mix. If volume mix is improved, then the EBITDA margin will take care about the earning performance.
Okay. Abhishek, yesterday when we were speaking to Bharat Forge, and quite a turnabout from the caution that they exhibited at the end of Q3 to what they said yesterday. But he sounded extremely confident, not just for defense, but also for the industrials and the auto segment too. The stock was duly rewarded, but what do you think happens next for a Bharat Forge? And what does that commentary signify for some of the other auto anchors which might have global exposure?
See, the Bharat Forge is uniquely positioned in the automobile space. It is a combination of auto plus capital goods sector. Now, it has been talking more about the defense, aerospace, and other non-auto segments compared to the auto space. So auto space, what we see that in auto segment of this Bharat Forge, we may see PV segment, the performance from the PV segment may outperform the CV segment. And CV segment is expected to, the growth in the CV segment is expected to moderate in the next year globally in USA and in India also. But PV segment will take care about its performance. And second is on this defense side. So compared to the past, when in non-auto segment, it was completely dependent on the oil and gas segment. But despite the weakness in the oil and gas segment, the company has been performing well, mainly due to the incremental orders and the execution from the non-auto segment. And when we go ahead from here, we will see some other new sectors, including the EVs, would also start contributing to the revenue and the performance. So what I conclude from here is that it is not a pure play automobile story, which we can compare it with the other peers in the auto sector. It's a combination of auto plus non-auto segment, which is a proxy play to the global automobile and the non-automobile engineering segment. Plus, it is considering its balance sheet, strong product portfolio and experience. It is also a good play to play on this theme of China plus one and Europe plus one kind of a theme.
Abhishek, list it out for me, right? I know things may be up and down for the next 2 months, but from what we've seen going ahead, if an investor is watching the show, what are the 2 or 3 stocks that you would recommend a buy on today? And when I say today, I don't mean it for today, but yeah, starting today.
Yeah. So in auto space, continuously we have been maintaining our positive stance on Hero MotoCorp and Tata Motors. So Hero MotoCorp is clearly has been performing well, consistently improving its EBITDA margin, and side by side it's available at a cheap valuation compared to its peers like Bajaj Auto and TVS Motors. This premiumization play is something which has been expected from the company for a long, and now it has been playing out well. Similarly, in the Tata Motors case, beyond its operating performance, the cut down in the net automotive debt is something which has been attracting the investors, and we continue to make our positive stance on these 2 stocks in the automobile space, Tata Motors and Hero MotoCorp.
Motors, which of course even technically was looking all set and ripe for a breakout last week, has given up some of its gains. It's now sub 1,000, making it even more compelling, I guess, not just fundamentally, also in terms of what we've seen in light of the recent weakness on the stock. And Hero MotoCorp, both those counters are the big picks coming in from Abhishek. Thank you, Abhishek. Great talking to you today. We'll of course connect back with you very soon. And on that note, we'll take a break. Implied Nifty indicating to a flat start with a little bit of a negative bias. Bank Nifty is going to be important in terms of today's trade. Remember, SBI, amongst others, will be reporting numbers. May add some direction to Bank Nifty today. We'll take a break. We'll come back. Agam on the other side will take us to the FNO setup as we get off for trade.
Presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Welcome back. This is India Market Open. We're taking stock of how things are panning out as far as the futures and options spaces goes. Well, yesterday was a day of trade, perhaps an historic one for a very different reason, that the Nifty closed flat and as flat as it could get, down to the tick, coming in at around 22,302.50. So, well, considering the last half an hour average, we haven't seen any change whatsoever. That said, we still did see about a 1% increase in open interest as far as the Nifty futures are concerned. And it was the same largely for the Bank Nifty, though the Bank Nifty did give up on certain levels as in yesterday's day of trade. Came off by around 0.5%, held on to 48,000 towards the end of the session, but the futures did see, again, a near 1% increase in open interest. Not too much change coming in as far as futures are concerned. But today, of course, is the Nifty weekly options expiry. So let's pull up and see how things have panned out. In fact, in the Nifty options space yesterday, well, we did see a lot of traction in both calls and puts, and written in and around 22,300, 400 and 500 strikes. Where does that leave us with your overall open interest distribution picture when it comes to today's options expiry? Well, we continue to see a lot of writing around 22,800, and that has been a sort of a trend over the past 2 to 3 sessions. But it does seem like we're going into a session where we just may see a little bit more resistance around 22,500 because of the calls and the kind of writing that we saw yesterday. That said, on the lower end, we continue to see a lot more accumulation in 22,000 puts. And well, it's a wait and watch on whether or not and where the Nifty does move through, because over the past many weeks, even the Nifty has been extremely choppy on an intraday basis on the final day of the weekly options expiry. So that's something to bear in mind, especially given that option premiums, well, we were in an environment where option premiums were not very high. Of course, they have moved up substantially over the course of the last 7 to 8 sessions as well. But let's talk about stocks then. And well, overall, of course, we're keeping an eye on Pidilite reacting to earnings, TVS Motor Company, on the other hand, also coming out with a strong set of numbers, which will in fact react today. And Voltas, on the other hand, looking at shorts. ABB and Piramal Enterprises, on the other hand, also looking at a good amount of increase in open interest towards their respective futures. But in terms of stocks which saw unwinding, a bout of short covering for Navin Fluorine, UBL recovering substantially from day's lows yesterday, Gujarat Gas, Lupin and Max Financial, among others, which well, are also in focus. But we have a breaking story right now. I'm going to hand it back over to Samina.
Thanks, Agam, for that. But yeah, like you said, big breaking coming in now. After mass sick leave by senior cabin crew halted operations for Air India, 25 Air India Express protesting cabin crew members have got fired. My colleague Vishnu Shom joins in with more on that. Vishnu, good morning. Lots of developments, and it's a busy morning from the look of it.
Yes, it is indeed. And, you know, this entire crisis within Air India Express seems to be getting, in a sense, worse because of two important aspects. Firstly, we have now learned that at least 25 cabin crew members who went on protest by turning up sick and switching off their phones in many cases from all across the country have now been terminated. These terminations began late last night. I believe they've continued into the early hours of today. We've had a look at a couple of these termination letters as well and have confirmed that they are in fact authentic. What is the airline now doing? The airline is going to be operating on a restricted basis of operations for the next couple of days, I believe till the 13th of this month, by which time they hope to regulate or find some sort of normalcy back in their operations. Why is this the case? Because these cabin crew members, the senior cabin crew members, are an important part of their flight operations. If many are being terminated, then they need to be in a situation when they can regulate their flight operations. So that's going to take some more time. In the interim period today, at least 76 flights have been impacted. I'm using the word impacted and not cancelled because of the 76, many flights will be cancelled, others may be delayed. There may be some other group aircraft, in other words, Vistara or Air India aircraft, which could be brought into service to take passengers as well. So that exact number we don't have as yet. But yes, the terminations of protesting employees has begun as of last night.
For that, they are getting penalized for that mass sick leave that did see operations being halted for Air India Express. Between Tuesday to Wednesday morning, you had 70 flights that had been cancelled. Remember, it's 300 employees that actually called in sick and switched off their phones, and that has led to 25 of them, senior cabin crew, being fired. Well, we'll go back to Agam and back to the focus on the F&O space. I believe, Agam, you're joined by Rahul for trades this morning.
Yes, absolutely, Samina. Let's get in Rahul Ghosh of Hedge.in, well, coming and joining us this morning. Rahul, good morning. Thank you so much for, well, taking the time out. Well, once again, as usual, let's start off with your assessment on what you make of the key benchmarks, the Nifty and the Bank Nifty, levels to watch, and perhaps also the kind of options that you're deploying here.
Good morning and thank you for having me. So first and foremost, it's very important to understand at the current juncture where Nifty at 22,300, there is no position to be taken on either side, which are not options. If you all take directional positions at this point in time, it could very well lead to getting stopped out on either side. That's very important to be understood. Why this is because between 22,000 and 22,200, we have a level of support, and above 22,500 is only when we have some room on the upside. So that is firstly very important to be understood. Secondly, when it comes to options, you can play around a lot. One point that has to be kept into mind, that is, there was very large FII selling yesterday. So if you look at the FII selling number yesterday, I think it was in excess of 7,000 crores, which is not a small number for a very, very long time. So that is something to be taken into cognizance. Keeping that in mind, we would plan a bearish strategy, a modified put butterfly. If you give me the go ahead, we'll go ahead and explain the strategy.
Yes, Rahul, please do go ahead.
So what we're going to do is we're going to buy the 22,000 PE over here, which is trading around 170. The reason we suggest buying the 22,000 PE and not the 22,200 is because the encompassing premiums are much better at this level. We initiate this strategy only when Nifty crosses 22,350, which is about 50 points from where we are. We buy the 22,000 PE, we sell the 21,700 PE 2 lots, and we buy the 21,550 PE. That is the strategy. The net outflow of premium from here is about 70 odd rupees or 80 odd rupees, depending on where markets open. So the risk in the trade becomes only about 900 rupees in case Nifty doesn't go up or doesn't stay sideways. One more very important point, in case Nifty goes up and does not go down as per our view or does not stay sideways as per our view, we simply roll up the calls from, I beg your pardon, roll up the puts from 21,700 to 21,800 and so on to cover as much ground as we get, thereby reducing the debit even further.
Rahul, if you could also just confirm which expiry are we deploying these options at?
So all of them are the May end expiry, 30th May expiry to be very specific. Right. So 22,000 put we are buying of 30th May. Selling 21,700 again of 30th May 2 lots, and buying 21,550 of 30th May as currently shown on the screen.
Right. Of course, we need to bear in mind that it won't just be about earnings, but also about the election. And, of course, we have the outcome of the elections the first week of June. This expiry will happen before that. So a lot of factors to bear in mind. And perhaps down the line and over the course of the next few days, we will also try and get you election bets that you can place as far as the option market's concerned. But moving on, Rahul, I believe you have IDFC in focus on your radar. What are you doing with that?
So the last week around we had M&M, and even though markets fell about 500 points, you notice M&M moved towards the upside. This week IDFC with slightly a conditional buy, where over 115 is where we're expecting some bullishness. Why are we expecting bullishness? Because there are two buy levels at 112 and at 106 respectively. So once prices cross 112, what we could do is we could initiate a long collar where we buy futures. Now futures is, when taken in isolation, is a very risky asset class. So we hedge that futures by buying a put, that is the 115 put we would be buying, and simultaneously we will be selling the 118 call. What this would do is this would keep the strategy protected on absolutely all directions. The risk is slightly higher over here because we're dealing with futures. So 5,000 rupees is the risk. The reward is double of that. And preferably, what I would suggest is you go with the May expiry legs if the strategy triggers before 20th of May. But after 20th of May, if the strategy triggers, it's better to go with the June legs rather than the May legs, assuming there's sufficient liquidity in them.
All right. There you have it. That's a long caller as far as IDFC is concerned. On that note, taking a moment, Rahul, for thanking you and joining us with your views on the markets. And with that, it's back to you, Neeraj.
Well, thanks a lot for that, Agam. Certainly watching out for these strategies. And, just the way this was taken through, it is a complex strategy, but with the clarification that it's May, and the fact that, keep in mind that it's also a month which will get impacted not just by normal market action, but also by results. So all of this to be kept in mind. But it's a day or it's a week wherein result reactions are center stage. And let's talk about some of those with Sunny Agarwal, Head of Fundamental Equity Research at SBI Cap Securities. He joins us right now on the show. In a bit, we'll get in Ajay Srivastava for a special conversation on the turnout and the political impact as well. But Sunny, I want to start off by talking about the results as they are coming in thick and fast. At some point of time, we'll talk about Bharat Forge as well. But I want to start off by talking about Larsen & Toubro. What did you make of not just the numbers, but the fact that they have guided to lower order inflows? But you could argue that maybe that was anticipated because of the election season.
Yeah, good morning, Neeraj. I think a decent set of number from Larsen & Toubro backed by the robust order book. Yes, I agree. Order inflow guidance is slightly muted, and that was slightly expected also because of this election. At the same time, the guidance on core operating margin, which is likely to remain flat for FY25, so that is slightly below expectation. So Street was expecting that FY25 we may see some margin expansion also. But having said that, when we do some of the parts wherein the core business and including all the subsidiaries value, what we find is that the fair value of the business of Larsen & Toubro is close to 3,700, 3,800 band. So kind of 8 to 10% upside maybe one can expect in terms of stock price. So after a very robust performance during Q4 and FY24 on a high base, I think it's a time for consolidation as far as stock is concerned for maybe a quarter or two for Larsen & Toubro.
Consolidation on L&T is what Sunny believes could be par for the course over the next couple of quarters. Sunny, Hero versus TVS, either of them or none of them?
So I would like to go ahead with Hero MotoCorp. The reason being that the valuations are relatively cheap, and we have seen a very robust delivery on all the front from Hero MotoCorp. And especially the mass segment is where the Hero MotoCorp has always had leadership. And there they are witnessing a green shoot, a healthy volume outlook. So if you go through the con call, April month has been very robust for Hero MotoCorp, and even management has sounded out that May and June will also looks very pretty robust in terms of volume growth outlook. So our fair value for Hero MotoCorp is close to 5,500 rupees over the period of next 6 to 12 months. TVS Motor, again, they have delivered a very robust set of numbers where we have seen again margin above double-digit margin consistently in TVS Motor also. But in terms of valuation on a relative basis, I think Hero MotoCorp is a better bet at a current juncture.
Hero MotoCorp, and that seems to be unanimous from the big brokerages to, of course, Sher Khan that we spoke to, and now Sunny, who all believe that Hero MotoCorp is a relatively better pick as compared to TVS. Shrikant Chauhan of Kotak Securities joins in. Shrikant, I'll start with the same question to you. Technically, Hero versus TVS, what would you buy this morning if you would buy either?
Good morning, everyone. I think, see, like from the two-wheeler basket, we prefer actually Bajaj Auto because there we are seeing a good amount of strength. But if we just go through with these two stocks, then in that particular space, I would like to go with Hero Motors because this time Hero Motors is much better placed. It has shown spectacular rally from the levels of 3,000 to almost 4,900, 5,000 levels without any meaningful correction. And after that, we saw correction of at least 1.5 months. So broadly, we are of the view that the corrective pattern is over and stock is like now placed to move higher from here. We can see the levels of at least 4,800 or 4,900 in next few days. So Hero Motor looks really good. We should look for adding these stocks with a stop loss close to 4,400.
Okay. So watch out for Hero as well. Amongst other things, so watch out for some of the result reactions as we've stated. And very likely that Tata Power could be in focus today after the fourth quarter numbers because most brokerages are not as constructive post the numbers, but it did beat street estimates. Mega, tell us what stood out from the Tata Power results.
Yes. So it was a profit beat. Net profit was up 11.4%. However, it is key to note that while revenue and EBITDA did see a growth, they did miss the Bloomberg estimates. And margins were estimated to be at 17%, which was a growth compared to the year ago numbers. However, it was 14.7% for this quarter. Now, in terms of segment-wise revenue, it was the generation business that drove the growth. Revenue was up 70% year on year in Q4. And transmission and renewables was up 8.8 and 35% respectively. One of the key growth parameters for the company was their solar segment. Now the utility scale EPC order book is at 13,385 and the company's won orders of 100 megawatts, which is worth 470 crores during the quarter. Now 47% of this order book is from the Tata Group, Tata Power Group companies, while 25% is from SJVN and 7.5% is from NTPC. Now the solar segment, which is the rooftop segment, now they won orders of 286 megawatts of solar rooftops, and the third-party rooftop order book is now at 772 crores, which was just about 100 crores a year ago, and the company is set to benefit from the government's rooftop project. And lastly, was a key highlight was their solar cell and module plant. Now they have a 4.3 gigawatt solar cell and module manufacturing plant, which did start commercial production in Q4 and produced 1,300 megawatt modules in Q4.
Okay, thanks Mihika, thanks for that. Sunny, come in on this one. It could have been a beat relative to Bloomberg estimates, but most notes that have come out this morning have not been too constructive on Tata Power. What is your assessment? Sunny, this is for you.
Yeah, so I think too many moving parts as far as Tata Power is concerned. So I think the results although are below the street expectation, what I feel is that if somebody has got a long-term view on the company, if you see the portfolio mix is gradually shifting towards the renewable energy part. So right now thermal energy contributes close to 60% of the portfolio, and gradually you will see this once all the expansion plans are in place. I think renewable energy portfolio part contribution will increase in the overall pie of the business. I think maybe short-term, maybe kind of muted reaction we can expect after a robust rally in Tata Power. And let's see, I think the power story in India is still intact. So we have seen a robust power demand in terms of consumption, and that is the reason we still continue to remain constructive on the entire power space. And Tata Power is one of the leading player in that. So maybe in terms of stock price, maybe we may see some sideways consolidation, but in medium to long term, I think the growth story is still intact as far as Tata Power is concerned.
Okay, well, that's on results, and more results will continue, but do a quick segue into what the market mood has been recently because of the lower voter turnout as well, and some volatility as a result of that. Ajay Srivastava, MD of Dimensions Consulting, joins us right now for a quick perspective there. Ajay, good having you. Thanks for taking the time out.
Good morning, Neeraj.
Very good morning to you. Is this volatility warranted and justified, and do you think it lasts at least until the results are out of the way? The election results, that is?
I think, first of all, the volatility is very good for the market. It was a very healthy sign for the market, because a one-way movement either ways is bad news. Either you become a genius at selecting stocks, or you become a dud at selecting anything good also. So I think volatility does two things to you. One is like a speed breaker. Tells the market, slow down, reevaluate what you want to buy into or what you want to sell, and move on with life. You can't have a trajectory running across it. Number two is, I think it's, elections, you hear, I just come back yesterday, there are lots of different versions coming out of the market as to whether, it's an election issue, or is it the fact that the valuations are too high? Is it a fact that people are booking profit? But generally speaking, across the board, I think what's happening is that most of the PE funds and the foreign investors who invested last 3 to 5 years, all of them want to take money off the table at these valuations. You can't argue. The valuations are very high in the market, and the results have to be extraordinarily justified. So to that extent, I think volatility will continue. Some sectors which continue to grow will perform better. Other sectors which have been laggards, so to say, I think will struggle in this year to get any decent return out of them.
Okay. Ajay, the larger construct, I would just love to understand, if you were constructive on India, say a month ago, would you use the volatility, and if there is a downward bias, to accumulate some quality names or some earnings-based names, or how have you? Or would you not?
Yeah. See, I think the question is, are you in those sectors? One of the key performing sectors, like Neeraj, for instance, has been the capital market related sectors.
Right.
Whether it's a stock exchange, whether it's a depository, whether it is the exchanges, I think and whether it's the AMC, if you look at the composite set of sectors affecting retail investment in this country, that's been a significant re-rating in the last 6 to 9 months. And if you got left out, I think it's a good idea to go in and buy at every correction if you get a correction. The results are very good. So the whole sector of retail capital market stories is coming together very nicely in the market, and it should give you annuity income, and it should give you a lot of growth, leeway to growth in the next 1 to 2 years. That segment is fine. The trouble is coming from a different part. Trouble is coming from the consumption sector. And I think that's a sector you would not want to bet on, because given the inflation rate, given what we see in the market, I think the food consumption and the discretionary consumption item, they are at stake. What is wonderful in the market is the duopolies. Now, it is bad for the economy, bad for the consumers. But if you see any correction in the market, there are certain sectors like telecom, airlines, where literally there's a duopoly. And if you've got left out, I think it's a good idea to go buy. So as I said, where earning trajectory is good, and I think you should go buy. If you have a correction in a multiplex stock, obviously don't go buy the stock. But if you have a correction in airline stock, I would certainly recommend that you go buy the stock.
Ajay, from a portfolio standpoint, what would you do at this stage? You said that the markets do look expensive. There haven't been too many major positive surprises in terms of earnings. There's also a little bit of a lack of fresh triggers in that sense, and you have a little bit of uncertainty around the earnings. Would you take a cash call at this stage? Expensive markets, fair for investors to take some profit off the table, maybe sit on 10-15% cash and re-enter the markets once a lot of this is behind us. Is that a fair way to look at it, or would you say fully invested if you're not an FII?
I wish I could predict the market, but one thing I know for sure, that if you've not taken profits and enjoyed your life, I think you're going to miss out a lot. This, I don't know till what time you do keep on going. So my recommendation always to everybody I meet across the board is, guys, you need to enjoy the life, enjoy the profit, and put the money in the bank. Very clearly, you're right, absolutely. Put some money in the bank and use the money, buy things which you never thought you wanted to buy absolutely useless gadgets if you have to buy that, go for a holiday you want to do. So I think profit booking should be intrinsic. For every stock, there's a trajectory, and after that, it stops. You've seen what happens to Reliance, you've seen what happens to L&T, etc., etc. Even the mid-cap stories are now edging out at the point of time. There's a plateauing out. So it's not that you're going to get exponential returns. So profit booking, answer is yes. Do you need to shift your portfolio? Answer is yes. Do you need to sell out some stocks? Answer is yes. Absolutely need to get out and go to somewhere where relatively you get a better return in a better market. And whether the price goes up or down later on, I can't predict. But what I know for sure is that the life that you lose by not spending money on yourself will not come back to you. So a little philosophical, nothing to do with market, but to say, spend money on yourself if you've made money, rather than wait for something else to happen. And neither the money will be there, neither age will be on your side.
Life is short, and I think Neeraj wanted to comment on that. He almost had a heaved a sigh of relief. So
No, I'm just saying that these days we are hearing a lot, right? Buffett saying that think of the person that you want to spend your last day with and go and meet that person.
Why so dark?
Ajay is saying that hey, go out and enjoy the money. So we're seeing a lot of that these days.
Yeah, well, people are going and buying homes, or they're not buying homes. It's anybody's guess. But yeah, go shopping.
Ajay is traveling.
Ajay is traveling. Okay, so it's all about lifestyle. That's what we're going to spend all our money on. Neeraj is just back from the US, so we know where he's spending all the money.
I told you guys are rich guys.
No, not you guys. It's you guy, and the girl is not rich. But we take.
Sorry. Oh my God. That's a faux pas.
No, I'm kidding. We'll take a break. Ajay, stay with us. We'll come right back. And of course, pick your brains on what traders should be doing and investors should be buying.
Presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Back with India Market Open right here on NDTV Profit. The implied open should come up on your screen and we'll have a flattish to marginally lower start. Maybe at least that's what it was showing half an hour ago. Now flattish. In light of this, Shrikant Chauhan, what would your index strategy be and what are your stock calls for the day today?
Yeah, good morning, Neeraj.
Very good morning.
See, for Nifty, it is into corrective mode. It was into uptrend up to 22,800. From there, all the way, we are seeing gradual decline in the market. And based on its technical pattern, it is somewhere close to 22,200, 22,300 levels. But from here, if we see the next levels, then 100-day simple moving average, it's somewhere close to 22,000, 22,050 levels. I am of the view that it's a corrective pattern, and in case if we see the market is dropping to 22,000 or 22,050 levels, then there we should look for taking contra bet of going long in the market. I am expecting market to again rebound to the levels of 22,600 or 650 in the near term. Crossing 22,800 will compel foreign institutions to cover their short positions. So FIs are heavily short in the market. In fact, they are increasing their short positions since last 3 days. And most of the time in the last few months, if we see the trend, then whenever they have increased their short positions, they got caught on the wrong side. This time also it's a corrective pattern, and I am of the view that eventually the market will surpass the level of 22,800. But with a very short-term view, with a view of intraday, I think we should look for adding positions somewhere close to 22,050, 22,100 levels.
What about stock ideas, Shrikant?
Okay, yeah. In that, I would like to go with State Bank of India as well as
ahead of the results.
Yes, and it is showing some strength. It is relatively outperforming to the entire other PSU banks. In fact, yesterday there was a smart recovery from the lower levels, and from current levels, the stock can move to the levels of at least 835, 840, which was its previous high. If we see the entire pattern of the stock, then I'm of the view that eventually the stock is heading for the levels of 1,000. But with a very short-term view, buy with a stop loss at 790, keep a target of 835. We also like Infosys. The reason is because we are seeing some global macros are turning positive for emerging markets, especially bond yield, dollar index. They have fallen from their highs. If we see the chart of this particular instruments, then there they are forming some lower top formations, which is negative. I'm to say, then in that case, we can expect some strength. I'm to say weakness in the bond yield from the highs, and we can also expect some weakness for dollar index more. I think that will help IT companies. Infosys looks very strong to buy at current levels with a target of 1470, and we can keep a stop loss at 1410 for the same.
Okay, so interestingly, SBI is a buy from Shrikant ahead of the results, and Infosys is interesting, and we'll get my colleague Harsh in moments from now to talk about the brokerage views, because why I say Infosys is interesting is because as per Jeffrey's note, Infosys is the only one on their list which is a buy call. I don't know what Sunny thinks about it, but as per Jeffrey's, Infosys is the only buy call. Then of course separately there is CLSF, which has come out with a note on IT space and talking about some stocks which Harsh will highlight. Harsh will also highlight, I believe, the Nomura note on defense. So we'll get him in moments from now. But just before we do that, Sunny, come in on this. IT is interesting. What is your favorite here and why? And you may very well not want to buy any of the IT names. I'm just trying to understand.
Yeah, I think, Neeraj, if we look at IT companies, then the way guidance has been doled out by the management, I think a quarter or two, I think there is still uncertainty in terms of growth, discretionary demand. However, having said that, in terms of valuation, definitely there is an comfort which is emerging on a relative basis in a large cap IT pack. Here, but our topic will be Tech Mahindra, where we see that FY25 is a year where we may see a turnaround performance from Tech Mahindra. So on a relative basis, Tech Mahindra is our topic, and my second in line will be TCS, where again I find on a relative basis their commentary was much better than other large cap IT peers. So we are suggesting Tech Mahindra and TCS among the large cap IT peers, and in the mid size we are recommending KPIT. So very strong set of number from KPIT, and at the same time outlook continue to remain very robust. Although on valuation front is slightly expensive, but looking at earning growth, I think the premium valuation is something which KPIT will continue to sustain.
Well, yeah, and stronger commentary from that one for sure out there. But speaking of IT, like I said, there is, I believe, a brokerage note that has come in amongst a slew of other brokerage notes, and Harsh highlights amongst the top one or two notes. And Harsh, if you have a note which is on IT, let's start with that and then something else.
Well, there's a CLSA note on IT, Neeraj. In fact, they've spoken about all IT players. They've reduced the target price on TCS a wee bit. They've continued to believe that Tech Mahindra is their top pick. But what they've done in a key change is they've hiked the rating on HCL Tech from an outperform to a buy. What they're suggesting is that valuations have come off, and this correction could well be a good buying opportunity in HCL Tech. They believe that there are multiple structural positives over the next 4 to 5 years, and they've taken those steps in the last 3 to 4 years, which should play out going forward. The macro outlook and cost optimization in the current environment seems to favor HCL Tech, they believe, and it's the most stable management, and therefore order wins will continue to be quite solid according to them. In terms of the valuations, of course, the cool off in valuations helps. The target price they've given is 1524, which is a 16% upside from here. But what they're also suggesting is the 4% dividend yield along with the 16% upside gives it a 20% 12-month kind of a return, which is quite solid. That's the one that they highlight. The other one is Nomura. They've initiated coverage on both BEL as well as HAL and the whole defense pack. In fact, they believe has positive tailwind. Specifically on HAL, 28% upside from here. They believe that the re-rating in terms of value will continue to happen. They expect revenue to grow at 14% over FY23 to 26, EBITDA at 11% and PAT at 23% over these 3 to 4 years. So very strong PAT growth is what they're already penciling in. In fact, PAT will double is what they are really penciling. Very similar for BEL, very similar kind of commentary. Very strong return ratios. They believe will continue to justify the premium valuations. 32% upside is what they ascribe to BEL. So 300 being the target price. They believe that the order backlog is quite strong. The opportunity is quite large, and they're forecasting ROEs to go from the sub 24% mark to almost 28% over the next 3 years. So again, extremely strong with regard to profitability and ROEs.
Right, that's a pre-open tick on BEL. That's what we're getting in. Sunny, you want to come on defense? I'll get Shrikant's view on the charts, but BEL, Mazgaon Docks, HAL, BDL, the list is extensive. All these counters were the theme running up to elections, and of course now there are reports from Nomura as well. How would you approach this sector, and do you feel like there's any opportunity value over here to pick up?
Yeah, definitely. We are positive on a defense as a sector, and the kind of order book on which these companies are sitting on. I think at least next 2 years seems to be very robust in terms of earning growth. But within defense, we find more value on the shipping side. So companies like Mazgaon Dock and Cochin, GRAC. So these are the three counter where we find valuations are relatively cheaper as compared to other peers. At the same time, the execution of the order book is likely to be very robust over the period of next 2 to 3 years. So I think here my topic will be Mazgaon Dock from a shipping front. On aerospace side, I think HAL, no doubt, HAL has been doing very well on aerospace side. Even smaller peers like Premier Explosive, which are kind of ancillary to the defense. These are the few data patterns. So these are the few companies, Paras Defense. Again, they will be a natural beneficiary of robust order book execution by the larger OEM player. So I think even these guys looks attractive from a medium to long term perspective.
Right. Shrikant, on the charts, after a few days, HAL is seeing a little bit of an uptick. BDL also is showing a flat to slightly higher start, and so are some of those Cochin shipyards and Garden Reach. Anything for today, for the month of May, would you buy on a trading pump for some of these defense names, on any of these defense names?
Yeah, from the defense space, we like Hindustan Aeronautics based on its technical balance, because whenever the stock has fallen, it has formed always a higher bottom as compared to its previous swing lowest level. This time also, when there was like correcting activity in the stock from the highs of almost 4,000 to 3,700, we saw a good amount of recovery in yesterday's trading session. In fact, it has formed a bullish engulf pattern, which indicates that there was specific buying interest in yesterday's session for the stock. We are of the view that it is heading for at least 4,400, 4,500 in next few weeks. It will take some time, but with a very short-term view, I think this 3,600, 3,500 is going to act as major support for the stock. In case if there is any correction because of any reason, because the markets are volatile, then I think we should look for adding HL to the positional portfolio.
Okay, now some stocks post pre-open session. Manappuram and Muthoot, both of them have started off lower. So while they corrected about a couple of percentage points yesterday, I think if you look at what's happening right now, 4.5% down for Manappuram and Muthoot Finance down about 5%. So that's the first set of stocks. Then you look at result reactions, and SKF, with that margin expansion that they've shown and the performance that they've shown, the stock is up 11%, highest ever margin and sales in the last 13 quarters. And just for comparison, SKF EBITDA was up 28%, while Schaeffler was up 5%. SKF PAT 42%, Schaeffler PAT was flat. So no surprise that SKF is showing what it is showing. Bearing stock, Sunny Agarwal and SKF in particular with what it has done, but it's up 11% already. Would you buy it?
Yeah, I think Neeraj, after 1 year of kind of muted earning growth, I think fourth quarter is the quarter where we have seen a very strong commentary and earning growth from both the bearing players, whether it is Schaeffler and SKF. Definitely, I will be buyer in both the names, both Schaeffler as well as SKF. The logic is very simple. All the end user segment, whether it is industrial or automotive, they are doing well, and I think earning growth is something which we will continue to see over here. Although in terms of valuation, both the stock may look expensive, but again, I would be buyer in both the name from a medium to long term perspective.
Okay, watch out for these. By the way, Tata Power is starting off soft. Like we said that some of the brokerage is not very constructive on the stock. And I think it's about 1.5% lower. A quick thought out here, Shrikant Chauhan, on Tata Power. Is there a trade here?
I think the stock is under some profit-taking pressure. It is finding difficulties to sustain whenever it is moving towards 440, 450 levels. But at the same time, around 400 levels, the stock is having excellent support. So in case if we see any further more weakness in today's date, I think there we should look for adding positions. It is currently at in-between levels. So let it fall to the crucial levels. I think close to 400 levels, it looks really compelling way to buy and hold.
Right, that is the Tata Power trade that we're talking about. But in the meantime, it's looking bad for some of these mid-cap names that will see a sharp downtick in trade. So Piramal being one of them. Earnings were a disappointment. The stock should get a hit. Tata Power, CLSA has called it a weak quarter, and they've said that the quality of results remains challenging with a one-off dividend which has supported PAT. That's probably why the number on the face of it didn't look bad, but the stock reaction, of course, down about 2%. Very quickly, Shrikant, we only have about a minute and a half, so you have 40 seconds to go. One top stock to trade this morning.
Yeah, I would like to go with State Bank of India. The reason is because it is relatively outperforming and it is still very above its important levels of 790, 795. So here we are expecting further more activity, and in the long run also we are expecting this stock to do well. State Bank are at current levels, buy with a stop loss somewhere close to 790.
Well, watch out, and SBI is amongst Shrikant Chauhan's top trades as well. The other one, Kirloskar Oil Engines or Godrej Agrovet should come up on your screen. I wonder if the pre-open rates have shown a material uptick or otherwise. 8% for Kirloskar Oil, so that is doing okay. And L&T should come up on your screen, and I wonder if that order inflow or disappointment is so stark. Well, we just have 30 seconds. Can't take a question with Sunny, but maybe can take this question with Shrikant. Shrikant, maybe we revisited L&T already, but this 5% downtick. Very quickly, 20-second answer. What would you do with L&T on open?
I think it is better to stay away from taking any long positions at current levels. Let it fall to the levels of at least 3,000, 3,050, where the stock is having excellent support in terms of technicals, as well as our fundamental fair value is also close to 3,000 levels. So at these levels, it is better to stay away.
Okay, this level better to stay away. And by the way, viewers, keep in mind something that we spoke about, both me and Samina, on the trade setup, that this might well have a cloud on some of the other construction infra names, because people might just say, let's wait for the time being. The long term is good, but the next 1.5 months, why be in a hurry to get into some of the construction names? Let the dust settle. Watch out for the implied impact on some of the other stocks. But here are the first rates. And will L&T have a bearing on the Nifty? Maybe it would. Let's get the rates going in a moment from now, the contribution. But Nifty down, Bank Nifty should come up on your screen. Yesterday was okay, today too okay, by the way. The Nifty, Bank Nifty recovered a little bit yesterday and is today marginally in the green. Mid caps and small caps did very well yesterday, flattish in the session right now, but relative to the index, the small caps about 0.3% outperformance, if you will. Let's get the heat map. L&T is right here, 5.5% lower. Asian Paints ahead of the numbers is down about 0.5%. So bear this in mind as well. There is weakness in Tech Mahindra and Tata Consumer as well in the session today, as is Eicher Motors looking slightly wobbly. But it's L&T which is the key draw on the downside, along with maybe an Eicher and an Asian Paints. On the gaining side though, and a lot of green on the screen, by the way, even if the index is flat, HCL Tech top gainer with the CLSA upgrade there. Bajaj Auto follows up, M&M follows up, Hero follows up. So autos had a strong day yesterday and autos have a strong day today. SBI ahead of the results is up about 0.5%. Shrikant has a long call there. There is Adani Enterprises in the green, there is Bharti in the green, there is NTPC in the green. But frankly, on the index, Samina, maybe autos as a pack on the upside and L&T as a stock on the downside are the only ones which are kind of standing out in trade in the large caps at least.
And I don't think across the broader markets there's nothing standing out except for SKF, which we'll talk to you about in a minute. But broader markets is also what you want to keep a very close eye out on, largely because that was a space that has been seeing some traction. And in yesterday's trade as well, while the benchmark didn't do much, it was the broader markets that outperformed. And as you see it, the Nifty mid-cap trading with a slight positive bias. It is a small in the micro-cap stocks That, remember, is where you see a lot more action. Let's pull up a couple of those stocks that are going to be impacted and reacting to news flow. Manappuram and Muthoot, both of them on our radar this morning. The RBI has a written advisory note to few gold loan NBFCs, where they've asked the NBFC to not exceed cash disbursement limit, and that means both these counters that have been doing quite well recently are taking it to the chin. Muthoot is down 8% and Manappuram is down about 6%. Bank of Baroda, let's pull that one up and see what it's getting up to. It's a very good move, 3.5% higher this morning as the RBI's lift curbs on Bank of Baroda's Bob World app. Restrictions were lifted with immediate effect, and the bank will resume onboarding new customers to the Bob World app. In the times when the regulator is cracking the whip on banks on back of their tech, this is good news coming for Bank of Baroda, and the stock doing exactly what it should, is reacting positively, 3.5% higher on Bank of Baroda. BSC, I want to pull that one up. Earnings operationally look good, but they had to take that hit of about 169 crores on back of the provision being made on back of new norms. Markets are choosing to look beyond that, like we said to you. They're viewing it as a glass half empty, only because the stock has already corrected and it's in the price from the way you see it. BSC reacting well, up 2% in trade this morning on back of operational good performance. Kirloskar Oil beat on that, and we called this out this morning with the stock would be doing quite well. Kirloskar, SKF both looking good on back of good earnings. Kirloskar up 11%, SKF also on back of that. Revenue up 10%, margins are massively up about 250 basis points, and profits are up about 42%. Godrej Agrovet and GSPL, if we pull those one up, earnings reaction flat so far, but this could become very well trades of the day, where you see a flat start, but the margin was so solid that you may see some buying coming in over the next couple of hours of trade. Below estimate, you had Kalpataru Projects, Bajaj Consumer and Piramal Enterprise. Numbers there were a huge disappointment. Bajaj is down 4%, Piramal is down 6%, Kalpataru is down about 1.5%. So this morning is about earnings and notifications from the RBI, Neeraj, and I think that's what's going to keep us busy.
Certainly, and you're right. On the NSE 500, by the way, the top two losers are Muthoot and Manappuram Finance. And then Piramal is a close third, L&T is the fourth. So in some sense, it's all about news flow. And Westlife continues falling from yesterday's session. By the way, Tata Power is also down about 2.5% in trade. So that's the clutch of names that stand out. Opening thoughts from our experts. Srikanth, I'll first come to you. Anything that stands out? And a word on Manappuram and Muthoot. 2% down yesterday, 6% down today. Then I'll take a fundamental view on the same with Sunny, but first, the technicals.
Yeah, Neeraj, if we go through with Muthoot Finance and Manappuram, then both these stocks are like, I'm going to say, into complex pattern. It is very difficult to like forecast anything like how they are forming and which type of formation they are forming. So broadly, we are of the view that it is like better to stay away from taking any positions because they are into news flow, and because of that, I think the stock is volatile over and above. But yes, if we just go through with the long-term pattern, then close to 160, the stock is having excellent support for Manappuram. If we just go through with other stocks in the today's market, then in that, as you mentioned, auto stocks are really doing well. In that, Hero Motors has crossed its technical resistance level. Based on its formation, it is heading for the levels of at least 4,900 in the near term. So even at current levels, it looks attractive to buy and hold with a stop loss close to 4,600.
Wow. Look at Hero. It's actually the hero of trade this morning.
And so is TVS, 4%.
Stunning moves for the two-wheeler companies for sure. The TVS should come up on your screen, up 4%. But like we said, so those two are doing well, Manappuram, Muthoot aren't. Sunny, since I mentioned that, let me quickly take that Manappuram, Muthoot question to you. If indeed this news flow as it has come is verified, are the stock prices baking in the negatives already, or could there be more downsides?
I think, Neeraj, all the negativity is already in the stock price. We have to keep in mind that post-COVID, most of the guys have shifted towards digital lending and digital collection mechanism. I think the tightening of regulation by RBI may impact the smaller player more rather than large players like Manappuram and Muthoot. And at the same time, the requirement to maintain LTV ratio at 75%, I think it's a minor impact we may see on Mannapuram and Muthoot, but I think negativity is already in the price. I would be buyer at in the current deep in my medium to long term portfolio.
Shrikant, what are you buying right now? I mean, look at TVS, 4% higher. It's only going from strength to strength. And also Hero is up 4%. Intraday, would you go long on these stocks the next couple of hours? More gains expected?
See, for TCS, it is still very close to its important resistance level. So it is very difficult to make out that whether the stock will cross its crucial resistance level where it found good amount of selling pressure or not. So 2150 is the crucial level. If it breaks that, then only we can expect further more bullishness. But currently it is already up 4.5%. So it is better to stay away. But for Hero Motors, it is crossing its important level. It is sustaining above the same. And the entire pattern is suggesting us that it is going to outperform in next 2 to 3 months of time. So Hero Motor looks really strong bid to buy and hold. But again, if we just go through with other some stocks, then in that Hindustan Aeronautics, that has crossed its previous high. Mahindra and Mahindra, which is surprisingly crossing its previous highs. And whenever there is a correction, we are seeing good amount of buying attraction. So I think Mahindra and Mahindra should also be on the watch list. It is heading for the levels of at least 2500.
Tata Motors looks like it could do a sweet little pullback today after declining for the last, for most part of this week actually.
Yeah, technically it is forming some consolidation formation since last 3 months. It is not crossing the level of 1050, 1060 convincingly, but at the same time, it is finding support whenever there is a correction in the stock, somewhere close to 970, 980. Based on its technical formation, I think it is heading for the levels of at least 1200, 1250 in next maybe few weeks. So it is not going to take much time, but yes, in next few weeks, we can see the levels of 1200. That's the overall view based on its technical pattern. And stop loss is somewhere close to 970, 980, which is very nearby. So it's a great risk reward ratio to buy and hold with a view of next few weeks.
Okay, you know, the L&T impact is being felt on others as well. BHEL, for example, is also down about a couple of percentage points. So watch out for that one. Sunny, for somebody who is a long-term investor in these companies, L&T in particular, but maybe even a BHEL, maybe some of the others, is this weakness an opportunity, or would you stay on the sidelines for the time being? Because there's no compulsion to buy an L&T. I mean, you can buy it after a month, month and a half, once the election season is over as well.
All these are quality companies, but again, in terms of strategy, one can follow a staggered buying strategy wherein one can do a gradual accumulation over the period of next 2 to 3 months. Because I think now maybe for till the time first quarter numbers are out, or any significant large orders are coming in for L&T, which will exceed its order inflow guidance. I think the stock will continue to witness a time-wise correction. So I think buying on deep in a staggered manner is the right way to add names like L&T in a long-term portfolio.
L&T in the long-term portfolio, and currently what we're seeing on the stock could be an opportunity to buy. We will of course get some more analysis on those numbers at 9:50, so we will get some perspective build going for that too. Apart from that, the markets doing what they do best is seeing some wild swings on a few counters, but other than that, the breadth is not too bad just yet. If I can pull up RVNL and NBCC, both of them had pretty solid order wins. Let's see if the stocks reacted to that. Nothing much, 0.5% on RVNL. NBCC is trading with a 1% gain. Manapur and Muthoot are not looking good, and that's what's probably freaking out the market just a little bit. Anything in pharma that, or pharma or IT, Shrikant, that you're identifying for a trade today?
See, for pharma companies, I'm expecting some furthermore weakness in the near term because most of these stocks are very close to their crucial levels. I'm going to say resistance level, and from there they are correcting back to their important levels. But the most underperforming stock, Biocon, is now started doing well. It is like consistently forming higher top, higher bottom formation, and even though it is into ban period, I'm just saying the ban segment of the FNO, it is consistently finding support whenever there is a correction in the stock. I think based on its technical formation, it is heading for the levels of at least 330, 335 in next few days or few weeks. So again, it's a positional buy. But based on its technical formation, I think something is really happening solid strong for the stock, and based on it is heading upward. So Biocon looks really a convincing bet to buy and hold. From the IT pick, as I mentioned, we like Infosys. We also like Tech Mahindra because there also we are seeing good amount of buying support whenever there is a correction in the stock. So 1250, 1240 should act as very good support. After the result, it opened up with a gap, and that gap is still the stock is holding. So based on its technical formation, I think it is something which is going to do well, but it will take some time. So it's a positional buy, but Infosys looks strong bet with a very short term as well as medium term view.
Okay, gentlemen, we leave it at that. Thanks so much for taking the time out and being with us and giving us your thoughts. Really appreciate your time.
Thank you.
It's time for a short break. On the other side, we get you earnings conversations, Canara Bank's management about the quarter gone by, followed by the management of JSW Energy. Stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to
Hello and welcome to NDTV Profit. I'm Mimansa Verma, and today was the day when Canara Bank released its earnings, quarterly Q4 earnings, wherein the bank reported an 18.3% rise in its standalone net profit to rupees 3,757 crore. Now, this was on account of increased net interest income or core income and a drawdown in provisions. On a sequential basis, the net profit of the bank grew 2.7%. I'm in conversation with Mr. K. Satyanarayana Raju, who is the MD and CEO of Canara Bank, to discuss the quarterly numbers and break down the numbers to discuss. Welcome, sir, and thank you for taking out time to speak with us. So my first question is about the provisions, because of which largely why the net profit has risen so much. The provisions have declined 20% year on year. However, on the sequential basis, the provisions increased by 30.7%. Now, what could be the reason for the sequential rise in provisions, sir?
The sequential rise in provisions is generally in the December quarter. You know that we have provided for our staff cost to meet that requirement of the bipartite settlement. We have provided almost 700 crores in the operating expenses, staff cost. But that's why we could not provide additional. Generally, whenever we have comfort in our balance sheet, we provide additionally to make it a future-ready balance sheet. We do additional provisioning beyond the requirement of the regulator. When we got a comfort in the current quarter, so we instead of 750, we required to provide only 350 crores in the staff cost to complete that wage revision payments. And the remaining whatever excess we got it, we have provided as an additional cushion in meeting the requirements of beyond the regulator requirements in one or two big accounts, so that in future any eventuality that can be used for the matching that requirement. That is the purpose. Otherwise, nothing. There are no concerns in the slippages, and there are no concerns in the stress or anything. Let me clarify to you that our SMA 012 is sequentially as well as year on year it has come down. The sequentially, if you see that it has come down from 0.80 to 0.69%. Even year on year, if you see that it has come down from 0.76 to 0.69. You can find out even each SMA 0, SMA 1, SMA 2, there is a reduction both in the accounts and the amount. That is helping, that is giving a confidence for us, and the next year, the current 4 quarters, we will continue that what the last year we maintained that our slippages will be less than our recovery and upgradation. If you see that the March month also, our recovery and upgradation total together it is 3,680 crores, whereas the slippages are only 3,400 crores. And we continue to do every quarter like that. When we have a cushion in our balance sheet in the bottom line, we want to provide additionally. So that additional provisions, so it will be useful for the future. Any unexpected events are there that will take care of that. This quarter also we have provided 300 crores additionally in certain NPA accounts where it is beyond the requirement of the regulator.
Okay. So 300 crores is what you have set aside for some particular large accounts, is it? If you could give us a sense of which sector accounts are these accounts are from?
See, actually last year only one big account has slipped to NPA. We provided in that account, but sharing the name of the borrower is not correct from my side.
Okay, no problem.
But it's only one account it is slipped, and that account only we made that additional provision.
Okay, no problem, sir. So your credit growth and deposit growth both has risen 11% year on year in Q4, which is more than the guidance that you had provided in the last quarter. And on the media briefing call as well, after the results, you had said that you are conservative in the guidance that you give for the next quarter. Is there any specific reason for that, and what is your growth targets for this year?
You see that historically last 3-4 years, this bank follows the same board on the board along with the top management. Then when we express to the guidance, we give little conservatively the guidance, but we don't want to miss that guidance when we give something. We want to be as realistic as possible, but our performance always, if you see that we are outperforming our guidelines. The last year also we are given guidance at 10%, though we are rejigging our corporate portfolio with replacing with low cost or low yielding advances with high yielding advances. Even then we could show 11.34% credit growth. This year also, why we are given the conservatively, it is not that we are expecting some slump in the credit demand or thing. We know that the credit demand is there, and we are the banker, we are getting it constant proposals, especially even in the corporate also. You see that our RAM has grown at 13.54%, and we are focusing more on the RAM because we have given our guidelines also that we want to reach 58% RAM so that our corporate will reduce it to 42%. And last year it has increased from 55 to 56%. So there where we focus, there the growth is there around 14%. So where we want intentionally, we want to come down because our, you know that our CASA is comparatively other banks among the peer banks, our CASA is low. So we have to manage our NIMs. Our portfolio, we have to rejig it properly. We cannot afford to lend at a cheaper cost just for the sake of top line. So we are very calculative on that mind. That's why that the corporate is a little bit slow growth. We have shown that it is only 8.64%. But next year also, again, we are telling that demand is there because our TAT is our selling point. double-digit growth we will see in the corporate also, and minimum 12% credit growth will be there, though we are given at 10%.
Okay. So your strategy going forward will be more like the lower rate loans will be curbed and you'll be charging more interest for the new customers, is it?
Because, madam, actually, if you see that the last 6 months, the incremental deposit cost is very high. Especially in the March also, it has reached to the peak. Though our cost of deposit is at 5.5, if you see that incremental deposit, whatever we are garnering it at the last 6 months, it's very high cost. It's almost 6.75 to 7%. That is the range. At that range, raising the loans and maintaining the existing lending of 60-70,000 crores at a 6.9 to 7.15% is not at all feasible for us. But at the same time, we cannot replenish entire 70,000 crores with high yielding advances. So we have to see the quality of the advances also. That's why gradually we are negotiating with those borrowers. If they come up to our expectations or appetite level, we are retaining that exposure limits. However, wherever they are not comfortable, then we are reducing our exposure limits 40%, 30%, 50% like that. But we are continuing our dealing with them. That's the reason actually we are able to maintain our NIM at a 3 point. The last quarter sequentially, if you see that our NIM was 3.07. But year on year also, if you cumulative figure, if you take it, last year it was 2.95 and this year it is 3.05, 10 basis point up in the NIM. Whereas the industry has seen that there is a steep fall in the NIMs. Whereas we are successful in maintaining that. That is because only we focus more on the high yielding to rejigging and all, not just like that top line to show the top line growth. We are not compromising on the price. If you see the exact figures in the December quarter, the cost of deposit incremental increase is 8 basis point. Whereas the incremental yield on advances, incremental improvement is 11 basis point. Though you know that the March was very tough for rising the deposits, our cost of deposits have improved only 8 basis points, but our yield on advances has given us 11 basis points. That's why our NII also has improved, our NIM is also improved in the fourth quarter. We are very constantly monitoring that matter.
Presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies.
Capacity addition, higher merchant sales, higher EBITDA. That, to my mind, was the story for JSW Energy's Q4 numbers. But I think there's a broader story outside that about what's happening in the power sector, peak power demand and what it does to merchant power sales, and in broadly the EBITDA numbers for a lot of companies which might be in this space. JSW Energy right at the forefront. Let's get in the management to try and talk about the numbers gone by and the outlook ahead. Mr. Sharad Mahindra, he's Joint MD and CEO of JSW Energy, joins us right now on the show. Mr. Mahindra, great having you. We're talking for the first time. Thanks for taking the time out. This is Neeraj here. Good morning. Sum up the quarter and the year for us, because it almost seems that what Q4 has shown is a depiction of what could happen for FY25 and 26 as well, arguably.
Thank you, Neeraj. Yes, I think what you have said exactly, that what quarter four has demonstrated and what last year, we have to understand that how the scenario. First, we will talk in terms of demand. If we see that how the demand is shaping up, demand during the full year has shown a growth of 7.5% over a larger base of FY23, and also in quarter four, also demand was almost the same at 7.4%. And this continues because April numbers have been out, and we know that in April the demand growth has been close to 11%. So this is the scenario, but this is one side is the demand. But when we see in terms of capacity addition planning, what the government has focused maybe about a year back when government announced of 50 gigawatt of bidding every year to take place, I think government has demonstrated almost the same what they said about a year and a half back. And we have witnessed a significant fresh bidding in quarter four, which was of almost 19 gigawatt. Prior to this, we know that we have been away from the bidding in the competitive bid space for last almost more than 2 years. But when we see that now the environment is conducive and the demand requirement is going to be huge, we participated and we were successful in getting almost 18 to 19% of the total bidding which took place. We were successful in winning the bids, which is almost 3.6 gigawatt of it, which we have won in the month of February and March of the previous quarter, which has helped us in creating a healthy order book going forward.
Oh, yes, certainly. I'll come to that as well. But just broadly, Mr. Mahendra, the belief seems to be that because demand, as you said, 7.5% for FY24 or above 7% as the demand is, means that during a year wherein we are going to see power deficits, meaningful power deficits, and if the capex drive starts the way we envisage, then that could only get heightened. That question marks, if any, around EBITDA growth for companies like yours or some others should not come into the picture, because if anything, you will shoot on the upside when it comes to those numbers. Would that be a fair assessment?
Yes, exactly. Absolutely right. In fact, the peak demand, when you say the kind of demand growth which is there, if we compare with past few years back when the demand growth was being met by thermal, we have to remember that if there is, in energy terms, there is a demand growth, like about 16-25 billion unit was the demand last year. And if we assume a 8% growth on that, and we convert into megawatt capacities, assuming that 5 to 6 gigawatt capacity of thermal will get added, which will take care of this demand, we need at least 40 gigawatt of renewable energy capacity to meet this growing demand of 8% every year. So we see a huge opportunity, and that is what we see that the renewable energy will play a significant role. But we have to remember that it is not only plain renewable energy. If we are replacing thermal, it has to be a solution of RTC power, hybrid power, or FDRE. So those are the areas where renewable energy capacity is going to play a significant role.
Okay. Now, for you, Mr. Mahendra, the two things. I mean, you are meeting or beating the targets set up in a comfortable fashion. I was reading a note wherein they point out that for Mytrah as well, while you had pointed to a number of 16.5 annual EBITDA run rate by FY25, you already at 14, and therefore, one, are you under promising and over delivering, and are you revising any of these targets? So if you are at 14 billion already for FY24, are you believing that you want to, or do you believe you want to revise your FY25 targets higher, or will you take it as the day comes? Part one of my question is that. Part two is, what about your own capacity additions as they shape up? Are the timelines getting revised over FY25 and 26?
See, regarding Mytrah, first question, when you said that, yes, we had earlier announced of reaching the number of 1650 crores EBITDA by FY25, and we are in the right direction, and we have done about 1403 crores EBITDA in the previous fiscal. This all has been possible on the various steps in terms of ensuring and improving the efficiency or operational efficiency and ensuring the increased availability of the machines. So that is why this is looking a very significant increase, but we have been successful in increasing the availability both of wind and solar. Last year, we have to remember that quarter four has been a low wind season than what is normally anticipated and normally happens, January Q4 of last fiscal. So otherwise, this would have been slightly more, and would have been slightly higher than what we have delivered. But 1650 is a reasonable number that we will be achieving to have the maximum efficiency from the available assets. Going forward, maybe this may not be the best time to tell, but we are exploring of more optimum utilization of the existing capacities which are there in Mytrah assets, that if we can increase the capacities by using some of the assets which we are identifying can be utilized even with higher capacities. So whether it is in terms of transmission capacity or whether it is the substation capacities. So with that, we are looking towards that maybe some optimization going forward may possible. Then we will be in a position to, if in case there is any revision in number is required. And our focus through these increased capacities, if possible, in Mytrah assets is in the CNI space where we are not present in a big way.
Okay, but wouldn't the higher merchant rates in any fashion help you beat these targets? You're saying that you are in the right direction. That is evident, sir. The question is, can you beat the numbers that were believed to be? Wouldn't higher merchant rates help you do that for FY25?
See, the thing is that merchant rates are something which is very, very dynamic. We cannot assume that it will continue. The demand is good. The price in the merchant market. If we see that, we see an upside on that. But if you see the total out of our total capacity is only 15%, which is the open capacity.
True.
Which is still in the market. So as and when the opportunity comes, and with the coal cost, especially from the thermal side, if we talk of, and the coal costs which are at a reasonably low levels, if that persists, definitely the margins are going to be good. But this is something which is very dynamic and very difficult to estimate, and we have to wait and see as the things progress.
Got it. Fair call. And appreciate that. I'm reading a note which says that, not only are you on track to go up to 11.5 gigs by FY27, but they are saying that your 20 gigawatt capacity target by FY30 could be advanced. Now, it's too long term a target, but I'm still trying to understand, are you thinking around those lines of advancing those targets?
Yes, we are definitely thinking, as I told you, that now with a total order book of 13.2 gigawatt, which we have, and the opportunities which exist, we are quite confident that we will be accelerating this growth by a few years. Instead of FY30, we'll be reaching earlier at 20 gigawatt number, and we are evaluating, and as and when the right time, we want to deliver our first milestone of 10 gigawatt by FY25, and that is the time that we will be absolutely sure of what is the number for FY30. But 20 gigawatt, definitely, the growth will be accelerated. And there are opportunities. One is, as we talked about, a lot of demand which is there and the opportunities which are there, and also the inorganic opportunities which exist in the market. So we keep evaluating as and when any opportunity which is favorable, which is giving us the desired returns, we will definitely be going for that. That will also help us in reaching that number earlier.
Well, confident sounding JSW Energy. Let's wait and watch. The stocks come off a little bit. It's an expensive stock, mind you, and it came off a little bit yesterday after reaching highs. And in today's session too, has started off lower. Let's see what happens during the course of the day. By the way, just very quickly before we move on, some stocks to mark. Adani Power is up about 6%. And in fact, if you look at the whole set of Adani Group stocks, I don't know if this got to do with PM Modi yesterday doing a bit of a retort, right, on the opposition. But Adani Enterprises, Adani Ports, Adani Power, all of them have done really well for themselves. In today's session, Adani Ent has come off, but yesterday was doing okay. Adani Ports too, up about a quarter of percentage point. So some of these are doing okay for themselves today. Aside of that, SKF is the top gainer with 8% uptick. Campus Activewear 6%. Hero MotoCorp and TVS Motors 5% apiece for both of these two-wheeler majors. These two are the top draws on the large cap side today. But on the losing side, Larsen & Toubro stands out like a sore thumb. Amit Anwani. He's research analyst at Prabhudas Lilladher, joins in with a quick perspective on Larsen & Toubro's results and the guidance that they've lowered. Amit, good having you. Thanks for taking the time out. Thank
you.
In some sense, an election season period of low or no tendering, come low or no execution, should bake this kind of a guidance in. Is the street's disappointment justified, or do you think there's a bit of an overreaction to the stock?
Hi, thanks. So I think if you see, the reaction primarily has been to the expectations which was built that there would be margin improvement in the core business. So if you see FY24 full year basis for the projected manufacturing business, the company was able to clock 8.2% versus 8.6% last financial year. So definitely there was some built up that there should be some announcement with respect to the margin improvement in the core business happening in FY25, which now they have lowered to kind of a flattish guidance for FY25 on the back of multiple factors. So I think that is why the immediate reaction which we can see. But I think if one take a longer term perspective, despite factoring in the near-term challenges which are arising on multi-front, the geopolitical situation is hampering the supply chain and many other aspects, the legacy projects getting executed, and portfolio mix also changing. But I think very interestingly, if you see on the positive side, the working capital to sales was pretty strong at 12%. The order intake guidance for full year they have surpassed, and then we saw stock rallying by 30-40% this whole year. And on this high base, the guidance of 10% order inflow and 15% top line growth, despite the margin will be kind of flattish versus FY24. I think we can see the 13-14% CAGR for next 2 years. I think almost 13-14% growth in FY26 as well. And there could be some margin improvements finally which can happen in FY26. And on the top of it, even valuation perspective and current price, I think with a longer term perspective still makes a case, considering that there would be stable policy environment and still the public capex will be driving the domestic growth.
Got it. So Amit, therefore, what's the call here and what's the basis for the call for somebody who's looking beyond the next couple of months?
Sure. So if you see, we did assign almost 25-26x multiple to FY26, and that gives me the core business valuation of about 3,000 kind of a value. And the ITTS and other non-core businesses in my SOTP adds up to roughly about 1,100-1,200. So I still see kind of 4,000 valuation with respect to target price with 1 year view, and we kind of maintain the buy rating on the stock. And this is primarily because of the robust multi-year capex which can happen if there is a stable policy environment which everyone is expecting. Despite election year, I think the opportunity will be robust post July, August.
Would Larsen be the top draw out there, Amit, or is there a better idea in that space?
So I think many stocks have peaked out. So if you see the other large caps like ABB Siemens, they're rolling at about 70-80x multiples. And I think L&T still has a scope with respect to, as I told you, we are just assigning 26x multiple.
Yeah.
And there's a scope if the pace on which the tendering is coming from international market, if the domestic picks up for them, which they're expecting this financial year, I think definitely there would be a lot of streams. So if you see FY24, because of the huge international orders, the stocks saw a rally of 30-40%, right? So if the domestic kicks in, which we are expecting over the next couple of years, that sets the case for L&T. Yeah.
Okay, we'll leave it at that. Amit, thank you so much for joining us and giving us your perspective. Really appreciate your time. With that, And on the note that despite L&T doing what it is doing, I think the market's about 0.25% lower and nothing too dramatic, which is a good thing. IT though is down about 0.5%, so that's to be borne in mind. And banks are doing reasonably okay. Just the BSE 500 snapshot before we take that break, the top losers and gainers, and you will see L&T kind of featuring the list of the losers, while the likes of SKF and a few others stand out on the gaining side. It's a wrap on this leg of India Market Open. Up next is Talking Points. Stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some...
Thanks for tuning in. And yesterday we were talking about in the last 1 hour about how the market was all about result reactions to a Bharat Forge, to a Hero MotoCorp, etc. Today is no different, by the way. While the index is down about 1/3%, there are a clutch of stocks which are reacting to results and reacting well. So I want to start off by talking about SKF, their Q4 numbers. Revenues were up about 10% at 1203 crores. The estimates were 1123. Margins up 247 basis points at 17.72% versus the Bloomberg estimate of 16%, and the PAT up 42% at 175 crores versus 123 crores. The Bloomberg estimate was 137 crores. Now, what is so special about this? Amongst other things, it's the highest PAT number and growth number, I think, in 13 quarters for SKF. And for reference, both margins and PAT growth for Schaeffler India, which is related, or rather in the same field, their performance was flattish, whereas SKF has shown growth. So because of this, I think the street is rewarding what is not a very cheap stock, but duly rewarding the kind of performance that they've come out with, which is SKF. But there is, of course, a collateral impact on Schaeffler, which is up 2%. But the hero of that end of the market has to be SKF. Then we've seen some positive commentary from brokerages on Hero MotoCorp results. And look at what's happened to both Hero and TVS. Some very strong moves there. To my mind, the large cap story is what's happening to Hero and TVS. TVS is not in the index, but the two-wheeler majors, both of them doing what they are doing is a remarkable show. Maybe Bajaj Auto might also be, at least it started off well, and yesterday too Bajaj Auto did okay. That also is up about 2.5%, but this is a really stellar show by the two-wheeler majors in the session today. So that's the other aspect that you should watch out for. Has Bank of Baroda reacted is the question, because RBI lifted curbs on Bank of Baroda's Bob World app with immediate effect, and that stock is up about a couple of percentage points as well. Then look at the numbers of Kirloskar Oil Engines. We'll bring the stock up as well. It started off very well, has declined a little bit, but was up about 6-7%. Currently too is up about 5% on 1 million shares traded, which is actually very high for Kirloskar Oil usually. Now, why has this happened? Look at the numbers again. Revenues up 20%, nearly 20% at 1660 crores versus 1384, and the net profit up 86%. Why? Because margins are up 450 basis points at 18.23 versus 13.72%. And therein the story lies. EBITDA up 59%, but that margin performance extremely solid, as a result of which Kirloskar Oil too has had a very strong quarter, yes, but has also done very well. Now, it's not just about results though. And we'll get in Ganeshram Jayaraman in just moments from now to talk about what he makes of the results season and more. But it's not just about results, because if you look at what's happened to Manappuram and Muthoot today, that's because of a supposed RBI advisory note to some of these gold loan NBFCs telling them that they should not to exceed cash disbursement limit. The loan amount in excess of 20% should not happen. These is various media reports who are suggesting this. And while one of the wire agencies had published this during market hours yesterday and the stocks had fallen, I think they are taking more cognizance of this today, because it's been widely reported, as a result of which both Manappuram and Muthoot have corrected quite strongly in the session today. So watch out for that as well. In minutes from now, I'll also get in my colleague Anushi to talk about Larsen & Toubro, because when you look at the large caps, while Hero and TVS are on one side of the end, L&T is quite on the other side of the end, 3.5% lower for Larsen & Toubro in the session today, post their guidance numbers and both for order inflow as well as revenue growth for FY25. So I think therein lies the problem for some of these names. So that's the first set of stocks. Now, if you just look at what's happened to BSE 500 winners and losers, on the losing side, there is of course Manappuram and Muthoot which stand out there, and they are certainly come off. There is Piramal, which has also come off, not looking great, and a couple of others on the gaining side include an Adani Power and a Timken, both of which are doing okay, in addition to of course Hero and TVS, which have done well, but yeah, pretty strong gains for Adani Power as well in the session today. Now, because we said it's earnings season, Arvind Textiles came out with numbers with Q4 earnings, and while the revenue growth was over 10%, raw material costs did impact the margins. Let's hear out the management.
Hello and welcome. We have with us the management of Arvind Limited to talk to us about the numbers. You're watching NDTV Profit. I'm Harsh Saita. We have with us Mr. Puneet Lalbhai, who's the Vice Chairman at Arvind Limited, to talk to us about the Q4 numbers as well as what one can expect from Q1 as well as FY25 full year. Welcome to NDTV Profit, sir.
Pleasure to be here.
Hi. So, sir, first off, let me try and break down this quarter. What's exactly transpiring with regard to margins, and where can one see numbers start to stack up for FY25? What's the expectation like?
So I think it was a very strong quarter. We had revenue growth up to above 10%, which is the first quarter in many quarters where we've seen such growth. The growth was fueled by both our volume growth in garments and our very good performance in the advanced materials division. I feel that the year was a story of two halves. The first half of the year was very low demand, brands being saddled by inventories. We worked through all of that, and towards the second half of the year, demand started reviving. I believe that going into the next year, that better demand scenario is likely to continue. AMD continues to remain strong, so we should see some growth over last year overall next year, with it being driven by the same two factors: growth in volumes, especially on the garments front, on the conventional textiles business, and growth in AMD continuing to be strong.
Right, sir. And with regard to raw material, how's the raw material cost evolution playing out? If you can talk to us about that and set us the context for FY25. How has, of course, April already been, but how do you anticipate the numbers shape up in terms of FY25? Will raw material prices remain benign? Is that the expectation?
So what we saw last year was dramatic raw material deflation. And that led to, the top line on the entire financial year being slightly negative. I think most of the raw material deflation is behind us now. And prices are going to remain range bound and hopefully reasonably stable. That is our view at the moment. So we don't see any raw material linked impact on top line going into the new year.
And you can, of course, catch this whole conversation on all our digital platforms and channels. So keep that in mind. Thanks for tuning into Talking Point, though. And the case for a chat for our guest today is threefold, as is usually the case. We, of course, talk about whether Q4 earnings in line thus far have a material impact on markets or no. That's the first point. We, of course, talk about whether falling household savings will keep deposit growth under check for banks. Remember, deposit growth has lagged credit growth by a significant margin in the recent past. And could consumption be under pressure? There are green shoots for select rural pockets. Companies like Pidilite have spoken about it, but not everybody is saying the same thing. Let's ask all of these things to Ganeshram Jayaraman. He's Managing Director and Head of Avendus Spark Institutional Equities. Joins us right now on the show. Ganeshram, good having you. Thanks for taking the time out. I hope all is well.
All well, Neeraj. Thank you. Good being here.
The pleasure is entirely ours, always, Ganeshram. Can I start off by talking about the earnings season thus far, Ganeshram? Most notes seem to suggest that, as per their estimates, of course, the Sensex and as per consensus, the Sensex numbers have largely been in line or slightly better. Have you been okay with the earnings season thus far, or are you disappointed?
The Nifty stocks are not seeing any downgrades, nor have they seen any material upgrades. It's hardly 1% here or there. In fact, for 4 quarters now, the FY25 earnings estimates haven't changed at all for the Nifty companies. But the broader universe, we are seeing more downgrades, especially in sectors like IT or even cement. We have seen some earnings downgrades for fiscal 25 come, especially after this quarter. So still, only about a third of our coverage universe results have come so far. Typically, the later half tends to be more reflective of how things go. So fingers crossed, but it's been mixed. So just to put it in a nutshell, IT has seen some downgrades. The capital goods has seen some upgrades. Cement has seen some downgrades so far. Nifty unchanged, broader universe, some downgrades.
The other thing is the commentary and the implications. Ganeshram, would love to know what you think about it. For example, I'm drawing a line from what Bharat Forge had to say yesterday, and they gave a fairly cautious commentary in February when they came out with numbers, citing global headwinds. Pat, they come out 1 quarter later, say that they were too pessimistic because of the Red Sea route, but I think they've changed their side to optimism. They are looking at green shoots, not just in defense, but in industrials and autos as well. And maybe a few other companies have also spoken about this similar thing happening on the global front. Now, we know that global growth has largely been a concern. To your mind, do companies exposed to global growth, are they kind of bottoming out on the growth front from the global businesses or not quite?
Selectively, but not at a broader level. We have not seen global growth pick up, exports pick up in most categories. We have seen it in very few, but in most categories, global growth, exports growth we haven't seen widespread pickup. Where we are confident of is private sector capex led growth picking up next year. I think that's the most positive confidence signal that we are getting. And it's not going to be government capex, it's more going to be private sector capex led pickup in the coming year, property capex led pickup coming next year. Those two, we are more confident than we were. We have been confident for almost 18 months now. Stocks have done very well, but we still hold on to the view that while stocks have done well, they are in the expectation of earnings, and those earnings will play out over the next 18 months on private capex. So some commentary from managements also are indicative of that now. We have been speaking to some banks also, and we are seeing some private sector capex led sanctions or likely disbursements picking up next year. So the most positive part of the growth signals for next year is coming from B2B or the private sector led capex led signals. That's the most important. Caution still continues on the consumer side. We are not seeing significant. In fact, you're right when you started off saying rural has started seeing some bit of improvement. Two-wheeler companies signaling that, some FMCG companies are mentioning that. We are also seeing it on the ground, but urban is slowing down more than we thought, and our concern remains consumption. So clearly for us it's a mixed picture on the broader expectations for next year.
Is this urban consumption slowdown cyclical in nature, Ganeshram, also a case of a higher base, or no, not necessarily so?
No, it's a combination of a few things, Neeraj. I think what's happened is the one of the points that you alluded to, which is the whole savings, which is in some form linked to consumption, right? If you slice through the savings numbers, it's not as if India started suddenly saving lesser. It's that net savings, which is net of leverage, which is the concern, and leverage has gone up, and that's actually why we think consumption is also not seeing fresh legs, which is consumption led by household leverage at the mass consumption level. We are not seeing that to sustain the way it has over the last, especially since COVID, and our concern stems from there. So the two are linked, which is mass consumption in some form linked to savings slowdown. It has implications for both deposit growth. It has implications on how lenders will slow down. It has implications on how consumer related companies, especially urban, especially leveraged consumption, will see moderation in growth expectations going forward. That is our single biggest key concern that we continue to have.
And Ganeshram, just the follow-up to that is whether this fall in savings rate keeps deposit growth muted, and is that going to be a concern for the banking system? Because now there has been a number of months that we've seen credit growth, or rather deposit growth, lag credit growth meaningfully. What happens in the event that deposit growth stays muted and we see a period of lower interest rates in the next 12 months, which might lead to even heightened credit growth?
So I think that's a very important concern. We also share that concern. It's now 24 consecutive months. In fact, it's the first time ever. We can go back data as much as we want, but we have never seen 2 consecutive years of absolute credit growth outpacing absolute deposit growth, and it's illogical, but it's happening, and that is a very significant concern, and we think that's reflected in the elevated CD ratios of banks, and that's reflecting in many banks underperforming. That will, we think, lead to banks slowing down credit growth, especially consumer lending segments, which we think can have an impact on volume growth and earnings growth for rest of the companies into next year. So very, very important, and we think important challenge, and we are very, very about that as well. That has an impact on at a broader level earnings expectations of mid-teens for next year, because it has not only impact on volume growth, it has an implication on premiumization, it has an impact on operating leverage, and at a bottom line level, even a small, maybe even 250 bips to 300 bips lesser credit growth next year can have a lot more impact on earnings expectations for next year at a broader level. That is an important, possibly the most important concern which we will have.
So non-banking impact on earnings, and of course banking earnings as well, because if they indeed go slow on credit for consumer credit, that might have an impact on their earnings, even if it's compensated in part, Ganeshram, by the capex growth, right? So would banking earnings also come under cloud?
Yeah, it will, because the lending rates of the corporates are a lot lesser than the consumer. So it will have an impact on not only growth for corporates, but for the bank's balance sheets. It will also have an impact on margins, and it can have an impact on credit costs as well. And also some of the new regulations which the Reserve Bank has come up with for banks can have an impact on treasury gains or credit costs. So which means earnings growth expectations of most banks can be well below what it has been over the last 18 months. And this, I'm not even considering the impact of rate cuts. If rate cuts do come, and I'm not a believer that it will come in the next 6-9 months, I don't see it in this calendar for sure. I think it can come in next calendar. If that comes, and given that repo rate linked loans are almost more than a third of the overall loans, it can have an impact on yields as well. That can again have an impact on margins for fiscal 26. May not be for 25, but for 26, fiscal 26, that can happen.
Okay, Ganeshram, stay on. Need to slip into a very quick break. Back from the break and talk about some other aspects with Ganeshram in just moments from now. Stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes.
Back with Talking Point right here on NDTV Profit. The hero of the earnings season currently, you could argue is, well, pun intended, hero. But what I mean to say is that Hero, TVS, autos by and large have actually had a very good performance relative to almost everything else and in absolute terms as well. Ganeshram, you mentioned, I heard you say that two-wheeler commentaries, speaking of the rural upside, is this a net positive for these companies over the slightly medium term? Because rural has lagged big time. Does this make the sentiment favorable? And in auto, aside of two-wheelers, autos in general, this earnings season has stood out. I mean, Bharat Forge, Hero, TVS are all cases in point. What do you make of these numbers?
Very good. In fact, two-wheeler companies, what's happening is about 6-7 years now, maybe 2017, we saw the the last time sales were good, and now the replacement cycle of two-wheelers is coming out. In the sense, there are more vehicles on the road which were sold prior to 2017 or before than since, which means vehicles are now at an average level almost 10 years old, and it leads to replacement cycle, and that's very, very positive for two-wheeler companies. And also the electric vehicles, which were taking some bit of market share away, and those aren't as much as it was over the last 2-3 years. So that's also helping the incumbents and the ones we have known for a long time. So this is in two-wheelers. Four-wheelers continue to be a challenge on entry level, and the premiumization SUVs, which have been doing well, that trend is sustaining. Not much of a change that we are noticing there. Commercial vehicles, we are wary. And we think there is some bit of oversupply which has kind of picked up. Tractors still not reflecting. So this broader level rural recovery, I still don't want to. I mean, I've not been a fan of calling for rural slowdown or no rural recovery both over the last few years. Tractor sales were doing well. E-commerce company sales in rural was doing well. Cell phone sales in rural continue to do well, even though two-wheeler sales weren't in the preceding, say, 24-36 months. Now, tractor sales isn't doing well, two-wheelers doing well. So my sense is it's all more, the wallet beginning to trend differently than wallets shrinking. Behavioral patterns are more relevant, spending patterns, and they are not reflective of at a broad level rural recovery or slowdown. I think we'll keep talking about it at a market level, but I don't think that's really indicative of how consumer is reacting. At the end of the day, there are cell phone sales in rural, I mean, phenomenally good. So I'm not really going by just this narrative on rural slowing down and picking up. But for sure, we are seeing various pockets of auto sales continuing to do well, and that's something that we've been expecting, and we are now seeing that play out.
Okay. Well, we're out of time completely on this leg of Talking Point, unfortunately, today. Ganeshram, thanks for taking the time out and being with us. We'll look forward to a slightly longer conversation the next time that we speak, but much appreciate your time today.
Thanks for having me.
Now, the pleasure was entirely ours. And just before we wrap up, talking point, look at those flashes on your screen. Air India Express has given an ultimatum to all employees who are on mass leave to join duty, or else the management may take action. Remember, this morning we got the news that 25 employees were asked, senior cabin crew were asked to leave, and that won't be the end of the number. So there is a serious fight out there. Let's see which way it takes shape. But wrap up on this leg. Thanks so much for tuning in. Up next is the FNO Show.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies.
Benchmark indices trade lower, dragged by TCS, RIL and L&T. The Sensex trades below 73,000, while the Nifty looks weak, sub 22,200. Most sectors in the red, dragged by FMCG, pharma and healthcare. Meanwhile, PSU Bank and auto and consumer durables emerge as the few gainers. An auto major Hero and TVS gain over 5% on the back of good earnings. Two-wheelers in focus this morning. Air India Express sacks 30 cabin crew members over protest. Airline gives ultimatum to all employees to join roster duty by 4 p.m. this evening. That's an NDTV exclusive. More earnings on the block. SBI, Asian Paints and Bharat Petroleum are set to report their numbers later in the day. Hello and welcome to the F&O show, where Agam and me will take you through all the action on the F&O space. But in the meantime, the markets are not having a fun morning. The index is once again under pressure. Despite cues from the world not being too negative, the Nifty, after a flat start, has actually nosedived to trade sub 22,200, 22,136, pretty much at the day's low point on the index is what we have. Selling pressure intensifying, bulls clearly not in control of the street. Any sort of rallies are being used by positional traders to exit positions ahead of the big election outcome the street has been a little nervous about. The Nifty is looking weak. The Sensex trades lower. Broader markets, which are outperformers in yesterday's day of trade, are also seeing some weakness. The Sensex and Nifty moving in line with the benchmark, maybe slightly better off, but no real recovery there either. They touched the day's low point, but are now trying to find their feet as we see it. In terms of stocks, it's largely earnings driven, and what we are seeing is reaction on back of that. Interestingly, stocks like Hero MotoCorp, TVS Motors are getting a thumbs up from the street, even though brokerages were not too sold out on the likes of a TVS Motors. NBFCs such as the Muthoot and Manappuram, on back of the advisory coming in from the regulator on gold loans, are seeing pressure as well. But all in all, this is looking worse than expected, Agam. We thought we'd hold out today, but it seems like any sort of uptick is getting sold into.
Yeah, certainly that seems to be the case right now. And, you know, the pressure is very evident when it comes to the derivatives markets as well. To very quickly take a look of what's happening there, I'm going to pull up the futures first. The Nifty futures, of course, are once again looking at about 8% increase in OI. Remember that this wasn't very different from the earlier on in the session yesterday either. We were seeing an increase in OI even as the indices came off. And, you know, towards the end of the day, that increase of open interest had dwindled. I reckon that a lot of positions being taken on an intraday basis. And today, to make things even more complicated, we also have the Nifty weekly options expiry. So, you know, it's going to certainly be not bereft of volatility. Let's pull up the Bank Nifty as well and see how things are faring there. Not as much positions being built in open interest for the Bank Nifty there, and even this particular index is taking a cut of around 0.25% right now. But you know, on the whole, it's not much to speak for. Let's move on and talk about the options market, see how things are faring there. Of course, it is the weekly options expiry, but a lot more traction with respect to selling of calls at the moment, and perhaps on expected lines given the sharp decline in the Nifty that we've seen over the last 15 minutes to a half an hour or so. And we are overall open interest distribution picture, of course, a lot of the traction now shifts to the 22,500 call. That's where you'll start seeing a lot more writing activity coming as well. And well, of course, on the lower end, we do have a little bit more traction building around the 22,000 mark, but the underlying is just about 140 odd points away from that. So no one is safe at the moment. It seems like you know, in the way things are panning out. And that's the key support level today. 22,000 is what we're watching. I wouldn't exactly rule it out should we see a volatility. And, you know, given the fact that we have that weekly options expiry, things can go a little bit haywire. So perhaps that's a mark that you're going to watch out for as far as the Nifty is concerned, Samina.
Yeah, it's looking like a weak morning. Remember, we've been fundamentally, the complaint has been that earnings was not way out of line in terms of being impressive, and valuations have been looking stretched, and you're seeing the reaction. So just to take you through earnings reaction, L&T is taking it to the chin, 4.5% lower. Piramal Enterprise, weak numbers, the counter gets hit by 5%. Westlife Food World, decent numbers, the stock is still down 4%. Real estate is taking a knock. Pharma is taking a knock. Oil India, United Breweries, this is all just looking pretty sad or pretty weak as we see it. On the gaining side, you've got Jupiter Wagons, one of the few lone gainers. This is on back of earnings. The stock is up 9%. SKF as well on back of good earnings is up 8%. Adani Group stocks are looking good this morning. So Adani Power is seeing a very sharp up move on a down day like today, up 6% as we see it. Hero and TVS are doing okay, 197 T7 Communication has made an up move, but barring that, and railway, a handful of railway counters are doing all right in today's trade. But we have with us Akshay, Bhagat and Nilesh Jain to take us through the F&O strategy. Akshay, this becomes a very tough market to trade. Yesterday, of course, if you were a stock-specific trader, you'd have gone home laughing because it started off flat, but went home at the day's high point for a whole lot of stocks in trade yesterday. Today, the markets don't seem to be giving any opportunities to the bulls. How would you trade the index up 22,200 now?
Good morning, Samina. Yes, as I completely agree. The markets are in a short-term downtrend, and the trend would possibly find support. The key support area, if I were to put it from a positional perspective, stays at 21,800. So the broader trend is weak as far as the next few days for the May series goes. But today can be a surprise day because it's the weekly expiry for the Nifty index. Right now, we are trading near the day's low, but the levels which one need to keep in mind is 22,200 basis spot Nifty. So in case you have any recovery attempt during the day above these levels, you can be assured of a bounce back right up till 22,300 to 350. So yes, trade by the levels. The first sign of any recovery is about 22,200. Right now, the technical parameters, if you are trading for the day or very short term, are highly oversold. We are getting some positive divergence signal, and being a weekly expiry, a day of surprises, Nifty can surprise you with a short-term trading bounce back, and I'm expecting the expiry to be plus minus 50 points from the level of 22,200 as it stands for today's trading session.
Okay, let's get in Nilesh into the conversation as well. Nilesh, good morning to you. Your assessment on the Nifty and how you're trading it?
Morning, Adam. Morning, Samina. So, see, this is the fifth consecutive session. Nifty is forming a lower top and lower bottom formation. The structure is certainly looking weak. Nifty has already breached its crucial support zone of 21 DMA and 50 DMA. Immediate resistance of 50 DMA is now placed at 22,300. So, we need a decisive breakout of 22,300 for a short covering move to continue. Now, if you look at the volatility index India week, this is the 11th consecutive session. From the lows of 10, it has almost reached to the levels of 18 now, and almost 75 to 80% jump we have seen in last 10, 11 consecutive sessions. So that is certainly not a positive sign. That basically indicates if at all we see any pullback that might get sold into. So purely from an expiry point of view, today we have a weekly expiry. There could be possibility of a volatility, and Nifty may expire in the broader range of 20,150 to 22,250. But the major structure is, as of now, it looks like slightly volatile, and we might see further downtrend to continue. On the lower side going forward, I won't be surprised if Nifty tests the lows of 21,900 to 21,800. So that's the kind of target coming on the lower side. So watch out for important support zone, and any pullback towards 22,300 to 22,400 can be a good opportunity to initiate a short position.
In terms of stocks, and I want to just start with L&T because the selling on that is pretty intensive this morning. Numbers were not too disappointing. While I know the management has said that the next 2 quarters will be tough because of elections, it seems like counters like L&T are getting dumped. On the trading side, looks like we should bet on it. Is there a strategy at all?
This one is for me, Samina?
Yes.
Yeah. So yes, absolutely. The results reaction are playing a bit of a havoc for Larsen and Toubro. But if you look at the charts, there is a very strong support zone, as I see, at the level of 3250 to 3260. So you can expect some kind of a relief rally or a bounce, as these levels hold special relevance if you're a short term or a day trader. I would be keen on taking a buy trade once the support levels of 3250 tests or it nears those levels. I'm expecting a recovery in L&T. This is more of a short-term trading recovery, and you can see L&T once again moving up for levels of 3,500. So yes, it's a perfect buy trade if you are a short-term trader. The risk-reward payoff is absolutely well. Results are also good enough. It's not that the stock should be reacting so negatively post-results. So with a stop loss of 3,220, one can consider buying L&T near the support levels of 3,250 for a relief rally pullback till 3,500.
Okay, well, that's your view on L&T. We take a look at all the stocks which are buzzing in trade right now. and see where there is traction. I reckon there will be more losers and gainers as far as the spot prices are concerned. And we do have Muthoot Finance, which is under pressure. That's down around 5%, as is the case for L&T. And both these stocks are looking at a substantial increase in open interest towards what looks like shorts. Of course, Hero MotoCorp, on the other hand, coming out with a strong, set of numbers, and it's reacting positively as well. A relative underperformer, but I reckon that there's a little bit of a catch-up trade with respect to Hero MotoCorp, with respect to and vis-a-vis TVS Motor Company and something like a Bajaj Auto. Of course, Manappuram, the other one, well, if you could just go back to the other slide, because it is essentially the gold loan companies which are taking a little bit of a hit right now. So, and Muthoot Finance and Manappuram Finance, both of them are looking at weakness at the moment. And of course, Bharat Forge is the other one, which continues to advance. We saw the earnings come out yesterday. And well, we have longs coming in there as well. Let's move on and talk about all the stocks which are now seeing unwinding in trade. So we have something like a Piramal Enterprises as well as Navin Fluorine, along with United Spirits and REC, looking at longs unwinding. And of course, Canara Bank, it's flattish right now. But, well, I wouldn't really call it short covering because of the fact that its underlying is not moving too much. But Piramal, Navin Fluorine, United Spirits, as well as REC, looking at a little bit of a knock there. But let's move on and talk about some of the stocks that are on the radar of our experts at the moment. Akshay, coming back to you on what looks good towards short or long at the moment.
Yeah, so I'll be more inclined on the long side, considering the slightly overbought nature of the market, oversold nature of the market for trading. HUL is the first stock I have on my mind. A very strong breakout a couple of trading sessions back. A highly oversold stock which is making a good recovery attempt. FMCG is the flavor in the last few days, and here HUL can be bought for potential targets of 2382 and 2405 with a stop loss of 2297. The second trade is from the auto pack. It's Ashok Leyland, which has been buzzing in the last few trading sessions. The recent corrective action is giving you another opportunity of buying at dips at around 195 odd levels, which it tested yesterday. So Ashok Leyland is a very strong, has a strong setup technically in the auto pack, and I would look for targets at 212 to 223 from a short-term trading perspective with a stop loss of 192. So Ashok Leyland and Hindustan Unilever would be the two trading bets I would recommend from the buying perspective for short-term trades.
These are Akshay's picks out here. Let's also get into Nilesh. Nilesh, what are you recommending this morning?
So Agam, we are having a balanced approach. So one buy and one sell. So starting with the buy first. So auto pack as a whole is looking positive, and after today's up move, I think Tata Motors is on the verge of a breakout. Today we have witnessed unwinding of the position within this particular counter. So Tata Motors looks positive. In the future, it is quoting somewhere around 1026, can be bought with a stop loss below 1010, and upside target could be 1045 to 1060. And now since the market is looking slightly on a negative side, so we have also spotted a weak stock, that is Berger Paint. So this particular counter has been one of the underperformer within this pack and constantly forming a low top and low bottom formation, and also witness a build up on the short side as well. So this particular counter looks weak for the further down tick to continue towards 465. So that's the target that we are expecting. Stop loss can be placed above 497.
Those are, well, some of your recommendations from our experts as well. And, well, you know, let's talk about a handful of other counters which are also in focus. Of course, we do have a lot more weaker counters in today's day of trade. Some of those counters which were actually doing quite well are also now starting to wilt under pressure. But let's put up something like a Tata Motors, because that's the other one which looks interesting at the moment. And we've actually seen, well, we're expecting earnings from the company tomorrow, of course. And we've actually seen a lot of traction there as well. Can we pull up how things are shaping up in terms of its future space ahead of its earnings coming through? And we can actually take a look at the future snapshot as far in Tata Motors. Okay, so you have about a 1.5% increase in open interest, and we do have you know, a little bit of an interest, but not substantial enough. Nilesh, coming back to you, any view on Tata Motors at the moment? Oh, pardon me. We have already have Nilesh tell us about Tata Motors. So let me take this up with Akshay as well. Akshay, how are you placed on Tata Motors?
Yeah, Tata Motors, if you look at the chart pattern, it's been confined in the trading range. The stock has held on its ground pretty strong. The range which I mentioned is 1050 on the upside, and the support area is 950. So positionally, it's still a strong counter. If you are trading for short term, yes, the resistance is just 30 points away. That's the area where there can or cannot be a potential breakout. So as a short-term trader, you need to be exercising a bit of a caution, since we are nearing a resistance zone of 1050. If the resistance breakout matures, you are setting up for a target of 1100 plus. So I would say if you're buying now, consider it from a positional perspective, because if it resists at 1050, you can have another round of choppy session within the range of 950 to 1050. Broadly, from a medium-term perspective, the chart reading is still positive and is setting up, as I mentioned, for targets of 1100 plus.
Right. Thank you, Nilesh. Thank you, Akshay. It looks like it's a tough market to trade, but stocks like Tata Motors is one you want to watch out for. On the charts, looks solid. Was ready for a breakout, but then went into a declining spread, and then, of course, consolidating as we see it right now. But back about 1,000 on Tata Motors is what we have. L&T, on the other hand, in a weak spot. Oil and gas names also not looking good. IT, despite brokerages now turning slightly more constructive on it, continue to see selling. We'll take a break. We'll talk to Kalpataru Projects. Good earnings from them. Margin expansion, execution on point. Lots of good things lined up for them. All that and more on the other side.
Presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Welcome back. You're watching the FNO show, but the focus remains on earnings. Let's pull up Kalpataru Projects and see what the stock is getting up to. It's been a pretty solid quarter for the company. Be good to know what it looks like going ahead as well. The stock, though, not looking great for some reason, even though they've had a beat on top line and bottom line. Amit Uplechwar, Director of Kalpataru Projects, now joins in. Amit, good morning. I know the stock performance right now doesn't reflect how well you've done for the quarter, but we'll put it down to a weak market sentiment. It's been a good quarter. Your top line has seen an impressive improvement. Revenues are up 22%. EBITDA is up 36% on back of strong execution. Margins have also improved. Going into FY25, help us understand what we can expect. 20+% revenue growth expected, and what is the margin outlook as well for the FY25?
So thanks a lot for having us on your show. Just a context before I get to FY25, and I think it's important for you and your viewers to know this. We started out in 2021 with a goal of getting to a certain stage at FY25 end of the year, which is a year away. And, we had set out with a $3 billion revenue, $6 billion order book, and a ROCE 20% and above. And I think by the end of the year, we've already breached our order book position. We are at, close to 63,000 crores, including L1 as we speak. Our revenue is at 20,000 crores at a console basis almost, which is up 20% from last year. So we are quite stoked with the kind of performance that the team has done. And as leadership, we are very happy to see this kind of progress. In order, for FY25, we certainly hope that we should be able to continue the streak and get to a 20% revenue growth also for FY25.
Amit, we had L&T's management commenting and post their earnings, even though they posted a good set of earnings as well, indicating that the next 2 quarters will be slow because of elections and execution may be a little bit of a challenge. Do you resonate with that? Are you feeling the same sort of emotion that the next 2 quarters may see a little bit of a downtick before we return back to serious business?
So I think we would have probably thought we could do more than 20%, but there's plenty of factors. One, we are, almost 50% of our business is coming from outside of India, which is robust. Also in India, most of our projects, agnostic of, election outcome, because they are all PSU projects, they're all funded. Yes, in terms of new project guidance for next year, we have to still see how the government outlay pans at the end of the election outcome. And at the end of Q1, we'll be far more precise in terms of where our guidance could be for FY25 order booking target. But at the current order book, we are already sitting at 2+ years of revenue. So we are very, very comfortable in terms of our order book positions and the diversification of order across sectors of oil and gas, building, railways, transmission, and water.
Well, right, Amit, we're moving, of course, looking beyond elections and potentially what we can expect from the upcoming union budget. I reckon that a lot of that will also depend on the government in power. That said, at the moment, where do you think, in what areas do you think that there is an opportunity in terms of orders coming through? What do you think that that Kalpataru could do, and what gaps could it fill as we move into FY25? What sort of orders of inflows can we start expecting perhaps as we move into the next couple of quarters?
So, Agam, an interesting question. If you look at our order book split today, we are evenly spread, right? That's a good situation for a diversified company to have. So today, out of my 58,000 crores of order book, I've got almost 35% coming from my transmission, which is both domestic and international. I've got almost 30% coming from my building division and, 19% coming from my building division, and an even spread between water and oil and gas. So, we are across sectors, we've got orders in hand today. And if I look at the future today, the transmission domestic looks, after a lull for the last 3 years, is finally on a big uptrend. Oil and gas international, for which we've been putting seeds for the last 3-4 years in terms of qualification, effort, market intelligence has bore fruit. We've got a very large order in the Middle East for a prestigious global client. And we see that market for us for the next few years looking also robust. Water in India has been a focus for all governments. And for the last 5 years, it had been heightened in terms of Jal Jeevan Mission, river linking, so many different schemes that are announced or to be announced. We've got our building and factories, which is seeing a huge surge in terms of high value project, factory spend coming back again in terms of both government as well as private sector capex. Our urban infra, we've got two very large and crucial orders for underground metro using a tunnel boring machine, which also is a segment that has great promise as metros keep expanding across the length and breadth of the country. So looking at our different segments and order, the profile for next few years looks very good.
I just quick mention on the oil and gas space because you had, in fact, spoken about it right now. There's quite a bit of competitive intensity when it comes to that specific region and orders here. Of course, you've spoken about a client there. Can you give us an idea about the pricing environment, of whether or not that could in fact have some sort of an impact as far as margins go as well?
So I think we've consistently maintained our margin. If you look at the components of margin in terms of our interest cost, we are stable at 2% of revenue. Our other cost in terms of debt has remained absolutely at the same level as last year, both at net and gross. Very few, hardly any increase for the 20% revenue growth that we've had. We've got our capex for the last 5 years at close to 2,000 crores. And for the 5-year block prior to that was at 1,000 crores. And we've done that all with internal accruals, our debt not going up significantly at all. So looking at that, our oil and gas focus has been to go outside because in India, oil and gas spend in terms of government capex from PSUs has been slowing down over the last couple of years. The competitive intensity has been quite high. And hence, looking at our oil and gas margins, hopefully we do better outside because the payment terms are better. There is hardly to no retention that is there on our projects. And so we hope that those margins will be better than what it will be in India in that sector, given the competitive intensity.
Amit, just a quick one. This is the Aramco deal you're talking about?
So unfortunately, we are constrained in terms of naming who our client could be because we are in the final
closure
stages of.
Okay.
Yes.
Okay.
But, yeah.
Good luck with that. It's looking good. The stock is up about 100% in the last 6 months. So the euphoria clearly of what we've seen, those order wins from the likes of an Aramco to other big Middle Eastern clients that they've picked up is reflecting in terms of stock performance and its earnings. With that, completely out of time, but thanks for watching. Up next, there's a lot more programming on the other side, so stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages, and the way we speak to each other, in mixed coding, where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead, as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people. Good morning and welcome. You've tuned into the Small and Mid Cap Show here on NDTV Profit. I'm Harsh Saita. Quick check on where markets are at. The Nifty 50 just off the day's low, but we're flirting with the lows at least as we speak. And of course, we're seeing another cut, 0.7% lower at least to start this day off. Let's look at some of the positive contributories in trade, really far and few, just about 10 or 12 odd positive contributories, and honestly nothing to speak of note in that set of stocks. In terms of the negative ones though, L&T, Larsen, ICICI Bank, HDFC Bank. So the largest, the heavyweights are actually pulling the index down. L&T, of course, the top loser as well in trade, down roughly 5% in trade today. You're looking at cuts on both HDFC and RIL as well. So definitely can't be a good day of trade on a day like this. Larsen & Toubro, of course, the numbers was what has disappointed the street, especially on the guidance front going forward, as well as on the order book front. So those are a couple of factors weighing down on L&T. Let's pull up a Nifty Bank down around 1/3% as well, because let's talk about some sectors which are weighing down on markets. You're also seeing the Nifty FMCG, which is taking a cut of almost 1% as well in trade. So you're seeing pressure across the board again, outside of auto and PSU banks, which are holding up fairly well. You're looking at a cut in pharma, which is down 1%, metals also down by a similar number, and energy, infra, and PSE. Surprisingly, the PSU bank index is holding in the green, but the PSE index well in the red, 1.5% lower. Let's pull up the constituents of the PSE index, because that's going to be very interesting to see as to what within the PSE index is doing badly. There you go. And Oil India, Power Finance, NHPC, BHEL, it's been the same kind of names through this week, which are putting pressure on the Nifty PSE index. So that one in focus as well. I want to quickly just mark out, before we go to our guest, I want to quickly just mark out the Nifty mid cap and small cap indices. The Nifty mid cap largely in line with the Nifty 50, down around 0.7% or thereabouts. But look at the pressure on small cap. Small cap is under a bit of pressure, down roughly 1% plus now in trade. And continues to slide. It's been that kind of a day. Let me though welcome on board George Alexander Muthoot, who's the Managing Director at Muthoot Finance. Plenty happening there. Of course, the stock also taking a bit of a battering in trade. Firstly, welcome Mr. Muthoot to NDTV Profit. First off, I want to try and understand from you, is there a violation that Muthoot has done of the income tax provisions or of any of the guidances issued by the RBI in their letter to you?
No, there is no violation in the Income Tax Act. The guidances from the RBI was not clear. That is why there was some grey confusion. So now the RBI has now clarified that going forward, everything should, all these 20,000 should be given in by bank transfers only. So there was no violation till now.
Understood. So are you telling me that this was unclear in the past, and therefore, while you were not in violation, other industry players were in violation?
We have been inspected by the RBI for the last 15 years. So everywhere there is inspection, and this something violation has not been there.
Okay, okay, understood. So why is it that the RBI has written to you if there are no violations?
Sorry, that is something which I want to clarify.
Yes, please.
RBI has not written a letter to us.
Okay.
They have given a clarification to all the NBFCs, big, small, listed, unlisted. Everybody has been instructed not to give loans, not only gold loans, any loans above 20,000 in cash. Understood? It is not for Muthoot Finance. It is for all the universal NBFCs.
I take your point, and therefore, do you have a very good ear to the ground? Of course. Do you therefore suggest that this is a common industry practice of giving cash over 20,000 rupees in terms of loans?
It is just a convenience to customer. That is all. Some customers ask them. It is not everybody is given about 20,000 in cash, etc. No way. No way. About 2 lakhs is always by check compulsorily. Some people, when they request, we give it as cash. So now there is a clarified. It is not to be done. It will not be done. Simple as that. Most of all the customers actually transfer their amounts through. All the customers transfer their amount through the bank only nowadays. So it is very easy for us to now do it.
Sure. And
No, it is not a challenge at all. Right from Demon time, most of the customers, big and small, they have been starting to use the online transfers, etc. So it is not an issue. It is just some inconvenience. So because for a business impact also, it is not going to impact because all the NBFCs are going to do this.
Sure. No, I want to try and understand and gauge industry and how it operates. What percentage, sir, of your loans do you disburse in cash typically in a year?
Below 20,000, yes, people ask for cash, we give. Even below 20,000, if they want a bank, it's very insignificant amount only.
Okay, okay, understood. And is that also largely how the industry works?
It is just a customer convenience, that's all.
Okay.
Anyway, customer is coming to the branch, it's not done online. Customer comes to the branch, brings his gold. Sometimes they ask for cash, we give cash, simple as that. Now we say, no, you take it through your bank account, that is fine. That's not an issue there at all.
Okay, so therefore, do you believe it's actually advantageous to you because you have been complying?
Probably some inconvenience to small customers. Probably a few of them may go to unorganized money lender, etc. That is far and few only.
Sure,
that's the only thing that can happen.
Okay, understood. And with regard to this gold loan business has been in focus since March. We had another player in the gold loan business and their business was embargoed now by the RBI. Several concerns at that point of time with regard to gold loans, and when we had spoken to the player as well as to some of the other players, they had suggested that there are several players engaging and it's pretty much common industry practice. Do you therefore believe that there are any concerns with regard to the overall gold loan business in India, the LTV and the like?
So I like to clarify this point. See, most of the gold loan NBFCs were operating or headquartered in Kerala, and they were inspected by the Reserve Bank of India, Trivandrum, for the last 15 years. There has not been any serious violations till now, and no such violation, no such action like it was taken for an individual company in March has ever happened in the last 15 years in the gold loan NBFC. The first time it happened was in March. So several violations were noted. One of that was also this cash also. So now they clarified, don't give cash. Other than that, the other violations are all not related to this. They are different, and that will be taken up separately by the RBI.
Sure. So you're telling me your systems and processes are robust and there will be absolutely no impact of this on on your systems, on your processes?
No impact. So we have not given any guidance change also. We have given a guidance of 15%. I think we stick to that 15% guidance growth also for the next year.
Understood, understood. Thank you so much, sir. It's been a pleasure speaking with you and breaking this down with you. Thank you. We appreciate you coming in. Right, that was George Alexander Muthoot, who's the MD at Muthoot Finance. Let's pull up that stock. Let's try and see as to what's happening there. Clearly under some bit of pressure, in fact, but off the day's low for sure, but still down 5%. He suggests there's absolutely no impact. He's suggesting that his processes, systems at Muthoot Finance are solid, robust, and that there is really no change of system or process required simply because they don't give loans above 20,000 rupees. This letter, not specifically written to them, is what we've come to understand, and it's written to the industry at large. He believes that there are some players in the industry which are not following this provision, but now with this clarification, the provision is being followed. That is one. And why, the reason why they've possibly RBI has put this out is because this has been a gray area for them, and therefore they've come out and clarified their position to say that no cash disbursals above 20,000 rupees to be made against gold. Anyway, it's time to slip into a very short break. With that, we'll see you on the other side. We have another management coming in and speaking with us. Stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit.
Welcome back. You're watching the Small and Mid Cap show here on NDTV Profit. I want to quickly put a check on the mid and small cap indices because that's something we've not been able to cover well enough. Let's pull up the Nifty Mid Cap 150, try and see where it's standing at, around largely in line with the Nifty 50, honestly. But we're seeing some pressure in certain names. Something like a Piramal Enterprises, that's down roughly 5% on the back of numbers as well as a restructure which has been announced. You also have Muthoot, which is down 4.5%. We spoke with the management at Muthoot. We also have Oil India and JSW Energy under some bit of pressure within the Nifty mid-cap. This is ones which are doing well. I want to first off try and flag off SKF India. Very, very strong set of numbers. Margins also up, and therefore that stock is up and away in trade, 7% higher. Let's pull up something like a Paytm. It's seen 2 days of lower circuit, and now we're seeing an upper circuit on Paytm. It's 5% up in trade. We're also seeing good traction in both Timken India as well as Kajaria Ceramics, both of which are up 3.5 to around 4% so those ones are the ones which are doing well. I want to also quickly flag off the Nifty small cap and in that universe what's really causing pressure, because that one is down over 1% in trade. You have something like a Campus Activewear which is doing very well, 5% up. You also have a Tata Investments which is up 5% or thereabouts. Within the losing pack, you have Manappuram, gold financiers clearly under a lot of pressure. We also have something like a Graphite which is down 3.5% and SW Solar which is also down, and a PCBL, Philip Carbon Black, which is also trading around 3.5% down. Westlife also seeing some pressure, 3% down. Some of these QSR names are particularly seeing some pressure. But let's quickly switch focus. We have Rajiv Samant, who's the CEO at Sula Vineyards, who joins us. Of course, Sula itself, let's pull up the stock as well. Try and see what moves that stock is making. There you go, it's down roughly 6% odd. But let's try and take an understanding from Rajiv as to what's transpired in this quarter, Rajiv, and how do you see this quarter when you're looking at it from a rear view lens?
Hi, Harsh. So, one thing that I want to emphasize is that wine it's a long-term story. It's been another quarter of growth. Sure, the margins don't look as good as a year ago, but you're going to have some blips along the road. But the long-term growth story is very much intact, and it remains a story of premiumization. So we've seen another quarter of strong double-digit growth in our premium wines. That's the way we see it moving ahead. So, we're very bullish for FY25 and the future. And yeah, that's our outlook on it.
Understood. So Rajiv, talk to us. Where has the margin hit come from? Because your gross margins seem to have expanded. So where do you think the impact has, or could you give us an understanding of where that impact has come from?
So, until now, we've been very dependent on our two main markets, which are Maharashtra and Karnataka, which are much more profitable markets. In this last quarter, and in fact, in the year in general, it's been our secondary markets, so I would call them non-traditional wine markets, that have grown faster than the traditional wine markets. Now, I believe that this is very good news for the long term. However, in the short term, is there going to be some margin impact due to this? Yes, there is. I've been maintaining it since the past 1 year, that margins had reached probably a peak, and we would see some margin moderation moving forward. That's what's happened in Q4. So, I would just point out that our fastest growing market this time was the CSD, was the Defense Forces. Terrific growth. Our second fastest growing market in the year was Rajasthan. Third fastest growing market is Telangana. All these markets where wine really was hardly a player. So it's very exciting for the future. However, does it mean some moderation in our margins in near term? Yes, absolutely it does. So that's what's playing out.
Understood. So where should therefore margins start to, should they be in the 24% kind of range itself? Or do you see more margin pressure going forward as you continue to expand?
See, in FY24, we've closed with EBITDA margin of around 30%. Now, I would term that to be an all-time high. No, I definitely don't see margins coming down to 24%, nothing close to that. But would I see maybe a couple hundred bips moderation in margins? Yes, that's totally likely. Of course, I don't have a crystal ball, but that's very much likely. That's still a pretty high margin business. And, our priority right now needs to be to drive wine consumption and penetration in non-traditional wine markets. That's where the future lies for Sula. So will that mean that in a few quarters, a little bit of margin moderation here and there? Yes, it's going to happen, but we want to ensure double-digit growth for our premium brands moving forward, just as happened in the rearview mirror. That's what we're focused on.
Sure, I take your point. So I just want to quickly clarify, couple of 100 basis points from the 30% benchmark, right?
Yes, very likely.
Understood. And that should play out over the next year or two, or you will continue to expand state-wise, and therefore for the foreseeable future you expect margins to be around the 27-28% kind of band.
I wouldn't be surprised, but of course I don't have a crystal ball, but I wouldn't be surprised with that.
Understood. Okay, so that's a good enough understanding. Now, just in terms of how sales is evolving, you remain reasonably confident of a double-digit plus kind, maybe a 15% plus kind of a growth rate going forward. Is that what one can start to pencil in, given these expansions you are starting to embark upon?
Let's differentiate between our premium portfolio and our regularly priced portfolio.
Okay.
What we've seen in this past year is, and in fact, in the past 3 years, is much faster growth in our premium portfolio than in our regular portfolio. So I wouldn't like to comment on the regular portfolio. Quite frankly, it is not a priority of the company. This is what I've been stating quarter in and quarter out. It's the premium price portfolio that's really our priority. There, yes, we are targeting strong double-digit growth. I don't want to comment on exactly 15% or not, but definitely strong double-digit growth in our premium portfolio. Sula wants to grow our wine sales at a price point of 700, 800 rupee plus. That's really where the money is made, and it's the most interesting part of the market. The 200, 300 rupee wine, there are too many players, there's too much competition, there's too much discounting. It is not a focus on quality, it's a focus on discounts for the consumer. That is not going to be our job. That has not been our job, and that will not be our job playing out. We continue to gain market share in the premium segment. That's the great news. Even though we have today, something more than 65% market share in that segment, we've continued to gain market share there. That's where we're going to concentrate.
Sure. Just for viewer perspective, Rajiv, I want to clarify 75% of your top line is the premium segment, right? So it is the major chunk of your revenue.
Yes.
Understood.
And it's more than 85% of the profit. So, when it comes to a profit mix, it's even more important and compelling for us. The other great story of Q4, that's maybe missed a bit, is our growth in our wine tourism. It's been a fabulous year for wine tourism. This is really important for us for the future for 3 reasons. The first is this is where we really introduce our wines to so many new consumers. And so it's extremely important. The second, this is a place where we mostly sell elite and premium wines. So it's highly, highly profitable for us. And it supports the overall business. So all of these things being so important, we have a very exciting pipeline in the works for expansion of our wine tourism business. Third part here is, the entire margin is ours there. There's no distribution margin, there's no retailer margin. We have just opened our first standalone tasting room outside one of our wine campuses that's close to Nasik Airport, and we have some exciting plans ahead.
Understood. And I want to try and break this down a little bit, on your wine tourism versus overall revenue. What's the kind of mix like, and how is it shaped up over the last couple of years? Because you've done plenty of expansion on the tourism side of things.
Yeah, so when you include the wine sales that we do at our tourism, we're looking at wine tourism having been somewhere between 15 to 20% of our revenue in FY24, close to 100 crores when you actually also take the wine sales. So it's pretty significant. And the margins there are very nice, much better, I would say, than our overall business margin. So that's why it's so important to us. I see in FY25 wine tourism going perhaps more than 20% of our overall business with extremely strong margins. So that's the way that I see the wine tourism playing out. So strong double-digit growth in wine tourism moving forward. That's what we are forecasting.
Very interesting. I also want a bit of a breakup, a bit of a flavor. Premium versus economy. What's the kind of margin like, just to try and understand profitability metrics?
Look, I won't get into too much detail, but it's far more profitable. Of course, these are two completely different categories. In the premium business, you are using wine grapes. In the economy segment, it's mainly these wines are made from table grapes. So from that point of view, in the grape cost, there is a bit of a difference, meaning it's costing you more for premium, but your realization per bottle, your ex-winery price per bottle for the premium is more than double, maybe even triple of your economy segment. So that's where the gross margin is very healthy.
Sure. And how's the pricing environment really?
Just approximately around a 10% higher, you can say, gross margin, 10 to 15% higher.
Right.
If one is around 75, the other is around 60, 65, but that's very high level numbers.
Understood. Got it. Okay. No, but that's very helpful for perspective. Also, with regard to, how is pricing evolving? I want to try and understand that because you're clearly hinting at a shortage in premium, and therefore you will have a very high pricing power there, I would assume. But I would like to understand how some of these metrics are working, and as you expand geographies, you try to grow the popularity of some of these things and at the same time price it. So how is the pricing environment really evolving?
Right. No, I have not alluded to any shortage of premium. I want to emphasize that we've had another fantastic harvest. So again, 2024, it's our fourth great harvest in a row in terms of quantity and quality. So supply is absolutely not an issue of any of our wines. There's no shortage of premium. In terms of pricing, we try to price appreciably below inflation. And we have been very fortunate that our cost of goods has not been rising as fast as some of our other alcobev players. So that's been very much in control. So pricing, 2 to 3% a year, that's really the way it's playing out. That's the way we expect it to continue, which we don't believe is going to be a burden on our consumers, and that much price we need to take. But very good news on the cost of goods front. Last year, we did see a packaging cost increase. This year, in fact, we've started the year with a packaging cost decrease, which will play out during the year.
Sure. Very, very quickly, with regard to CapEx, what's the plan like? Because I have just about 20 seconds.
We have about a 60 crore capex plan. Large part of that is in renewable. I want to quickly talk about the VAT refund. Also, we received around 90 crores of inflow just on that account in the last day of the financial year. So that's also going to play out nicely in Q1, etc. Interest costs should moderate nicely as a result of some of that being used to pay back debt.
Excellent. So lots to look forward to in FY25. It's been a pleasure speaking with you, sir, and understanding all of those metrics.
Cheers, Harsh.
Right, completely out of time on this one. We're going to, of course, please do stay tuned to NDTV Profit, but we're going to slip into a very short break. More on the other side. Stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in.
Good morning and thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Smriti Chaudhary, and we'll take you through the next half an hour of trade. Now, if you've got questions related to stocks, then you can send them to us on the WhatsApp number that should be flashing on your screen. In fact, it is, or in fact on any one of our social media platforms. Now, let's very quickly take a look at how the markets are faring, and it's not a very good picture right now because the benchmark Nifty 50 is trading with cuts of about 0.75%, and it is very close to the low point of the day, but holding above the 22,100 mark for now. The broader market's also seeing cuts, and in fact the mid-cap index is down about 0.8% as we speak, also at the low point of the day, and the small-cap index has seen exacerbated selling. It is down about 1.2% as of now. In terms of the sectoral indices, practically all of the sectors are in fact in the red. There's one that stands out, and that is the auto pack, and that's because a couple of stocks are doing incredibly well. The likes of Hero MotoCorp as well as TVS Motor on the back of results is doing quite well. But everything from oil and gas to energy to FMCG to metal to banking, all of them are lower. In fact, the PSU banking index is perhaps one of the better performers, down only about 0.33% right now. But we are focusing in on Larsen & Toubro because this is one of the worst performers, if not the worst performer on the benchmark index. It is down about 5% in trade today on the back of its earnings, but more importantly on the back of the outlook for the first half of the financial year. The question is, how is this different from what was expected earlier? Because it was always expected to be a weak first half. Anushi is joining in to tell you just that. Anushi, how is it? What is it that the management said that was different from what was expected, and why is the stock getting hammered?
Hey Alex, so if you look at the commentary that the management has given, a couple of factors that have played in for the company which has resulted in this 5% decline in stock price we are seeing. A is the order guidance which came in for FY25. As you correctly mentioned, that the street was already anticipating for a H1 FY25 to be weak with the union elections in play over here. Again, if you look at the Q4 also, the effects had already started playing in, about 5% of a dip in the order inflows. But what was not anticipated was the management trimming the order inflow guidance from 20% last year to 10% this time. So this was a major factor which has resulted in the street seeing the kind of decline we are looking at. What this is on the domestic side that we are factoring this play coming as. What on the international side also, if you look at the overall growth across FY24, 89% of a growth in the international orders, and a major contributor to this was the Middle East region in the hydrocarbon space, with Saudi Aramco ramping up its order intakes over here. But now going forward, it is anticipated that the Middle East are tightening their spend going forward. So it is going to be difficult for L&T to be able to maintain the kind of trajectory that they had last year, again raising concerns on both the domestic and the international side as well. Next is on the margins also, if you have to look at. So what happened was last year also a lot of legacy orders were in play which were in low margin in nature. So again, going forward in FY25, what was anticipated was that the higher margin orders would be executed, which would lead to some kind of an improvement over here. But the management again guided for a flat YOY margins, which again, now the street was pegging for in a different direction. So that has also led. But what should not be missed out is the kind of growth that the company has displayed, 15% of a growth over the year, and they're maintaining this going forward as well. Even if you look at the overall healthy order book, that saw about a healthy order growth of 31%. So a high base also plays in when we are looking at FY25. In fact, Citi also believes that this 10% guidance that was given was on a strong base and is a confident booster going forward. So these are all the factors that we should be looking out for L&T.
All right, thank you so much, Anushi, for that. And on that note, let me introduce you to the guests for today. We have Ashish Maheshwari of Arihant Capital Market and Osho Krishnan of Angel One joining in on the show today. Thank you so much for joining us on the show. And Ashish, I'm going to come to you first on L&T. We saw the results pretty good in terms of numbers, but outlook remains weak, especially the one that Anushi mentioned about the trim in order book that they're expecting going forward from 20% to 10%, and that seems to have upset the markets as well. Brokerages also seem to have changed their rating to a sell now on L&T. How are you viewing this, and if there are any price targets that you have on the counter?
Yes, I agree with you. Though numbers were good, 4,400 crore profit was one of the record profit they have declared. But the future outlook is quite bleak, if you ask me. Because one thing we should not forget that 45% of their revenue come from international market. And international market also, if we see 70% come from West Asia and Middle East. And the way geopolitical issues are happening in these countries across the board, I don't think so any major order will flow to the company. And maybe they are talking about one quarter, I'm expecting at least in first half of the year. So, like we have seen only 25,000 crore worth of international order teams in this quarter, which are one of the lowest maybe. So, this is one major reason why market is worried for this. Now, second issue is as this is election year for election time in India also. So, not many bigger orders will flow as far as government sectors is concerned, which is primarily doing a lot of capex compared to private sector. So these are the factors which may give another tailwind for this company. There's no such tailwinds available. Only headwinds are there, international and domestic side both. So I'm expecting another bleak quarter numbers will come in as far as Q1 of FY25 is concerned, and that's what market is getting cognizance to also. So in my view, also the stock can touch 3,000 rupees mark because we have seen sharp run up in this stock from 2,200 to 3,700 plus, and with this kind of grim outlook, stock is all set to even further dip.
Very quickly, just to follow up to that, if it does reach that 3,000 mark, would you buy and would you wait till that happens, or would you keep nibbling?
I like to buy at 3,000 rupees mark because nothing wrong with the company as such. They will keep on growing because almost 4,75,000 crore worth of executable order book they are sitting on. So there's no dearth of executable orders. Only order inflows are slowing down, which is a phenomenon for another 6 months.
It's time to start the query segment, and in fact a lot of you have already written in, and I'm going to take the first question from Neeraj. He's writing in from Hyderabad, and he's asking about MTAR Tech, which is down in trade today, down about 0.8% or thereabouts, trading at just above 1,800. He's looking at a long-term outlook for this. So Ashish, I'll come back to you on the fundamentals. Would you suggest a buy at this point?
See, of late, this stock is not giving the kind of returns which it has given. From 1660 stock went up to 2,900 mark, and we have seen continuous sale off coming in this particular stock because some amount of selling is coming in even in other defense related stock and private sector. In fact, none of those stocks are really performing in this particular sector. So my suggestion will be to wait for fresh entry in this stock. My entry level will be around 1,700, which will be almost 52-week low at this stock. Nothing wrong with the company. Only thing is, as profit taking is happening, so let's not try to catch the falling eggs.
Right, got it. The next counter we're talking about is Grauer and Weil. It's a 4,000 crore market cap company. This one's from Ramesh from Chennai. They say they bought the counter at a price of 87 rupees. It's currently trading at around 91 rupees. Osho, if you can tell us some technical levels on this specific counter. They have a little bit of profit here. The counter seems to have given 60% returns in the last 6 months, but in a bit of a downtrend right now. What are the key levels you should watch out for?
Can you please name the stock once again?
It's Grauer and Weil.
Yeah, it's spelled as G-R-A-U-E-R, Grauer and Weil, W-E-I-L. The stock is currently trading at 91.1.
So I guess this one is listed on BSE. That's why I don't have the chart for this counter. So I don't have a track for this counter, but so I won't be able to give a proper view on this space.
Okay, there's another counter that we have from the same the same viewer who's written to us from Ramesh. They're talking about CG Power. They say they have an averaging of 300 rupees. We saw the company come out with its results yesterday, and the counter is slightly lower today in trade. Osho, if you can pull up the chart for CG Power and tell us if this is a hold for you.
See, overall, CG Power has given a very strong breakout in the last 2 trading sessions, approximately around the zone of 550, 560 odd levels. And I'm expecting the momentum to continue on the higher end. On a very optimistic note, I'm expecting a target of nearly 620, but not on a vertical basis. There can be some kind of blips or profit booking that can be seen. But on the lower end, again, 550 to 545 should be acting as a support. And on the higher end, 620 to 640 is the target zone. So one should try to accumulate this counter on any dip towards 550, 545 for short-term perspective. But for even medium and longer-term duration, the counter is very positive and is having a very strong technical setup.
Got it. All right, the next question is coming from Mohit, and he's writing in from Ludhiana. He's asking about campus activewear, which is what are levels of 284. Ashish, this is a question for you. The stock is up and about in trade today, as much as 5%, and it's still trading, however, below his buy price. If I remember correctly, there was a little bit of a question mark about the operational performance of this company. What do you make of the company, and should he hold on?
I think after a few lackluster quarters, December quarter was good for campus activewear, where they did a profit of around 24 crore. But still, I'm not that bullish as far as campus activewear is concerned. I think whatever the euphoria related to this counter was, this is almost over now. And instead of this, metro shoes will be a better bet if you want to remain in the same segment, because the kind of profitability growth metro shoes is delivering is much higher than what campus is expected to deliver going forward also. And there's a tough competition with new players coming in and sportswear. So metro at 1,000 rupees will be a better bet.
All right. The next counter we're talking about is Sula, and this one's from Ramesh from Hyderabad. They bought the shares at a price of 510 rupees. It's in a bit of a pressure today, down about 6.5%, trading close to 506 rupees. Ashish, on Sula, we saw the results, not great. Revenue, single-digit growth, margins contracted. But premiumization is a play that all the alcoholic beverage companies are depending on. So from a longer term perspective, would you suggest holding on to the counter?
The kind of revenue growth, just 3.6% kind of revenue growth, and this kind of valuation are still not justified. I was listening the commentary on your channel also of management, though they are not that bearish. But in my view, what kind of growth market was expecting from them is not forthcoming as such. And not only them, we have seen other wine players also. They are, be it USL or UBL, etc., also not doing that great as far as numbers are concerned. So my suggestion will be to exit from this stock, or look at fresh entry maybe at 425 to 450. But I'm expecting some more correction.
Interesting. All right. And it also depends on your preference if you are above legal age, of course. In the summer, I don't know about wine versus beer. Let's talk about the interview, though. My colleague Harsh spoke with Rajiv Samant, who's the Chief Executive Officer of Sula Vineyard. Ashish was pointing out that he watched it. I'd encourage you to watch it as well. Now, let's talk about Suresh's question. He's writing in from Chalakudi in Kerala, and he's asking about PPL Pharma, which he's bought at levels of 142. The question is for you, Osho. We're talking about PPL Pharma, 150 shares bought at levels of 142. Would you hold or sell?
This counter is very positive. We have seen a V-shaped recovery in PPL Pharma in the last week. So I'm expecting that from here onwards, there is ample amount of opportunity on the higher end for PPL Pharma. The immediate target that one can expect is around 165. And on the downside, there is a very strong breakout, or even called as a neckline support, around the zone of 142, 145. So this is a zone where one can expect a strong demand or a buying traction in this counter. On the higher end, 165, 168 is the immediate level where one can look to book their profits from short-term perspective.
All right, we'll slip into a short break now, but we'll take more queries on the other side. Stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. टूटना मना है.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website NDTV.
Welcome back. You're watching Ask Profit on NDTV Profit. Let's dive into the queries again. This one's on Voltas. The question is from Rosemary. They say they bought the counter at a price of 1,492 rupees. It's below that. It's trading close to 1,289 rupees. We saw the results come in yesterday. But let's take a technical check on this. Osho, what are the levels that you should watch out for, and what should somebody do considering they bought at slightly elevated levels?
I think you might just
Yes. See, there has been a very strong vertical rally that has been seen in Voltas from the zone of 1100 towards 1500. So now on technical basis, there can be some profit booking or time-wise correction that should happen and that should be considered healthy. But yes, taking the position that they have taken the position at the lifetime high for Voltas around 1500. So there can be some time that they have to spare for the counter to rebound towards the same zone. But I'm expecting for short-term perspective, 1250 should be acting as a very strong support zone for this counter. And on the higher end, I am expecting a target of nearly 1400 for short-term perspective. But again, reaching the price of 1500 will require a lot of time.
Got it. I'm coming back to you, Osho, on this next one. We've got a question from Swastik on BEL. He's got 2,000 shares purchased at a price of 160. The stock is currently trading at 230, so he's making a pretty penny here. He's asking whether he should hold on or buy more at this point.
See, certainly if there has been a very decent upsurge from the price where he has bought the position, so I will be suggesting to better book some of the profits from here onwards. Try to maintain a 50% kind of a profit booking and try to gauge the momentum on the lower end. If there is any dip towards the zone of 210 to 215 in the near period, then one should try to accumulate the counter once again. Overall, the setup is very, very bullish and it is having a cycle of higher highs, higher lows, for which the support lies around the zone of 210. So once the price comes down to 210, one should definitely try to buy this counter once more time.
All right, the next counter is NIIT. This is a short-term query again. This is from Saina from New Delhi. They say they bought the counter at a price of 106 rupees. It has fallen quite a bit in the last couple of sessions. It's down about 7% in the last 5 sessions, trading close to 98 rupees. Osho, what are the key levels you should watch out for in this counter?
See, overall, this counter is into a corrective phase. I'm not expecting a very strong resurge or rebounds from in this space for the time being. But on the higher end, again, a very stiff resistance is placed around the zone of 110, which is coinciding with the 200-day SMA. So until it breaches the zone of 110, it is likely to have some kind of pressure within. So better to wait for those levels to surpass, and then only it might attract some kind of buying traction.
Got it. Okay, unfortunately, we've got a question on several stocks. I will have to reduce it myself. I would encourage our viewers to stick to one stock per query. Satya is asking about Borosil Renewable out of a list of stocks, and he's looking at whether or not to add this for the next 1 to 2 years and whether or not 20 to 25% upside is possible. Ashish, based on the fundamentals, is that a possibility?
See, instead of Borosil Renewable, I'll like to go with SW Solar. In my view, companies which are manufacturing solar panel are facing tough competition in domestic market. Instead of this, those companies which are doing EPC projects is tend to gain more. And Sterling Wilson, our Reliance Group company, they have a lot of in-house projects which are captive, and the government focuses more on solar energy as such. So this will have, benefit more SW Solar instead of Borosil Renewable. And we have seen good correction also happened in Borosil Renewals from high compared to SW Solar, which is doing much better.
Why don't I just tell you what he has identified? You've already spoken about Sula and you've said that it's not a buy. The others, apart from Borosil Renewable, he's identified as Motherson Sumi Wiring and Orient Electric. Out of these, do you anticipate that there's either one of these can achieve to 20 to 25% upside in the next 1 to 2 years?
Yeah, I think Motherson Sumi can be a better bet for 20% upside if you're looking at for a couple of years. Orient Electric is my pick number 2 in this segment. This company will also do well because the kind of demand which is building up in this particular sector. So whether it's a fan or cables, etc., Orient Electric will also do well.
The next counter we're talking about is Geo Finance. This is from Bharat. Now, Osho, we're in an election period, and of course, there's volatility, and that seems to be scaring this viewer. They say now, obviously, the counter is trading close to 350, but has fallen about 9% in the last week itself. Going forward, a month to go for the counting day. How do you see this counter behaving? If you can give us some key levels as well to watch out for in this.
See, overall, there can be some kind of jitters that can be seen in Geofinance for the timing, but looking at the overall setup, it has surged a lot in the last 3 to 4 trading months. So there can be some kind of profit booking that can happen, but looking at the recent development, as it had plunged below the swing low of nearly 355, 358 odd levels. So I'm expecting the time it breaches the 50-day exponential moving average, which is around the same levels, 348, then this counter can even go down towards the zone of 325 to 320. So there can be a decent profit booking that can be seen for the short-term perspective, but overall the longer duration remains very positive and buoyant for this counter. So any dip towards 320 will again augur buy for the buyers for medium to short-term perspective.
This is a question specifically for Ashish, and this is from Ravi Kumar. He's asking about Balaji Mines, which he's bought 100 shares off at levels of 2,300. He's asking whether to hold for the long term, and okay, his definition of long term is 1 year.
Yeah, I think if you're having 1 year time horizon, you can continue to hold this stock. This is much steady stock in especially the chemical space compared to other peers where they are not going anywhere. So surely you can look at this stock for 1 year time frame. My target will be 2,700.
All right. And unfortunately, we are completely out of time on this edition of Ask Profit. Thank you so much, Ashish and Osho, for joining in on the show and for answering these questions for our viewers. And viewers, hope you were able to take your questions today. But if not, we'll definitely try and take them tomorrow. But don't go anywhere. We have lots more lined up for you on NDTV Profit.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Future.
Hello and welcome. We have with us the management of Arvind Limited to talk to us about the numbers. You're watching NDTV Profit. I'm Harsh Saita. We have with us Mr. Puneet Lalbhai, who's the Vice Chairman at Arvind Limited, to talk to us about the Q4 numbers as well as what one can expect from Q1 as well as FY25 full year. Welcome to NDTV Profit, sir.
Pleasure to be here.
Hi. So, sir, first off, let me try and break down this quarter. What's exactly transpiring with regard to margins and where can one see numbers start to stack up for FY25? What's the expectation like?
So I think it was a very strong quarter. We had revenue growth up to above 10%, which is the first quarter in many quarters where we've seen such growth. The growth was fueled by both our volume growth in garments and our very good performance in the advanced materials division. I feel that the year was a story of two halves. The first half of the year was very low demand, brands being saddled by inventories. We worked through all of that, and towards the second half of the year, demand started reviving. I believe that going into the next year, that better demand scenario is likely to continue. AMD continues to remain strong, so we should see some growth over last year overall next year, with it being driven by the same two factors: growth in volumes, especially on the garments front, on the conventional textiles business, and growth in AMD continuing to be strong.
Right, sir. And with regard to raw material, how's the raw material cost evolution playing out? If you can talk to us about that and set us the context for FY25. How has, of course, April already been, but how do you anticipate the numbers shape up in terms of FY25? Will raw material prices remain benign? Is that the expectation?
So what we saw last year was dramatic raw material deflation. And that led to the top line on the entire financial year being slightly negative. I think most of the raw material deflation is behind us now. And prices are going to remain range bound and hopefully reasonably stable. That is our view at the moment. So we don't see any raw material linked impact on top line going into the new year.
Understood. And therefore, margins should continue to get better for you from here. Is that how one can look at it? How do you look at the evolution of margins? And what are those levers outside of RM which you feel will impact margins?
If you look at the last 6 to 8 quarters, we've been working very hard on improving margin, and we've shown margin improvement quarter on quarter. I feel that there is still headroom for margins to improve further. However, now it will have to be it will sort of be harder and harder to improve margins. If you look at the return on capital employed profile, that should improve significantly as the garment portfolio grows, as AMD grows. These are inherently higher return on capital employed businesses. And so I would like to look at that metric as the primary return metric that will sort of improve significantly going forward.
Understood. And so what would the composition be in terms of the mix of these businesses versus your traditional business? What would that mix be like, and where would it evolve maybe in the next 2 to 3 years? Where do you see it going?
If you look at the advanced materials division, today it is about 18% of the overall turnover of the company. It is growing at a much faster clip than the traditional textile business. So say 2 to 3 years down the line, we should be in that 25-30% of overall business compared to this 18% now.
Okay, and with regard to just top line, what would the guidance be for FY25?
So we should try and push for that double-digit growth. It will be in the very early double digits, but that from such a base would be a good achievement if we are able to achieve. So that's our target. Hopefully we will succeed.
Understood. So your guidance was to bring down debt to 400 crore. How has that evolved, and where does it go in FY25?
So we had guided to bring down long-term debt to 400 crores. I think we've done better than that. So we reduced about 250 crores of long-term debt last year. And we are now very comfortable with where debt is. So we are now not very focused on further debt reduction. As the business grows, more working capital will be required. And so the short-term debt might actually increase. But we are very clear that we don't want to lever the company in any way. So we are growing mostly through internal accruals. And now the free cash flow that the business generates, we would like to deploy towards growth rather than paring down debt. We feel that debt is now in a very safe territory.
Got it. And so understood. So you'll go back towards reinvesting in growth. So what are the growth plans? What have you done in FY24 in terms of fresh capex, and do you see more significant capex come through? You've guided for 600 crore odd of capex over the next 2 years or so, if I'm not wrong. How much of that is already done? Could you give us some color on that, and how much yet to go?
So out of the 600 crores, we did around 260, 270 last year. We should complete the 600 this year and perhaps even exceed it slightly because we are seeing a few opportunities. And all of this capex will be done by cash flow that comes from internal accounts.
Understood. I just want to coax you a little bit more on that double-digit growth number that you're expecting to clock. Possible to be mid-teens maybe in FY25, just to try and get around that 9,000 crore kind of top line number?
So we should try and approach 9,000 crore, but it will be closer to 10 than 15. And I think 10% growth in this market is a good achievement.
Fair point, fair point. So you will have relatively a decent amount of cash flow if you achieve the 9,000 crore kind of mark, because your margins at roughly 11%, even if those don't go up, should give you pretty much ample cushion to fund this 600 crore of capex. Is that how one can look at it?
Correct. And there will be a capex plan for next year also, for which we will deploy whatever balance we will have left. So
understood.
We are, and most of the capex is going towards growth in garments, so verticalization of our business, and towards A&D. These are the two areas where we are investing.
Yeah, so faster growth. And where does it take your capacity utilization in these pockets? Do you start to immediately make efficient your capacity utilization as soon as this capex comes on stream?
So different businesses have a different sort of rate of capacity utilization. In garments, it takes time to ramp up. Utilization is high, but then efficiency ramps up. So all the machines are almost utilized from day one, but then, you start at a low efficiency and go to a higher efficiency. So productivity ramps up slower. Whereas in AMD, you have a much faster ramp up of efficiency, but it takes slightly longer to achieve 100% utilization of the asset. So we would say that currently we are at high utilization across the board. Perhaps there is a 10-12% improvement in the garments currently, which we should achieve during the given current year. And the capex that we are deploying this year should come under utilization and come under revenue generation next year.
Got it. Just with regard to how volume momentum is playing out, as well as how demand is really playing out in the market, could you give us a flavor of how demand is currently and where do you forecast FY25 to be? It's an extremely volatile environment overall, at least. And with all the elections across the globe which are coming to the fore, how do you see demand and how do you forecast demand?
So demand is cautiously optimistic. See, we went through a very difficult phase where there was a huge amount of inventory correction required. So instead of buying, our customers were talking about cleaning out inventory. That conversation has now pivoted towards some small growth. So comparatively, the situation is better. However, it is, as you rightly mentioned, a very uncertain environment. So it is not a very gung-ho situation, but compared to the past, it's a better situation. To add a little more nuance, the geographical sourcing strategy of brands is undergoing change. They have to decouple from China in a big way. The first beneficiaries of that decoupling were Vietnam and Bangladesh. However, now they are fully saturated. So brands, global brands are looking at India as a sourcing location. It is up to the Indian industry to build enough garmenting capacity to be able to take that demand. So from that perspective, demand is interesting to robust because of the need of brands to index on newer sourcing geographies. So that should help us fuel growth. And that's where we are deploying capital as well.
Understood.
And advanced materials is not so linked to, because it focuses on core and essential sectors like defense, like infrastructure, like mobility. The global ups and downs are not so heavy on that business. So there also, because a lot of development is to happen in India, and because we have a very competitive position for the export market, we expect to grow there. So for both the segments where we are investing, we have good reasons why we should be able to.
Sure. And with regard to volume versus pricing, both on textiles as well as advanced materials, how is that shaping up? The double-digit growth largely coming from volume?
It should largely come from volume because the raw material is now stable and we don't expect any dramatic shifts there during the course of this year. So most of the growth should come through higher volumes or a slightly better product mix.
I know I'm really pushing my time here. Just last quick one, the return on capital around mid-teens, would that be optimistic or would that be realistic?
So we achieved close to mid-teens this quarter. We would like to see if we can achieve somewhere close to that for the year. Of course, second half of the year is always better in our case than the first half of the year. So we are driving towards that number, perhaps slightly less than mid-teens, but significantly better from where it is now.
Point taken. Thank you so much, sir, for speaking with us, taking out time. Really a pleasure talking to you. It's been a good interaction.
Thank you.
Thank you. Well, with that, we'll slip into a very short break. More on the other side. Stay tuned to NDTV Profit.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video and other multimodal technologies. These new LLMs can understand human voices, accents and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages, and the way we speak to each other, in mixed coding, where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead, as AI can unlock access to computing, apps, and that entire ecosystem for a large number of people.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies.
Welcome back to NDTV Profit. We are now joined by the management of Tata Power to get some perspective on its latest Q4 numbers and the outlook for the company. Joining us today is Dr. Praveer Sinha, who is the CEO and Managing Director at Tata Power. Good morning, Dr. Sinha.
Good morning. Thank you for having me in your show.
Yes. So congratulations on the Q4 numbers. My first question would be, what was your perspective on how the quarter went by for the company?
Thank you. In fact, Q4 has been very good. And what we have seen is that there is huge consistency in the way the company has been operating. Its performance has been consistently improving. And this is the 18th consecutive quarter in which we have seen the growth in PAT. We continue to work on all our operational plans and operational parameters. And those get reflected in the financial results that we see every quarter. Very good foundation laid for future growth. And we expect that the speed of growth in subsequent quarters will be better than what we have seen in the earlier quarters. And many of the initiatives that we have done, whether it is the distribution in Odisha, where we have stabilized the operations and huge improvements will be seen in subsequent quarters. Similarly, the 4 gigawatt manufacturing plant for solar cells and modules. The module plant is already operational and the cell will become operational next month. So I think the benefits of all that will start coming in the subsequent quarter. Similarly, capacity addition in our renewable projects, where we have very much focused both for utility scale as well as group captive. You will see much better results with more projects getting implemented. Rooftop business is doing exceedingly well. So I think all in all, our existing as well as new businesses have started showing results. And in this year, you will start seeing the full impact of many of these new investments that we have made.
Okay. My next question is regarding margins. Now, there was a slight contraction this quarter when compared to the previous year. What could be attributed to this contraction, and what's the company's expectations or maybe a range for FY25?
So margins, we need to see more on infrastructure projects on a yearly basis rather than on a quarterly basis, because it's a question of timing of some of the investments and costs that gets incurred. So if you see on a 12-month basis, our margins have actually improved. And we constantly endeavor to see that there is a better improvement in the margins. And you would see that now that many of the businesses have stabilized, like I mentioned, Odisha and the new manufacturing, you will see the results of that will start coming in the next quarter onward. So you will only see improvement in the margins. And let's not just look at a quarterly basis, but on a 12-month basis, you would find that we are doing very good.
And what's the kind of range that the company wants to achieve for maybe FY25?
Well, we don't give any forward-looking numbers, but it will be better than what we have performed in the last year.
Okay. My next question is about the revenue mix. Now, on a year-on-year basis, there was a shift. Transmission contribution was down while there was growth seen in the renewables and generation. What's the targeted mix that the company has for the near term?
So if you see our revenue mix today, there is more revenue that comes out of transmission and distribution business, mainly in the distribution, because it is about sale of power. But what is important in power business is not the revenue, because the revenue is guided by the cost of input material, coal or gas. But it is more about the EBITDA and the PAT of the company. And in both of them, we have shown substantial improvement. Our EBITDA for the year has gone up by more than 27%. Our PAT has gone up by more than 10%, 11%. So I think what is important is about the consistency of the performance. And we have shown that consistently we have improved the performance. And that's why the company is in very solid foundation and will keep on improving year after year.
Yes. And in terms of growth for the generation business, what's the expected growth that the company has? Would it be single digit or double digit?
Well, in generation, we are already having renewable of 4.5 gigawatt and another 5.5 is under implementation. So we'll become 10 gigawatt virtually in next 12 to 24 months. And we will, of course, add more projects during this year. We have now taken a call that we will do more of 24/7 power supply solutions, which will be a mix of solar, wind and storage battery. And at some stage when our pumped hydro comes up, that will get bundled into this power. So you will see the capacity addition and growth happening more in the clean energy space. And we are very focused on that to improve our performance.
My next question is the solar utility EPC order book, currently at 13,385. What's the execution timeline of the current order book, and how much of revenue can we expect to realize in FY25?
So in the FY25, we are expecting nearly 4 gigawatt of projects to be implemented. Nearly 2.5 will be third-party EPC projects, and 1.5 will be our own internal projects. And similar quantity will get implemented in the subsequent year, which primarily will be our own utility scale projects. So I think we are all geared up to do enhanced level of implementation of projects. And you will see that over the next few years, all the projects that we have in the pipeline will get implemented, and many of the new projects that we get in this year in FY25 will also get implemented in 26 and 27. So I think we have a very healthy order book. We will implement all of them and ensure that we get better margins while implementing these projects.
And what is the per megawatt revenue run rate for this solar segment?
As I mentioned to you, now we are more focused on hybrid solutions. So those are a mix of solar and wind, and solar, wind and storage. And it also depends on the location where these projects are being set up. A project in Rajasthan will be very different in structure than what it is in Karnataka or in Gujarat or in Tamil Nadu. So I think we need to look at each one of them in terms of how efficient they are in terms of the generation cost and how efficiently we can generate and supply to the consumers.
And what kind of order book growth, what kind of order inflows is the company seeing in Q1, and what are the expectations for FY25?
So we have a plan which we have shared in the analyst call some few months back. And that clearly brings out what is our growth plan and how we will be doing it over a period of time. And of course, we don't break it on quarter, but more on an annual basis, because many of the bids sometimes gets delayed in terms of their auctioning or their opening of the bids. So, but we are very confident that we will build a very healthy pipeline of projects during the year, considering that a huge amount of bids are expected to come in this year.
My next question is regarding the 4.3 gigawatt solar module plant that did start. What were the revenues realized from the plant itself? And is the plant currently fully commercialized, or is just a phase-wise production currently?
So the 4 gigawatt module plant is fully operational. We supplied nearly 150 megawatt of modules from the plant in the month of March. And now regularly the production is taking place and dispatches are happening. So the module plant is fully operational, and we will see in this full year the full visibility of the module production. Our cell plant will get operational next month, and we do expect it will take about 2-3 months for it to stabilize. And hopefully by September, the plant will be fully operational. So I think you will start seeing the results of this plant in this year itself and also in the subsequent years.
And in terms of percentage of the self-produced panels, how much percentage is used in the company's group captive or the order book itself?
So out of the 4 gigawatt, nearly 3 will be consumed internally for our group captive, utility scale, as well as rooftop, and about 1 gigawatt we will be selling.
And we also wanted to get an update on the Odisha discoms. How have they been performing, and what's the profitability target that the company does have?
So Odisha discoms has been making profit right from day one, which is a big turnaround story of a public-private initiative in Odisha. It has also performed very well on all the operational and customer services parameters. And I think it has made profit. All the 4 discoms have made profit in last year also. It's about 300 odd crores. And going forward, this will further improve because many of the issues which were there regarding billing and collection have been resolved. And the full benefit will start coming from FY25 onwards.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages and the way we speak.
Hello and welcome to NDTV Profit. Today we have with us Mr. Suresh Sethi, the MD and CEO at Protein EGOV. Hello, sir, and good morning.
Good morning. How are you?
I'm good, sir. Thanks for joining us. Talking about the results, sir, results were pretty great. Revenue was up. However, there was a slight dilution in margins for the fourth quarter, while net profit was also a tad below on a QoQ basis. So what's your take on the results?
So let me start with the overall, company growth and the business growth. So the company posted a very healthy growth of 19% on revenue from operations. Our core business verticals grew strongly. In the space of taxation, the tax services grew by almost 12%. This was on the back of the fact that last year, the PAN card issuance, we crossed 5 crore PAN cards issued. And this was almost 25% higher than what we had done the previous year. Similarly, the pension services, we saw good growth of 14%. And this was again on the back of the fact that there's a huge headroom in this space. India being an underpenetrated pension society, we see this moving strongly year on year. And identity services showed a very robust growth of 62%. Again, reflecting the clear Digital India story, as more and more people are adopting digital, consuming services digitally, all your identity-related services are getting consumed. And we are uniquely positioned to offer all 4 facets of digital identity, be it e-sign, e-KYC, e-authentication, and online PAN validation. So there was a healthy growth all across. There was a dip in the margins, as you rightly said, compared to the last quarter. Part of it is also due to the fact that last quarter, same time, was clearly an area where there was a spike in some of the business volumes, and that in a turn, in a comparative sense, showed a dip. The overall profit came down comparatively again versus FY23, primarily for 2 large reasons. First of all, we continue to invest in developing new business verticals. As we had mentioned earlier, we are again supporting the new age digital public infrastructure framework and have moved into multiple areas, be it digital commerce, open finance, transport and mobility, health, agriculture were 2 new areas we went into last year. So our investments in these new businesses naturally are having an impact at the profit level. Secondly, we also had a one-off provision last year, which we had spoken about earlier. That also impacted. And lastly, because of a higher asset base, with all these investments, the depreciation impacted the profitability. But otherwise, on the top line, there was a healthy growth in the company.
Sure, sir. Further, you mentioned that profits and margins were a little down due to investment in new businesses. So what kind of margin range, broadly, do you expect in FY25?
So I would say the company, clearly the core businesses which contribute to almost 90% of the company's top line as of now, continue to perform well. As I said that in all these businesses, we see number one, strong headroom. So there is a lot of opportunity. And secondly, there is a continued growth. I'll just quickly touch upon them. PAN services, clearly PAN not being a saturation ID, unlike Aadhaar, we do find that there is a regular issuance of PAN every year. Last year, actually, our growth was significant. And in our country today, even more than 50 crore population don't have a PAN card. And there's a steady increase in youth getting into the workforce. So all these activities demand the requirement for a PAN card as you open your first bank account or you do a capital market transaction and so on. Similarly, CRA services, a very underpenetrated society. If we compare it to the developed world, we are also talking about the fact that only 6% of the private sector employees today have a pension account as compared to almost 70% in US. So this gives it again a huge headroom, and identity is clearly converging with all new areas of growth across the economy digitally. And that is where we see that existing businesses, which today are the bulwark, will continue to perform well. And new businesses, clearly we see adoption, especially in early stage, in ecosystems like ONDC, which have been one of the earlier DPIs to come into space in the space of digital commerce and transport and mobility. That is where we see a healthy growth. ONDC is today growing by almost at a transaction level by 20 to 30% month on month. So these new businesses will be stepping up and contributing more on the ODE side. We've also built a data stack atop our ID businesses, which clearly takes us into more value-added services on enabling end-to-end digital onboarding and digital lending journeys. We launched our Protean Rise last year, which was a complete API stack covering all foundational APIs plus APIs supporting the new DPIs. So that is again something we see playing well during the course of the year as we go forward.
Sir, in terms of PAN card issuance, you had mentioned that last year was a little uptick because the mandatory linking of Aadhaar and PAN cards, and that is why I think YOY business was down for PAN card. So, do you think that it will still go down going ahead, or will it stabilize at the current levels?
Actually, in PAN cards, we've seen that a 6 to 7 crore is a norm in terms of new card issuance. And that has held out over the last few years. And again, as I was saying, looking at the gap between the number of people who have PAN cards and who don't, which is like on an absolute sense across the country. And secondly, it's being a young demographic, as we all know in our country, as people are entering into their jobs, as people are entering into opening their first bank accounts. So the PAN cards being a requirement to open your bank account, it becomes very critical to people to apply for that. And therefore, we see a steady growth and there's significant headroom in our country. As I said, more than 35% of the Indian population today does not have a PAN card.
Sure, sir. Let me put some more light on the new businesses you mentioned. Pretty great work over there, but I just wanted to know whether are you already monetizing them, and if yes, which vertical or segment would be a higher say EBIT margin range, whether ONDC or cloud or any color on the new businesses segment?
Naturally, all businesses, first of all, I would say the ones we are investing into also are asset-light businesses. And from a margin perspective, when I look at the work we are doing in the space of open digital ecosystems, these are clearly areas in which our revenue streams come at two levels. One is at the infrastructure we've created, and one is where we work in a SaaS model for enabling consumer and corporate tech. Which, for example, in ONDC, we power the entire gateway and the registry on which the ecosystem runs. That is at an infra level. And we also build buyer and seller tech, which is more a SaaS model where we work in a B2B fashion. So ultimately, there are revenue streams which come from the infrastructure level and over the innovation layer, as we call it, when we talk about the buyer and seller tech. And these are businesses which will grow as the network adoption grows. Identity and building the value-added services on top of the foundational ID stack is definitely value-added and more margin accretive compared to providing, foundational services. So definitely the new businesses will have a good margin EBIT as we look at it, primarily for the fact that there is a value-added play in SaaS services and in any value-added stack that we build on top of the foundational identity stack.
Got that, sir. Again, in terms of new businesses, you mentioned that you will continue investing in such businesses, and because of which margins might take a hit. So can you quantify around, what kind of investments in quantitative terms are you expecting going ahead?
So see, primarily the investments have been done in the space of people and technology, because that is at the core of it. So if we look at India's, DPI framework, it has clearly been created on the back of open source technology, open standards, and Aadhaar and UPI, I would say, have been watershed moments in the way the Indian DPI architecture has come forth. So we have invested in people, one who are specialists in open source technology, and all the open source stacks that we are building, they are fungible in nature. So as we move from powering one ODE to another, most of the technology can be, carried across from one ecosystem to the other.
All right, we're cutting out of regular programming to talk about the latest numbers that have come through from the Association of Mutual Funds in India. They regularly, on a monthly basis, update the inflows and the outflows from mutual funds in India. And on a holistic basis, the mutual fund industry has seen quite the outflow of over 1.5 lakh crore rupees, and most of this, if not all of it, is accounted for by the outflow from fixed income mutual funds. The outflow in that category is accounting for about 2 lakh crore, very close to 2 lakh crore of the outflows. And a large part of this is in liquid mutual funds as well. So you will generally see a large amount of fluctuation at the start of a quarter and at the end of a quarter in liquid mutual funds. A large part of this is accounted for by institutional investors. But the key aspect to focus on is the equity category, the actively managed equity category. And you're seeing inflows of about 22,600 odd crore in equity as a whole, which is a heartening sign because there were a few expectations that the inflows could get affected by KYC norms that changed at the start of April. Now, as a result of which, there were several investors that were saying that they were finding it difficult to make fresh investments into mutual fund schemes. A large number of people, of course, were in what was called the registered KYC category, and they were able to transact in folios that they were already investing in. Now, as a whole, as I said, 22,600 crore into actively managed equity schemes. There is quite an interesting increase in large cap investments. So the large cap subcategory of actively managed schemes has gotten an inflow of about 2,127 crore rupees. Large and mid cap has also gotten an inflow of about 3,215 crore rupees. And what you saw in the previous month, which is a slight slowdown in the inflows into small and mid-cap actively managed schemes, has continued in the month of April as well, where for small caps as a whole, you're seeing an outflow of 94 crore rupees. And for mid-cap schemes, it's only an inflow of about 1,017 crore rupees. Now, what of a few of the other updates as a category, subcategory? The sectoral and thematic funds saw the largest inflows of close to 8,000 crore rupees, but there was also a new fund offered during the month which accounted for about 3,074 crore rupees, and that was the Baroda BNP Paribas Innovation Fund, which accounted for a large part of the inflows. Now, some of the other subcategories to focus on, and index funds have gotten inflows of about 1,800 crore rupees, and hybrid funds as a whole have gotten inflows of about 5,600 crore rupees or thereabouts. I'm wondering if we have Ashish Somaya, Chief Executive Officer of White Oak Capital, joining in. Ashish, thanks so much for taking the time. I was frankly anticipating that there would be a bit of a hit on account of the updated KYC norms. That doesn't seem to be the case. Is that a surprise to you, or were you expecting this to take place?
No, Alex, I know that there has been some concern on regularizing the KYC, but frankly, in all humility, I do believe that it got slightly overstated or exaggerated in terms of the eyeballs that it got. 97 to 98%. I mean, look, at any point in time, I think what was communicated is that 70% of the investors are KYC validated, etc. That is true, but in reality, one should be looking at the number of transactions. And through the month, when we have been monitoring, of course, we are not a very large player really, but when I talk to my peers, industry-wide, I think 97 to 98% of all transactions have actually gone through. So what happens is that when, let us say some re-KYCs need to be done, the fact is that the industry has an infrastructure where we are connected through our RTAs with the KRAs and validation goes through. Of course, some people have not given Aadhaar as their, big document, and for that Aadhaar needs to be plugged in. So it's a process. But if I were to look at it in transaction terms, I know for a fact 97 to 98% of all transactions actually went through.
Yeah.
So I am not very surprised that, the numbers are pretty much like it has been for previous months.
That's actually really good insight, because I guess the number indicates that there is no real jolt to the industry. And it's interesting trends, Ashish, because what we saw in the previous month, that is in the month of March, was that there is a bit of a deceleration into the inflows into actively managed mid-cap and small-cap schemes. And that seems to have borne out in the month of April as well, where for small caps as a subcategory, it's seen an outflow of 94 crore rupees. Not a large outflow, but in the context of what we've seen in the recent past, it is quite substantial. And a mid-cap funds have seen an inflow of about 1,000 crore rupees. Do you think that people are... So what, according to you, is driving this?
So I think, Alex, a couple of things to really look for. Look, I mean, when it comes to small cap, let us say you were looking at it in the end of, say, March, okay? And, there was concern because small cap index, if you were to look at March 2024 or even April 2024, if you take the last 1 year return, it would look like it is up by 60-odd%, correct? Now, but whenever somebody tells us that yes, last 1 year return is up 60%, it looks like it's gone up a lot, and I would not debate that. But you need to look back that in March 2024 or April 2024, if the small cap index is showing 1 year return of 60%, then we need to see exactly 1 year back where were we. And 1 year back, we were in the throes of Silicon Valley Bank, Signature Bank, which is now forgotten, but at that point in time, people thought it's the new cousin of Lehman Brothers. And you'll be surprised to know that, a lot of people might be surprised. In March 2023, by the way, indices were suppressed because of Silicon Valley and all of that stuff. But most people will be surprised to know that in March 2023, the small cap index was at the same level as it was in January 2018. Nifty, for instance, looks like last 1 year it is up 30%. But in March 2023, Nifty was 16,600. So, what happens is that sometimes these numbers and the base effect plays some psychological havoc. But in reality, on any long-range parameter, we are not outlandish. Like today, like I said, 1 year return on Nifty looks like it's 30% up.
Yeah.
But you look at 2 years, 3 years, 5 years, 10 years, 15 years, in every time horizon, Nifty 50 TRI is 14 to 16% compounded. Now, I have never seen a bubble where past return looks like 14-15% compounded.
That's a fair point, actually. Yeah, and of course, the nature of the business is that it is lumpy in certain cases. To that extent,
I mean, equity returns are non-linear and lumpy. So once in a while, numbers look like that, but then you need to even them out over a longish period.
Yeah, and to the point that you were making, there seems to be a rotation that is taking place. I'm quite pleasantly surprised, if I can call it that, because while we're seeing a bit of a decline in the inflows into small and mid cap, there is equally an increase in the inflows into large cap and large and mid cap, cumulatively accounting for close to 5,300 odd crore of inflows in the month. That is quite substantial, Ashish.
Yeah, because, see, there is clearly, we discussed some relative numbers of small cap and large cap. It might suggest that in the recent past, say, small cap has run up a lot. And market is obviously, is consistently, market is mean reverting cyclical, and it will always look for relative valuations. I think, yes, it's a sign of some amount of, maybe maturity or some amount of understanding, where, if there is a fair amount of noise and concern about small and mid cap, which is valid actually, nothing wrong with that. But then, yes, people do understand that then they need to reallocate. And the market also, on relative valuation, even the market kind of tends to rotate.
Just a last point, optically, if I look at it for the overall number, it is quite a substantial decline or rather substantial outflow of about 1.6 lakh crore. But all of this is being accounted for by the fixed income schemes. And even in that, a bulk of it is in the liquid fund scheme. Am I right in assuming that most of this is going to be institutional based? And how do you read the fixed income number?
So a couple of things, Alex. I mean, we don't really manage fixed income, but based on my experience, I can tell you that one is April. So, people who are long-term investors. I mean, now I know that there is no such thing as long-term in fixed income. Everything gets clubbed with your marginal rate of taxation. But at least people who have invested in the past, the month of April and early May does hold some significance, because people who have been long-term investors, what happens is when you cross over 31st March, one more financial year is crossed over. And that has implications for how you compute your long-term capital gains tax, right? Because every financial year that you cross, you count 1 year of cost inflation, when you're computing your capital gains. So there are many investors who typically, whenever they may have invested, if they have to plan an exit or if they have to plan liquidation, a lot of people would deliberately plan their exit or liquidation in April and May. So that is that one angle to keep in mind, whereby in April and May, there could be some outflows from fixed income funds. And second, when you're mentioning liquid fund, yes, it could be institutions or large corporates. But aside of liquid funds, in general for fixed income, April and May would have this, exits being timed to manage the year-end cost inflation index and adjustment for capital gains, etc.
Yeah. So lumpiness as well.
Sure.
Ashish, so last point, and this is to sum everything up. A lot of build-up to this particular month of data, and we pointed out right at the start that perhaps some of that would have been overblown. As an industry participant, are you sanguine based on what you're seeing that it's looking kosher?
Yes, absolutely. There is law of the land. We all have to comply with whatever is the regulation of the day when it comes to PMLA Act and KYC and re-KYC where Aadhaar was not plugged in. So that's the law of the land, and everybody needs to comply. Obviously, investors, we are answerable to investors. So we need to ensure that investors get the right service. Our mutual fund distributors and channel partners also need to play their role. And then, of course, registrars, they are doing their job. So I think things are coming into control. Like I already mentioned to you, when you see number of transactions going through versus number of transactions rejected, very, very high proportion, like I said, 97, 98% going through.
Yeah.
So, I think it's only going to get better and better. I don't see any challenges around the corner.
Absolutely.
And like we already discussed, flows are holding up. And I think if there is any further weakness in the market, I also sense that there is money on the sidelines.
Yeah.
So I don't see any hiccups, at least in the near term.
Fair point. Ashish, thanks so much, as always, for taking the time for speaking to us.
Thank you, Alex. Thank you.
All right, let's talk about that last point that Ashish was mentioning, just a tad bit more from somebody that's dealing with investors on an ongoing basis. Anant Ladda is joining in as well. Anant, we speak often about some of the challenges that are faced by investors, and I'm sure that you've had conversations about this whole KYC issue as well. But according to what Ashish was pointing out, and this is borne out by the numbers as well, transactions are going through. And so while there might be a large number of investors that are affected, it hasn't affected the flows at all. But can you give me a sense of what, one month, 40 days into the new norms, are people still facing issues with KYC?
Hi, Alex. Firstly, thank you so much for having me on the show. And answer is yes, people are still facing issues. See, transactions are flowing through because even after the new KYC norm, if there is an existing SIP, it will go through. If there is an additional purchase in the existing fund, which an investor is already holding, it will go through. If there is a redemption in the existing fund, it will go through. But if someone want to open a new folio with a new fund house, then issues are coming. So yes, slowly and gradually, everyone in the industry is trying to solve the issues. Even some of the AMCs have been helping out a lot and have automated the process of KYC updation. But I think we'll still take 45 more days to set it right.
Now, it's interesting because I was speaking about this with Ashish as well, and some of the trends that are playing out in the actively managed equity space is that there is a slowdown in small cap as well as mid cap inflows, and equally there is an increase in large cap and large and mid cap. So is that also something that you're talking to your clients and the people that are coming to you for advice about in terms of a rotation that is taking place right now? What do you see and what do you glean from these numbers?
See, once a regulatory warning came from the compliance department, obviously everyone was scared. And if we look at data from September 2021, continuously for 30 months, we had super positive inflows in small cap. And for the very first time in March, we saw some slight outflows. And it's absolutely okay to be to have our expectations in mind. Recently, I was doing one other show with your team, and I saw a lot of question coming that can we expect 25% CAGR returns in next 5 years in a small cap? To be true, that's practically not possible. And that's not reasonable as well, because mean deviation has to happen. So if someone is having reasonable expectations and parking or taking out some money from small cap and mid cap gradually and parking it to large cap or large and mid cap, and it's absolutely okay. But from long term perspective, probably 7 to 8 year perspective, I feel still SIPs and small caps are very good, because finally we are seeing some volatility in small cap. SIP plays through when there is a volatile market. If market has to go up in straight line, SIPs is not the key. You should do lump sum and take the full advantage. But when there is volatility in the market, SIPs are the best. So if you have SIPs with a 10-year plus horizon, it's absolutely okay. But if you have some goal in next 2 to 3 years, probably taking out money gradually might be the key. Taking out whole money at one go can at present, looking at the present scenario, can be disheartening at times that market has boosted and I have missed the rally.
Absolutely, Anant. And in fact, this is exactly what we speak about on the Mutual Fund show on an ongoing basis. So let's leave some of those conversations for that show as well. Thank you so much for joining in and giving us a perspective on the latest numbers. Now,
thank you.
I would also like to address the equity markets as they stand right now and take a look at the benchmark Nifty 50. We're at close to the low point of the day. In fact, selling has intensified after the midpoint of today's session. We are currently trading with cuts of 1.1% on the benchmark Nifty 50 and very close to that 22,000 mark. If not today, perhaps tomorrow you could even see that 22,000 mark being broken, and that perhaps would be a sentimental level to watch. Broader markets also seeing a drop, but you have the mid-cap index that's trading with cuts of less than 1% or just about 1% at this juncture. You have the small-cap index that's down about 1.5%. And as I look at the patchwork of the sectoral picture, it's pretty much red across the board. The only sector that is trading in the green, and that too it has lost a little bit of ground, is the automotive pack. And that index is up about 0.9%. But apart from that, you have everything from oil and gas as well as the public sector utilities. CPSE down about 2% or thereabouts. Energy is down 2%. Pharma is down 1.5%. Everywhere you look, it's cuts. But there's lots more to talk about markets and everything else. We have to end this particular program, but there's more coming up after a very short break. So do stay tuned, and this is NDTV Profit.
As citizens, we must remember that voting is not only a privilege, but also our duty towards our nation. I, Akash Ori from the DLF Group, pledge to encourage my colleagues, their friends and family to vote for the government they believe in. This is the strength of our democracy.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Hi, I'm Tanuj Bhojwani and I run People Plus AI. We're an organization that helps startups build AI. Is AI useful in India? Most definitely, yes. We have a huge, approximately 60 crore people using the net passively, meaning they're watching YouTube, Instagram, etc. But perhaps only 20 or 30 crores who are actively contributing or transacting on e-commerce websites. One big hurdle is because this involves typing, needs you to be literate, comfortable with using the smartphone, etc. One huge area AI will change in India is the use of voice, video, and other multimodal technologies. These new LLMs can understand human voices, accents, and languages like nothing ever before. Think Alexa times 1,000 because you can talk to it in your local language in an accent. Many companies, including Sarma and Krutrim in India, are training these models for Indic languages, and the way we speak to each other, in mixed coding where we use Hindi, English, Marathi seamlessly. This is why we believe exciting times are ahead as AI can unlock access to computing, apps and that entire ecosystem for a large number of people.
Different people believe.
Hello and welcome. You're watching Market IQ and I'm your host Pallavi Nahata. Let's take a very quick look at where the markets are at first. Well, it continues to be a rough day of trade and we continue to hover near the day's lows. The Nifty 50 is down by over about 1%, as is the Sensex. The Nifty 50 down by about 250 points in today's day of trade. The Sensex down by almost 800 points. We're also well below the 22,100 mark, and it remains to be seen whether we will fall maybe further below the 22,000 mark as well. So that's something we're going to be watching out for. Let's also have a quick look at some of the Nifty 50 constituents. Well, it's most stocks in the red, nearly 44 declines and just about 6 advances. The key loser, of course, is L&T on the back of its numbers and the management commentary. It's down almost by 5.5% now, actually. But Coal India, Divi's Lab, Britannia, ITC, also some of the key drags, they're down by anywhere between 2.5% to 4%. It's the large stocks like L&T, of course, and along with that also RIL, HDFC Bank and ITC, which are the key contributors for the figures that we're seeing on the Nifty 50. What's holding up is Infosys, Tata Motors, M&M and Hero Moto. Most sectors as well in the red. We're continuing to see the Nifty PSC down by almost about 2.5%, Nifty Oil and Gas, Nifty Energy all down by a little over 2%. What's in the green currently is Nifty Auto, and that's about it. The broader markets also down almost in tandem with the Nifty 50. The Nifty Mid Cap 150 is also down by about 1% odd. It's the Nifty Small Cap 250 which is actually seeing a steeper decline. It's down by almost about 1.5%. But hi Neeraj, it's not looking good currently on the markets. We've already sort of broken the 22,000 100 level, and there are chances looking that we've continued to lose momentum during the course of trade today, that we could be seeing further downside from here. What are you picking up currently?
Yeah, well, I think a lot of people are starting to talk about the low voter turnout and what that could mean in terms of the belief that the market had around what a political outcome could be, the extent of the political outcome in final. Maybe that is a factor that is playing out as well. I can certainly tell you that that's a chatter amongst a lot of investors who kind of now talk about this aspect as well. So that is part one. But if you see, Pallavi, from nearly 14th or 13th or 15th of Feb or thereabouts, mid-Feb, thus far, we've largely been in this range. It's about a 700-800 point range, wherein we've moved from 21,750 odd all the way to 22,750 odd or thereabouts. And currently we are right in the midst of the range, smack in the middle. 22,050 or 22,100 is roughly around the middle of that range, give or take a few points here and there. So the market had moved up quite significantly when volatility and VIX was at near 10-11 levels. I think the market is now retreating a little bit, and we're seeing this. Is this a cause for worry? Not necessarily so. I mean, for a lot of people, they are welcoming this because they are seeing this as an opportunity to buy.
Okay, all right. But how does the market movement that you've touched about on the last few days, how does that sort of juxtapose with a bunch of the earnings that we've seen coming in?
Yeah, so earnings, so leave L&T out, and L&T numbers were okay. The guidance wasn't great, numbers were okay. Even if you take into account L&T, but leave L&T out, until day before yesterday close, the Sensex earnings were higher than estimated, if Bloomberg consensus or brokerage wise. So the market and earnings picture has not looked all that bad. The reactions that we're seeing today, some of the PSUs which had gained are coming off. L&T, which is guided to a number which is not the strongest in terms of order inflow or even revenue growth relative to the previous year, is lower. I think that is being felt on Larsen & Toubro in the session today. But the others are correcting not because of earnings, but because there is a bit of market-wide pressure. The other aspect to keep in mind is that the FI numbers haven't been rosy. Yes, the yesterday number as well was fairly large on the negative side. It'll be interesting to see how it's just around this 12:30 to 1:30 period, or circa 1 p.m. that we're seeing a bit of a steep downfall that keeps on coming in on the index. I wonder if that is a precursor to a slightly weak FI number in today's session as well. The nature of the selling is across, so you can't quite pinpoint that this is happening in FI favorite sectors. Frankly, if you look at the Nifty sectoral indices, PSE, FMCG, energy are amongst the top losers. It is not banks per se, which are typically the ones on which FI selling largely happens. So interesting times, if you will, and let's wait and watch if indeed this correction continues, or do we kind of see a bit of a break. For now, at the lowest point of the day, so from an intraday trader's perspective, somebody who went long, certainly worrying.
Okay, all right. And does it look like this volatility, like you said, it's something we're going to be watching out for, but now there is a chance that this will continue up until the election results?
Yeah, difficult to say. Actually, it's a good point to figure out what happened to the VIX at every point of time 1 month before the election verdict, something that we should try and tackle on the closing show today. But the limited point being that we know that this period is marked by heightened volatility. The fact that VIX had come off quite rapidly in the run-up to this only adds to the point that VIX now for 9 days or thereabouts has likely been on the higher side, 17.84 today. But if you just look at the last 10 days, the uptick in the volatility has been very, very high. One would suspect that this is what will be the case, that there will be volatility for sure. Whether the markets move on the upside or the downside, difficult to say, but there will be volatility for sure until the election verdict is out of the way.
Okay, all right. Well, thank you so much for joining in with those quick bites of insights for us, Neeraj, and we will of course discuss the L&T results in further detail over the course of the show, but we're also going to take a quick look at what's the development in terms of the crisis of sorts brewing at Air India. The crisis has intensified for Air India Express. 74 flights cancelled today, and Air India is expected to support by operating on 20 routes. NDTV's Ishika Verma joins us with the latest update on that. Ishika?
It is the day 2 of the Air India Express crisis, and today also the flight operations remain impacted. 74 of the Air India Express flights have been cancelled across India. This includes the international as well as the domestic flights. Now, Air India Express has in fact issued a fresh statement where they have said that today they will be operating 292 flights, and Air India will also be operating on 20 of Air India Express's routes to help them, to support them in this time. Now, what is also important to note here, that in the statement they have also said that while we continue to engage with our cabin crew colleagues with a commitment to address any concerns, we are taking appropriate steps against certain individuals as their actions have caused grave inconvenience to thousands of our guests. Now, this certainly, this certainly hinting at the dramatic developments that we saw today, how in fact all those employees, that had taken this mass sick leave that impacted the operations. Some of them already have been sent termination letters. Now, what the number that we are getting to know at this point of time is 30 employees of the Air India Express have been sacked, and in that termination letter it has been written that because they did not turn up for their duties, this goes against their employee code here. Now, shortly after that, an ultimatum had also been issued to all of these employees to join back their work by 4 p.m. today itself. Otherwise, the management can take action. Now, in fact, remember that today a town hall meeting is also pre-scheduled where we are expecting that these employees of the Air India Express will be raising their concerns, the same concerns that they had raised before the chairman of the Air India Limited, where they had said that they are not being treated equally, and even after clearing their interviews, they are being offered a lower position jobs, and also regarding the changes in their salary structure. Now, what will be more important here to see as to what will be the management's take on this, what will be their decision, their solution to this crisis, because remember, the pressure on them continues to increase, with the regional labour commissioner officer also now coming in support of the employees and saying that mismanagement and blatant violations of the labour laws were apparent, and a high-level committee should be formed to address the grievances of these employees. And also remember that the Ministry of Civil Aviation had also sought a report from the Air India Express and had asked them to resolve this issue as soon as possible, because it is certainly the passengers who are being very much impacted because of this. So certainly it will be crucial to note as to what will be the conclusion of this very important town hall meeting that is scheduled for today. Now in Delhi with camera person Kanan Patra, this is Ishka Verma for NDTV Profit.
We'll continue to bring the latest on that as the scenario evolves. But moving back to some of the market's action, we're joined by my colleague Anushi and Kamal Singhal, who's the MD and CEO of Arvind Smart Spaces. Mr. Singhal, thank you so much for taking time out for us today.
Thank you. Good afternoon.
So, Mr. Singhal, Anushi joining from the other side over here. You had a strong end to the fiscal 24, about 38% growth in pre-sales and strong collections. How are we looking forward to in FY25 in terms of growth?
Yeah, Anushi, you're right. We've seen a great year, great quarter. Almost on all parameters, the growth has been very healthy. As you said, we crossed for the first time 1,000 crore sales and fresh booking milestone, which was 38% up, as you said. In fact, even cash flows were very healthy at 456 crores, which almost doubled as compared to what the number was last year. Now, I mean, we've been seeing that real estate has been going through a great cycle. It definitely looks like a cycle which is sustainable and which is very, very widespread. Possibly we are somewhere in the middle of this cycle, and we see that this growth momentum in general and in particular for us, it should continue for next 2-3 more years. And we have been kind of recording growth to the extent of 30 to 40% in most of our parameters in the last few years, and we hope that the same trend should continue in the year which is coming in.
Strong 30 to 40% of growth over here. Now I want to move on to your business development side, 5,000 crore of a projection over here. But if you look at last year, compare it that 4x of a jump compared to last year. Now, is this more on the conservative side if you're looking at?
Yeah, you're right. I mean, in fact, post-COVID, we suddenly opened the investment gates, and we had to catch up with what we could not do during COVID. So a couple of years back, it was around 1,000 crores, little less than 1,000 crores that we added in terms of new projects. And last year, we added in excess of 4,000 crores. As we said, 30-40% growth is what we look at in most parameters. And in this case as well, if you were to grow 30%, that means we should be easily be able to cross 5,000 crores. And that's what the target is. But, end of the day, last year was a catch up. And this year should be a steady state, 30% or thereabout of growth in these kind of parameters that we are expecting from here onwards.
Absolutely. And if you can just on this, how many projects are we planning to add over here in the course of FY25? Last year, we had about 4. And again, the key focus regions that we are looking at.
Yeah, so last year, as you said, 4 projects added. This year, it should be almost like double, 7 to 8 projects in that region. We are strongly present in the market of Ahmedabad, Gandhinagar, and Bangalore already. This year, clearly, the focus is to add and consolidate more on Mumbai and Pune. So the focus will be to add a couple of projects in this new market, Mumbai and Pune put together. And of course, we'll consolidate further in Bangalore and Ahmedabad.
Well, thank you so much for joining in and sharing your outlook on next year. Again, thank you. And now, Pallavi, you can take over.
Thank you so much for that, Anushi. But moving on, Zomato, Domino's, KFC, Burger King and Barbecue Nation. The list will go on till my stomach starts rumbling with hunger. But why are we talking about this? The reason is the QSR industry that has observed a large underperformance in FY24. But what's led to the underperformance and is recovery in sight? My colleague Mihika Barve has some interesting data. Mihika?
Yes. So now the Indian quick service industry has been in focus for a while, and the sector has seen underperformance in FY24. Now, after a robust run from FY22 to H1 of FY23, revenue growth in terms of and net profit growth of brands have moderated from the second half of FY23. Now, the slowdown has been longer than expected, and that's what Kotak Securities has seen. And the Q3 also saw the same trend of weakness. Now, when we talk about the reasons for underperformance, one is subdued demand. Now, subdued demand, lower demand, and many companies have cited this due to elevated inflation. Q3 also saw weaker results despite a moderation in inflation, and the dine-in footfall remained lower, and management commentary stated that the demand dipped further post-Diwali. The second reason is the growth of the food delivery apps to the likes of Zomato and Swiggy, who have expanded their presence over the past years. For example, Zomato's average monthly active restaurant delivery partners has grown significantly. Now, if you look at the graphics, in FY19, this stood at only 61,000. While we did see a dip in FY21 due to COVID year, the growth has been substantial throughout the years. And in 9 months, FY24, this value stood at 2,54,000. Now, according to BNP Paribas, this hurts QSR sales and dampens them, because what happens is when they are partnering with all these different restaurants, it gives customers more options and it leads to sales fragmentation. When you look at the market share of these companies too, one can see a change in the market capitalization since the first quarter of FY21, FY23 itself. Now, for example, Jubilant Foodworks has seen the largest fall in market share of 200 basis points, where this is also followed, and the trend is seen in Westlife Foodworld and restaurants and Barbecue Nation, who have lost 50 to 80 points. However, there are companies who've gained market share like Devyani International, who's gained 150 basis points of market share. But now the question lies, is there hope for recovery? Now, according to Kotak, you can't exactly predict the time that the recovery will happen. That's challenging, but they anticipate the down cycle to return to recovery soon, and it expects recovery from the second half of FY25, which we're currently in. Further along, management commentary has also shown a positive long-term outlook, with most companies not cutting their store opening guidance, and this comes despite the weaker demand scenario. Now, what they believe is that the slowdown is cyclical, and it's mirroring the impact of mass discretionary consumption. Nuvama also noted that there's been a moderation in store additions. Now, the last 2 years, all of these companies have been adding stores on a year-on-year basis, and what this does is it impacts the margins, okay? But Nuvama knows that there have been signs of moderation, and the QSRs could benefit from the demand normalization at the low end. And lastly, these companies, in terms of their stock price, they're off their life highs, which Nuvama notes as a very attractive entry point. For example, Barbecue Nation and restaurants brand Asia are down 74 and 52% respectively from their life highs.
Thanks a lot for that, Mehika. And with that, it's time to slip into a short break. But do stay tuned. On the other side, we bring to you election coverage from the heart of Kashmir, Srinagar. We'll be right back.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insight.
Welcome back. You're watching Market IQ on NDTV Profit. Now moving on to NDTV's special election coverage. Srinagar will see the battle between two young politicians from the National Conference and the PDP. Nazir Masoodi brings a ground report.
Election fever at Srinagar's iconic Lal Chowk, once an epicenter of separatist politics and a perpetual security hazard.
This is the first election in Kashmir in last over 3 decades, which is being fought without fear of violence or boycott calls by separatists. This election is not just about who wins or who loses. It is reviving politics that was in a state of suspended animation as Jammu and Kashmir is without an elected government for last 6 years.
The battle for Srinagar constituency is mainly between two young politicians, Agha Ruhullah Mehndi of National Conference and Wahidur Rahman Para of PDP. One is a victim of terrorism and the other was jailed on terror charges. Para was key player in BJP-PDP government's youth outreach program in Kashmir, but after scrapping off Article 370 in August 2019, he was booked under stringent anti-terror law UAPM, now out on bail.
You would get praise from the none other than the Home Minister of India for organizing major youth rallies at a time when things were horribly wrong in 2017, 16 and 18. But then you are the same person who is a terror accused, who is facing UAPA charges. How you would define yourself, a man who is being praised by the Home Minister for involving youth in the mainstream or a terror accused?
I think this is a story of every Kashmiri, every young Kashmiri who wants to express himself democratically. There are structural issues we face. Even the Home Minister of India, or I was working directly with the Chief Minister Mahabubaji closely. So irrespective of, we had so much of, like the Home Minister would openly say, will praise my work. But then you saw how I was treated. I was booked in 2 terror cases by NIA, by SIA, then, tortured, humiliated and kept in detention for like 2 years. I think this is what's happening to every Kashmiri, and this has historically happened to us. My message to people of India is that Kashmiris are like you. We are not born terrorists or stone pelters or militants.
National Conference candidate Agha Ruhullah's father, Agha Sayyid Mehdi, an influential Shia cleric, was killed in a deadly IED blast by terrorists in 2000. Agha's consistent stand on key issues and staunch opposition to revocation of Article 370 has won him praise even from political opponents, including main rival PDP. Despite being a victim of terrorism, he publicly apologizes for failing to stop migration of Kashmiri Pandits in 1990.
In your repeated, speeches, what you are talking about at August 5, 2019 was a black day, and you don't accept, and people don't accept that decision. So you are saying that you will going to represent that voice in the parliament. Is it still a relevant issue for the people?
It is. You can see from the response of the people and the sentimental outbursts when you talk about it. You can see it in their tears and eyes. People have not forgotten how we were treated and how our dignity and rights were snatched from us, and that too undemocratically, without our asking for our consent and wish and will. So that was a humiliation for us as a nation. So it remains with us. It is relevant. It is relevant until we get our rights and dignity back.
Okay, so is Article 370 scrapping the central issue of your election campaigning?
It's not only the central issue, it's the driving force for my campaigning.
The Srinagar Lok Sabha seat is spread across 5 districts, from the Zojila Pass that separates the valley from Ladakh, and right up Peer Ki Gali or Peer Panjal Mountains in South Kashmir. In Pulwama, which is part of Srinagar's seat, it will be the first vote for these enthusiastic residents. In previous elections, they had boycotted polls.
पिछली इलेक्शन में आप लोगों ने वोट डाला था या बाइकआउट?
हमने नहीं डाला हमने बाइकआउट किया था उस टाइम, नहीं डाला था। वही साहब जैसे लीडर ना, हमारी जान है, हमारी जान सबको वोट डालेंगे, बाइकआउट किया था।
If participation of people in election campaigning translates into votes, Srinagar constituency is expected to defeat boycott politics before electing its new MP. There are clear signs on the ground, and it appears people are leaving behind Srinagar's boycott legacy. In Srinagar, Nazir Masoodi for NDTV.
And with that, it's a wrap. This election season, stay hydrated, do vote, and stay tuned to NDTV Profit.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve?
Hi, thanks so much for joining in. You're watching the Mutual Fund Show on NDTV Profit. Let's first address the latest numbers that have come through from the Association of Mutual Funds in India. The AMFI has released the latest inflow numbers for the month of April. And the total inflows into mutual funds in the period of April has stood at 2.39 lakh crore rupees, and that is a substantial improvement. What you're seeing on the screen is net equity inflows, but the whole number is 2.39 lakh crore rupees there, and it's a significant improvement from the previous month where you saw a significant outflow, and that was largely on account of an outflow in liquid funds. Now let's look at the equity number, because this is also quite significant. 18,917 crore rupees or thereabouts of inflows into actively managed equity mutual fund schemes. You have an inflow of about 18,917 crore rupees of inflows into equity mutual fund schemes, and in that you have an inflow of about 2,200 crore rupees into small cap mutual fund schemes, as well as 1,793 crore rupees of inflows into mid cap mutual fund schemes, which is quite strong. Large cap schemes have seen an inflow of about 350 crore rupees, and multi cap schemes as much as 2,700 crore rupees. Overall, the fixed income space has also seen inflows, and that has seen inflows of about 1.9 lakh crore rupees. This is strong at the start of a new financial year as well. Now, hybrid schemes have seen a substantial inflow as well. That's a number I mistakenly spoke about, 19,862 crore rupees. A bulk of this coming through in the form of arbitrage funds, and perhaps to a certain extent this is because there is a larger interest from the retail segment into arbitrage funds ever since there was a change in the taxation treatment in the fixed income category. This is now being preferred as a short-term category to invest in. Now, a few aspects to pay attention to. First of all, the SIP number looks very strong. The month of April saw SIP inflows of as much as 20,371 crore rupees on a gross basis, and this is an all-time high. The other aspect to focus on is the KYC situation. Now, it was anticipated that this would cause a bit of a problem for the industry as a whole, because a lot of people have reported problems with transacting in mutual fund schemes. If you're unaware of this, what has happened is from the 1st of April, the norms have changed where, depending on the documents that you've used for KYC, you will fall into one of three categories. The first is validated, in which case there's no issue and you can transact as you normally do. The second is registered, in which case there is a requirement for an Aadhaar validation, and in that situation you can continue to transact in the folios that you currently invest in, but no new folios can be invested in, and the third is on hold, in which case you cannot transact. Now, AMFI has actually clarified that as many as 93% of investors fall in the validated or registered category, which means that they can continue to transact. 3% fall in the on hold category, and 4% are those with no KYC. And this is actually something that is borne out in a conversation that I had earlier in the day with the head of a mutual fund, where he said that 97 to 98% of transactions in the space are continuing to go through. Now, that's more or less what the numbers look like in the month gone by, and it looks like a pretty picture. And with that, let me introduce you to what the show is all about. And this is in fact a conversation that my colleague Tamanna Inamdar had, and it's quite an interesting one. They spoke about loan against mutual funds with Raghavendra Nath, who is the managing director of Ladder Up Wealth, and Santosh Joseph, who is the founder of Germinate Investor Services. Listen in.
Even as mutual fund investments keep increasing in sheer number and volume, and also become a core part of an average Indian's financial asset and their financial armory, loans against mutual funds are also gaining prominence. Today, we're going to talk about what these are, how do you get them, and is this a good option if you're looking for short-term funding? Now, to speak on some of these factors, I'm joined today by Santosh Joseph, who's founder of Germinate Investor Services, and Raghavendra Nath, who's MD of Ladder Up Wealth Management Private Limited. Welcome to both of you, Santosh and Raghavendra. Great to have you on the show. Santosh, let me begin with you and just give us a bit of backdrop and background on loans against mutual funds. Have they become more popular? How are they used? And why are more and more people going for it?
Taman, it's interesting that many of our mutual fund investors don't even know that you have a facility called loan against mutual funds. So therefore, I think this show is going to do a great service for our viewers when they get to know that there is a product like this. That is, you could avail of a loan against a mutual fund. In the past, you must have heard about loan against an FD or loan against assets, but here's loan against mutual fund. Now, interestingly, this product has been there for over 20 years, but many people were not aware of it, and many people didn't know that this was possible. Now, thanks to the growth of the Indian mutual fund industry and the extreme popularity of the mutual fund as an investment vehicle, now even the loan against mutual fund is also growing in awareness, which means that when you have a mutual fund unit or units or a portfolio, and there is a need for you for funds, either for an emergency or for a short-term gap, you don't have to sell these units, but these units are actually pledgeable, can be used as a collateral, borrowed against, repaid back at great convenience. So therefore, the loan against mutual fund is an extremely convenient tool for mutual fund investors to use their investments without disturbing the portfolio, without compromising on selling of the funds to meet short-term or liquidity requirements, and make money work for you while also have the luxury of liquidity at relatively lower costs to the existing loans available. I hope that's a summary of the product.
No, it's a great summary. Raghavendra, let me get you in on why these have, they've been around for a while as a product. Why have they become popular now? And secondly, how does this compare, for example, if you have a quick need of money, to a loan against FD, that question to Raghavendra, or even a personal loan?
Yeah. So, as Santosh was saying, in any case, this has been around for a very long period of time, and people are now getting more and more aware, and it can be used against any liquidity crunch that individual investors may have. However, the process of taking a loan against mutual fund versus, let's say, you set a loan against FD or let's say a personal loan, is a little more cumbersome process because it requires, let's say somebody has 5 mutual funds and you're taking loan against these 5 funds, then you need to basically go and mark lien against these fund units, and when the loan has been repaid back, then you need to take the NOC from the bank or the NBFC and again go to the mutual funds to unlien these. And during this period of time, you actually lose all liquidity. So if you were to basically wanting to switch from one fund to another, you will not be able to do that when this loan is current, or even a small portion of the loan is current, because those units are already lent or pledged in favor of the bank or the NBFC. So the process is a little cumbersome, and therefore it is suitable more when you have a large need of funds for a longer duration. When you have a small illiquidity or let's say a mismatch in your finances for 1 or 2 months and a small amount, then probably a personal loan or a loan against FD could be better because they are far easier to seek.
Seems like there are quite a few disadvantages as well, and perhaps which is why loan against mutual fund is not that popular. Santosh, if I were to ask you to compare to other options when it comes to a loan against mutual fund versus loan against FD, personal loan, etc., how would you rate that?
Yes, see, there's a reason why they are not popular is because of the way the product is loan is applicable. For example, thanks to the great amount of technology today that's available in credit cards or loans or those quick easy loans today, a personal loan is dispersed in a few minutes if you got a good credit score and you got access to those apps on the banking platforms or the NBFC platforms. Whereas a little bit of a difference in the loan against mutual funds is that you got to mark a lien against the unit, and therefore a longish portfolio will take that many more number of liens to be marked. So therefore it easily, on a comparable time basis, one can be done in a few minutes, other one will take at least 2 to 3 business days. Now, on the other hand, when you look at in the mutual fund space also, there is limits that apply. Whereas in a personal loan, if you are looking for a certain particular amount, it's very easy and you just get it. Whereas in mutual funds, different category has got different limits. For example, liquid and fixed income has got a certain percentage margin, equity's got a different percentage margin, and there may be some schemes that you may or may not get even a loan against. So there are these subtle differences, and I think I agree that if this is going to be for short term, then credit cards or personal loans will make a big difference, where if it's going to be for slightly long-term, more strategic in nature, that you have investments, you don't want to disturb it, you want to raise liquidity against your investments without disturbing your investment, then loan against mutual funds become handy. So essentially, it's for a client to manage his cash flows well and bucket it exactly for the cash flow that he needs for.
I also want to understand, let me bring this to Santosh, in terms of interest rates, how does it compare? In what situation should you even look at a loan against mutual funds? And the concern of, what Raghavendra also said, that even if you take a loan for a small portion, that entire investment gets sort of locked up. You can't do anything with it then. Also, what happens if the value, just to add to that, what happens if the value of the underlying units fluctuates a fair bit? Because at the end of the day, they're, mutual fund investments.
Yeah, so there are 2-3 parts to this. Number one is the category. If you're in fixed income, you get a higher margin, but please remember the interest rate variable becomes very critical because you know what returns fixed income can give and what interest you're borrowing at. So to be honest, it really doesn't make much of a difference if you're having fixed income and you want to take a loan against it, because there's a very little fine gap between the interests that you pay and the returns that you get depending on the category of fixed income. Now, some people don't want to break the investment, they don't mind the cost of interest, then it maybe justifies. Now, coming to equity, considering equities are a volatile asset class, the margins are limited. You get maybe at best 55-60% margin on equity funds. And there again, if there's a sharp sudden fall, there will be a margin call. They will ask you to fund the difference in the gap between the fall in the mutual fund value versus the amount you borrowed. Now that apart, the cost of interest that you pay on the loan against mutual funds at sometimes are attractive and lower than what you traditionally pay for personal loans. So is there a clear advantage there? The answer is yes. The second biggest advantage, notwithstanding the cost, is also the utilization. Now, in a personal loan, whether you use little money or more money, once the loan is dispersed, you pay interest on the overall amount. Whereas in loan against mutual funds, by and large, it is an overdraft kind of a product. You pay only on utilization and you pay less based on your repayment. For example, you borrowed 5 lakhs, you paid 2 lakhs, you only have a differential of 3 lakhs, you pay interest only on the outstanding loan amount. So there is a little bit of convenience in the loan against mutual funds in terms of how you are charged in interest and how when you pay back, there's no penalty to pay back and you only pay for the residual amount. Whereas the interest rate itself can be a little softer than the traditional personal loans.
And just that question to you as well, Raghavendra, is the big problem, apart from the fact that your investment gets stuck while your loan is on, the variance in the value of the units?
Yeah. No, that's right. I think, but generally, when you are looking at when an NBFC is disbursing the loan, they are mindful. And that's why, as Santosh said, that let's say typically, and I've seen that for many clients of ours, whenever we have taken a loan against equity mutual funds, NBFCs don't extend beyond 50%. And I think 50% is good enough for them to cover for any volatility which will happen in the next few months or whatever. So unless there is an extreme event like a global financial crisis, the margin calls may not happen because NBFCs in any case are very mindful of the risk that they are taking. Okay, so that is not such a big concern. I think where investors can benefit a lot is the lower interest rate, because you can actually negotiate interest rate in loan against mutual funds, because you see it's a secured product. The NBFC can sell your units at any time and recover the money if you don't pay them in time. Okay, so it's a secured product, and because the liquidity of mutual funds is very high, an NBFC will prefer a pledge of units against, let's say, a pledge of a car or a pledge of a house, because selling them is far more difficult than selling a unit. So the rate of interest can be negotiated depending on the quantum and the amount of margin that you are ready to give up. So let's say if you have 50 lakh rupees worth of units and you only want 10 lakh rupees of loan, NBFC will be able to give you a very, very fine interest.
Absolutely. So those are the factors you need to consider when going in for a loan against mutual fund. There are some pros, there are some cons as well. We'll take a very short break, but Santosh and Raghavendra, stay with us, because on the other side, we answer your queries. Stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Hi, thanks so much for joining in. Let's focus in on earnings because there's a lot that is happening as we speak. At the bottom of your screen, you see State Bank of India. The net profit number is quite substantial, 20,000 plus crore rupees, and that is a significant beat on the consensus estimates. That is reflective in the stock price as well. On the screen, it's up as much as 2.2%, nearly 20,700 crore rupees of a profit that has been announced by State Bank of India. I'm looking at the numbers as we speak right now, and the NPA numbers in front of me. You have gross NPAs that have come in at 2.24%. This is an improvement on a sequential basis. It is an improvement from 2.42% in the comparable quarter. I'm talking about a sequential comparison. Net NPAs for the quarter stand at 0.57%, and that compares with 0.6% at the end of the previous quarter. I'm also trying to pull up provisioning, and the provisioning number, the total provisioning number has come in at 1,609 crore rupees for the quarter. And that is an increase from the previous quarter, but it's a reduction compared with the year ago number. The year ago number stood at 3,300 plus crore rupees. Provisions for non-performing assets stood at 3,293 crore rupees in the quarter gone by. I'm trying to find out what is leading to this significant beat. In fact, we'll have analysts joining in, and we'll also probably have Harsh from the research team getting you some perspective on that. Harsh is in fact joining me right now. Harsh, substantial improvement in the profitability. What is leading to this? What is leading to the beat in numbers?
Well, thanks for that, Alex. First off, on the NII front, just a single-digit growth in NII seems like margins still holding up. So that seems to be the one positive. The decline doesn't seem to be major when it comes to margins. But of course, we'll have to wait that margin number to come through. That's going to hold the key. The other piece, though, which is really standing out is OPEX has come off, and therefore your operating profit has gone up quite substantially. Let me read the number out. The operating profit number has come in at 28,747 crores, 28,750 versus the 24,000 crore number same time last year. So you've seen, and last quarter, when I'm looking at that operating profit number, it was at 20,000 crores. So even sequentially, that number has gone up quite sharply. And it's largely because of OPEX. The other piece you did speak about and you did touch upon, Alex, is the provisions number. The provisions number has actually been largely stable, in fact, and on a low base, of course, it's gone up sequentially. But it's at 1,600 crore, it's still a very solid number from a provision standpoint. What has all of this done? Well, profit after tax above the 20,000 crore mark now. That's a sharp increase when I'm looking at it year on year as well. So that's the one key positive that I take away from this. Your ROAs have really done well. 1.36% on ROAs. I don't think too many analysts had put that kind of a number on SBI, especially given the way in which ROAs have already moved, which means that it's already been a higher base. 1.4% ROA is a very strong number. It's a strong beat.
Absolutely. In fact, let's find out what Aditya Shah of Hercules Advisors has to say about the numbers. Aditya, seemingly a significant beat on the net profit number, beating consensus estimates handily. And what Harsh was just pointing out was the return on assets, which is standing at quite a substantial number as well. What is your initial take on the numbers?
Yeah, the numbers look quite okay. We need to wait for the loan growth and the deposit growth.
We need to understand if there was a right pack that they have taken because of which the net profit number really is standing out. As Harsh was saying, the slippages are significantly lower, so that is a tad bit positive for the stock. But I'm just awaiting the details on the presentation, which will break down the results for us. Overall, on the first look, it looks a good number, but details need to be seen.
Okay. Talk to me about the asset quality, because I think broadly this is in line, right? And you're talking about an improvement, in fact, on a sequential basis. I'm looking at gross bad loans as a percentage of total loans at 2.24%. That compares with 2.42% in the previous quarter. And I think net NPAs also improvement is there. It's 0.57% compared with 0.64%. So that's a significant positive, isn't it?
Yeah. So as with all large private sector banks and the large PSU bank, which is SBI, we have seen a sequential improvement in the asset quality. We have seen slippages being contained by all of these banks. And in line with that, SBI is also doing the same thing. SBI's asset quality is stable. We need to understand the granular details about how the retail portfolio was performing and how the corporate portfolio is really performing. But overall, if you look at the slippages number as well, it is at a multi-quarter low, which means that overall it is not a problem. So in my opinion, the slippages for all banks over the next 2 to 3 quarters will be under control. Nothing to complain about. Now we need to first understand the project financing bit which the RBI has given, because SBI is a big player on the project financing side of it. And we need to also understand the segment-wise slippages as well. So overall, not a problem slippages as of now.
Okay, Aditya, Harsh also joining in. I want to try and understand the loan growth. When I'm looking at the standalone balance sheet itself, advances have gone up 5.5% on a sequential basis. That looks like a very strong number right off the bat. Just wanted your thoughts on this. Does it seem like the pipeline which they had in terms of corporate loans, that seems to have materialized? What exactly is happening, or is it just a very strong quarter? Is it seasonality?
So Q4 generally tends to be a strong number for most banks, and for SBI also it has been really very strong. Retail loan growth, in my opinion, has picked up for SBI, which is a big contributing factor, which is being seen in the margins as well. We need to understand the granularity of that loan growth, but I suspect that a lot of it will also come from a double-digit retail loan growth. So overall, loan growth was never a problem for SBI, will never be a problem for SBI going forward, because as the economy revs up, the demand is really strong, and we've seen all private sector banks growing upwards of 15%, the larger ones. Similarly, SBI has also grown really well. So overall, good number on the loan growth side of it.
Okay, and Aditya, a quick take with regard to provisions. What's your take on the provisions number? And second is how you're looking at valuations for SBI at the moment. Stock has run up quite substantially. In fact, 2-3 years back it was at 200 and sub 200. It's currently at 820. So what's the sense now with regard to valuations? So provisions and valuations, please.
So provisions, I have not seen the provisions number, so let's wait for
around
that
1600 crore, Aditya, ballpark.
Yeah. The provision numbers are not that high. Slippages are also not that high. So overall, SBI is reaping the benefit of the cleanup that they have done over the last 2.5 years. So I don't think that over the next 2 to 4 quarters, slippages or provisions should be a problem for SBI. The ROA number should be really good, and we are staring at a decadal high ROA for the bank. So this is really good for the bank. But from a valuation perspective, all of this is now inside the price. The bank is now trading at 2 times price to book, which in my opinion is not cheap. All large private sector banks are now trading at about 2 times price to book, and SBI is also trading at 2 times price to book. So the stock is not cheap. It has already priced in the decadal high ROA that is really coming about. So now if you have positions in the stock, you should continue to hold the positions in the stock. Incrementally, if you want to make positions, I will suggest to wait for some decent amount of correction before you make position in the stock. But overall, thumbs up to the results.
Okay. One last question from my end, Aditya. This is on the OPEX, because I heard some comments earlier about that being a bit of a question mark heading into the results. What was your own expectation on the cost side? Did you anticipate that this would be a high number?
Yes. So there was a news that SBI had undertaken some wage revision for all of its workforce, and because of which the operating costs were supposed to be higher this quarter, and all the estimates were also pointing out to that fact. So we really need to understand the granular details, if that cost was taken in this quarter or was it postponed. But OPEX-wise, the bank is really very optimized, and these one-off costs are just something that we don't need to take too seriously. Going forward, the only thing that will now matter is the loan growth, the deposit growth, and how fast are they able to, how much they are able to control the slippages. So, in my opinion, OPEX was a one-off, which I had already expected, and most reports had already expected it.
Okay. Aditya, thanks so much for joining in and giving us that initial perspective. Of course, there is going to be a press conference in a very short while, and we'll get more details. The stock has, in fact, come off quite substantially from the high point of the day. It was up as much as 2% immediately after the results, possibly on the back of that big beat in the profit number. We'll have to get some clarity as to how that has come about. And some of that, of course, is going to emerge from the net interest margin number, which will emerge. If I'm not mistaken, the expectation was just a little over 3%, and we'll have to see how that has come through in the quarter gone by. I also want to address Asian Paints, because this is a bit of a disappointment, if I can call it that. And you have the revenue number that is coming at 8,731 crore rupees in the quarter gone by, and that is a decline of about 0.7% on a year-on-year basis. The EBITDA has come in at 1,691 crore rupees. That is a decline of as much as 9.3%. And this is where the issue is, because that has resulted in a pretty flat bottom line number of about 1,275 crore rupees. The margin has come in at 19.4%, and you're seeing that there is a contraction compared with the same period last year. So a combination of factors possibly playing out for Asian Paints. You have a contraction in the margins that is probably led by competition in the space, and also margin or rather raw material pressure in the space. But that will be borne out perhaps by what Agam will tell you. Agam has looked at the numbers more closely than I have. Agam, what's leading to this contraction in margins, and what did you take from the numbers?
Right, Alex. So what's actually weighing down on the margins is a couple of factors. Firstly, a weaker than expected revenue growth. In fact, we're looking at a decline there. And secondly, there has been certain impact when it comes to price cuts coming in. But before I tell you a little more in detail as to how things have panned out, let me just start by talking about the headline numbers. Firstly, as you've already mentioned, we are looking at barely any amount of growth. In fact, we're looking at a top line decline of around 0.6% year on year. Margins coming in around 19.4% against expectations of margins being flat year on year, and consequently your net profit has grown only nearly 2% as against expectations of around 1,334 crores. We're getting a number of around 1,257 odd crores. Now the decorative business volumes have seen a growth of 10%, but the reason why your top line has declined is because the company has taken substantial price cuts in the quarter gone by. Moreover, the company has mentioned that there has been a sustained weaker demand in the environment, and also there has been downtrading in several of its product categories, which means that a lot of your consumers are looking to consume less in terms of quantities, when that's had an impact on your overall top line. Naturally, this trickles down to your revenues as well, notwithstanding the price cuts that the company has taken as well, and that has had an impact on margins. And besides that, the only positive perhaps here is that the gross margins did see an expansion of about 120 basis points, but we must also remember that crude has remained elevated for the quarter gone by, and that has a lag effect coming in, and that is likely to have an impact in the coming few quarters, especially when it comes to crude derivatives, titanium dioxide being a crucial input in a lot of the paints companies. And for that reason, there could potentially be some more concern with respect to margins, which have already come below street expectations.
Absolutely. Thanks so much for wrapping that up for us. By the way, Asian Paints underperforming, down about 3.5%. Earlier in the day, of course, the worst performer on the benchmark Nifty 50 was Larsen & Toubro. I do not know where it's currently trading. Maybe we can pull that up to see which the biggest contributors are to the decline. So Larsen & Toubro, in fact, losing more ground. Let's pull up the benchmark Nifty 50 to see where it's currently trading. And you have sharper cuts now. And in fact, it is at the low point of the day, down 1.2% or thereabouts, because Asian Paints has joined the bandwagon in terms of the sharp declines that you're seeing for the large frontline stocks today. Just one more earnings that I want to point out to, and that is Balaji Amines, and this is a stock that is under a little bit of pressure as well, and this is on the back of earnings. It has reported a revenue of about 414 crore rupees, and that is a decline of 12.2% on a consolidated basis. This is compared with the year ago quarter. And EBITDA has come in at 98 crore rupees. That's a growth of about 5%. Margins have come in higher at about 23.6% compared with 19.8% in the comparable quarter. Net profit, of course, coming in 31% higher at 72.5 crore rupees. But the stock is taking a bit of a beating. Perhaps that is on account of the revenue decline that you've seen of as much as 12% in the quarter gone by. Let's talk about a few more stocks then, and in fact, let's look at the contributors on the Nifty 50 just to give you a perspective of how things stand right now. And let's pull that up on the screen. Right on the top of the screen on the decline side, you have Larsen & Toubro as well as HDFC Bank and Reliance Industries. So the heavyweights really proving to be a big drag on the Nifty 50. But there's more to talk about, and we will stick with earnings. Remember, in just a short while, you will have the press conference of State Bank of India to talk about the fine print of their results. So do stay tuned. This is NDTV Profit. Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about
Good afternoon and welcome to NDTV Profit. On earnings that's today, we're tracking Greaves Cotton Limited, and we're joined by the CFO, Ms. Akila Balachandran. Hello ma'am, and thank you so much for joining us today here at NDTV Profit. For just the Q4 as well as the financial year 24, it was a tough financial year for the company. I just wanted to check if you could, run us through how the company has performed in this financial year according to you. What do you see kind of, the key triggers going into the financial year of 2025?
Thank you so much for having me on NDTV Profit and allowing me to share insights about Greaves Cotton's performance for this year, FY24. Let me split this in two parts. The Greaves Cotton performance on a standalone basis, we have done exceptionally well. Our top line grew 17%. Our top line grew 15%, I'm sorry. And we have registered a decadal high profit of 366 crores. Our margins have also grown by 56%. And in terms of margin improvement, there again, we have done a remarkable work of improving by 325 basis points. This brings us back to our pre-COVID levels of 13% plus margins. If you remember, over the last few years, we have been undergoing a transformation journey and trying to pivot from a single product company to multiple products, multi-fuel, fuel agnostic, also improving our product portfolio, applications portfolio, as well as the geographical reach. All this has played off, and in this continuing journey, FY24, we have been able to deliver good results. Our other company, Greaves Electric Mobility, before that, let me pick up Excel Control Linkage. Last year, we had invested in Excel Control, and I'm happy to share that this has again been an extremely wonderful journey for us this year. We grew top line by almost 40% at extremely healthy margins of 30% plus. This integration of Excel and Greaves Cotton continues in a very professional and in terms of Greaves Electric Mobility, as you're aware, early last year, we had the notice from MHI. As an organization, we have responded to the government show cause notice. We've also repaid all the demands and we await the next steps from them. This has definitely impacted the company's performance. However, the company has put in place a roadmap for new product launches as well as a path to profitability. And though it has been a challenging year, I think we've done very well to manage the journey so far.
So I just want to take forward the point that you made on the two-wheeler engines. I think from a presentation also we can see that there was roughly on a consolidated levels that margins have been impacted majorly. And one of the key components of this has been the 56% fall in e-two-wheelers. What do you attribute this particular fall to? And I know that the company has launched a new product as well. But just in general, I wanted to talk because you already have roughly 3 to 4 products in the market. What led to this major fall of roughly 56% for the whole financial year of 2024?
If you remember, we had a notice from MHI.
Yeah.
And we were blocked from the portal. We therefore could not avail the subsidies going forward. We have already responded to the notice and we've also refunded as per the claims without any prejudice. Parallelly, we have continued selling our products, but we do not get the benefit of the subsidy. This really has given us a challenging year.
But going forward, ma'am, because we do see that, the current market, there are roughly 2 to 3 legacy players which have come back and launched e-two-wheelers, while the existing 2 private majors in the electric scooter market have launched cheaper variants. Looking at this market currently, the company has launched a Nexus recently, which is priced above 1 lakh rupees. I just wanted to get a sense of what the company is seeing, because we're seeing that most players are going for a cheaper variant to get in more consumers to buy electric two-wheelers. So what is the thought process there?
Our product is targeted at the family segment. It's an extremely high performance family product, one of its kind. It has multiple features and some of them are first of its kind in India. We've also done a complete campaign around it, from Kashmir to Kanyakumari, and in this process also done multiple records in the India Book of Records. So we are very confident that with this kind of a superior product targeted at the family, we will be able to attract the right kind of customers going forward.
And while you say that the two-wheeler space has been slightly affected, and you also mentioned, could you quantify the amount that the company has repaid back to either NHAI or the consumers for the whole financial year of 24?
Yes. So if you were to go back and see, this has been all disclosed in our financials. The MHI notice had asked us to refund 124 crores plus interest, which is what we have refunded back to the government.
And we've also seen, ma'am, that certain companies have made their plea to the government to get back some of the amounts that they were charged. Are you currently in conversations with the government for this particular said amount? And what has been the progress? Because I believe that this was at the back of Q3, somewhere around October of last year. Suppose that, what has been the conversation with the government for this specific amount? Has there been any progress on getting it back?
We have, on our side, complied with all the requirements of the government, and we are in constant touch with them. At this point, I will not be able to disclose beyond this, since the matter is in discussion with the government.
Understood, ma'am. And one segment that actually has been doing very well for the company is the E3-wheelers. I think you all have had a launch also this particular year. How are you seeing the market going forward in financial year 25? And I also wanted to understand which are the key states or regions that the company is targeting, because we've seen a lot of competition from the heavyweights also across India who have larger distribution networks. So specifically for the company, how are you seeing the next financial year, and which are the kind of regions do you target that you've already entered per se and looking to enter also in this year?
So the good news is, in the three-wheeler space, we are back on the portal. So we are eligible for subsidies wherever it is applicable. We are seeing a lot of traction, and we have plans to push far more aggressively going forward. Again, some of these are very specific, and it will be difficult to get into details at this point in time.
Any particular region, ma'am, that you can mention? If you are looking at getting into West more, or North or South, is something that the company's stronghold is currently?
Look, we would have a plan to go on an all-India basis in a very structured manner. I wouldn't be able to share details at this point in time.
Understood. And for the electric mobility, if I see for the whole financial year, the revenues were down roughly 40 to 45%. Now going forward, since the three-wheeler is also on track, and you've also had the Nexus launch in this particular financial year, how are you seeing this on revenue growth per se? Do you see that the company will be able to be back for this particular segment, back in black for financial year 25?
As you are aware, we've already launched a new range of products, which we see a lot of traction. On the three-wheeler side, again, we have done multiple launches. We are strengthening our distribution network, and we see we're back to number 5. We have got good traction and market share. We will definitely be able to bounce back in FY25, though I will not be able to give you any specific guidance on that.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target?
Hi, welcome. You're watching NDTV Profit. I'm Harsh Saita, and we're going to focus in on earnings, slew of numbers coming through, and we have India Shelter Finance, which has disclosed its Q4 numbers. Of course, a very strong growth of a low base is how I would sum it up. But overall, also the numbers look fairly healthy. Is this sustainable or not? Whether asset quality can sustain or not? We have Mr. Rupinder Singh, who is the Managing Director at India Shelter Finance, joining us. Welcome, Mr. Singh.
Thank you so much, Harsh, for inviting me on your show. Thank you.
Right. Mr. Singh, quickly want to try and understand from you whether this kind of 40% growth which you've clocked in terms of CAGR over the last 3 years or so, and the almost 40 to 50% that you clock consistently on this higher base, is that sustainable? And what's the thought process for FY25? What's the target?
I think India Shelter Finance Services is basically clocking the same kind of growth from last 6-7 years. In fact, affordable housing is the segment which is in demand today. There's a set of segment which was not a part of financial inclusion in earlier days, but as it is picking up, it has been realization there's a lot of housing shortage. In fact, one of the data says that there's a shortage of around 9 to 10 crore homes across country. And most of these houses are in the category of lower income group or maybe what is called economically weaker section. And India Shelter plays the role of financing these kind of customers who are looking their first time homes. So yes, demand is there, and market is also building up, growing up. There's a lot of recognition coming around from the customer side and from the this overall ecosystem. And that is helping us to, have this sustainable growth around. What we are seeing, obviously, in a lower base, and as the time grows, the growth will be there. But I feel that 30-35% of growth is quite sustainable.
30-35% growth quite sustainable. I want to try and understand from you the spread and margin guidance as we go forward. Your spreads have been largely stable in an otherwise difficult interest rate environment. Tell us what helps you stand out and what allows you to maintain that spread. And cost of funds also haven't inched up significantly for you.
So the customer, what we are targeting belongs to these markets tier 3, tier 2, which I has mentioned is not a large of financial inclusion. They are most of them the first time home loan borrowers. In fact, 70-75% of the first time mortgage home loans borrower. And a pretty large chunk out of that is a new to credit also. So they have this need as well as dream of building their own homes, but obviously larger ecosystem doesn't support them. Where when we play the role, that becomes a quite big support to that piece. So this is a demanding market. So the compression or suppression of spreads is being taken here because of that piece. On the other side, with the cautious actions towards our treasury management, we are able to control also the cost of fund to the large extent. Thanks to institutions like NHB, National Housing Bank, which are always support to institute like us who are catering these kind of segment. In fact, today 15-16% of our funding comes from NHB. That again at a very cost which is very sustainable for us, help us to build this business around, which we automatically pass on to the customers finally. So this is a situation which is symbiotically strong for customer, for ourselves, and the government initiatives which comes to in a message from the NHB side.
Sure. So as your balance sheet grows from 6,000 to 8,000 crore, is this cost of fund, is this kind of margin trajectory sustainable? Is that what one should take away? And not just from 6 to 8, you'll probably double up in the next 2 to 3 years. Is the cost of fund as well as the margin and spread trajectory going to be very similar? Is that what one can expect?
Good news is we were rated A+ last year with a positive outlook by CARE and ICRA, one of the rating agencies. In fact, in the last quarter of this financial year, Q4, we were rated AA- by one of the leading rating agencies, India Rating. So the rating also supports somewhere when you are discussing with the banks to get funds around that side and helps to bring down cost of fund in some way. And we also have a expectation that once elections are over, the new interim budget comes, there are always benefit which comes from the government side through NHB toward this sector particularly. So these are the few points which gives a positive notes around that side. And I think even the rate cycles remain consistent in market, what is running today. Still, with these couple of new tractions, we would be able to get actually benefit of 15 to 20 pips this year. And as time progresses, your increasing of balance sheet is increasing, you become a part of a larger ecosystem, then this cost of fund is also going to come in a better way. Having said so, our base is largely in tier 3, tier 4 markets, and we are expanding ourselves into these markets as the penetration keep going on. This is a set of customer which we want to cater. So I feel maintaining spread of 6% is not a challenge for us.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day.
Well, thanks for tuning into India Market Close, and it's not turned out to be a very pretty picture today. We are trading close to or at the lowest point of the day. Earnings haven't helped either, and at about 258 points, very close to 22,000. In that range, I mean, if you look at the Nifty over the last 3 months, it's been a range. We've been oscillating between 21,750, 21,500, whatever you call it, as a low, and about 22,700, 800 as a high. So that's pretty much the range in which we've been moving around. The banking index should come up on your screen, was holding out for a better part of the day, but 309 points lower in the red currently. And the mid caps and small caps too have gone down. I just want to pull up India VIX once before we get to specific stocks and just show what's happened there as well, because the broader markets currently are down, and VIX at 17.73 is up another 3.8%. Not looking good. Volatility continues to rise every single day. It's not alarming levels as yet, by the way. Remember, the truly alarming levels are northwards of 25, closer to 30 maybe. But 17.7, substantially higher than the 10 number that we had about 3 weeks ago. Bring up the heat map. A lot more red, very little green. In fact, just a single row of green, not even that. Hero Moto holding out, though it's still, it's lower than what it was, but still up about 3.5. SBI about 2.5. So that's holding out. Tata Motors, M&M. So autos in the fast lane, if you will. Everything else has looked wobbly in trade. L&T has succumbed to serious selling pressure. Asian Paints not far behind either, 4% lower. ONGC, BPCL, so PSUs per se, which were doing very well yesterday, have all come back in the session today. So that's unraveled in a hurry. Pointless pointing out what's not doing well, because almost everything is not doing well. The only ones which are kind of doing well, as I said, are autos. And on the flip side, of course, L&T kind of takes the cake as being the key loser and is now trading at the low point of the day. Result boys, L&T, Asian Paints, all of them reacting and reacting duly. But broader markets have even larger reactions as well to results and otherwise. Harsh, what's standing out?
Well, yes, absolutely. Let's pull up the mid-cap and the small-cap indices. And clearly, Neeraj, as you correctly pointed out, there is quite a bit of pain there, more than the benchmark, 1.3% lower for the mid-cap, the small-cap, nearly 2% of a cut on the Nifty small-cap. So those two are feeling the pressure and the pinch. Let's pull up some names, especially on the back of numbers. Let me start off with something like a Bajaj Consumer, down 7%. Piramal Enterprises down 9%. Piramal Finance now, I dare say. Sula Vineyards down 8.5%. Margin picture not up to street estimates. Larsen & Toubro, of course, we've spoken about that. Tata Power down 4%. Home First down 4%. Godrej Agrovit, if we can pull that one up, almost 4% lower. You have BSC, Kalpataru, both of them down 2.5%. So plenty of pain. In terms of the positives, and maybe more importantly, the positives in this market, SKF up 7%. Vijaya Diagnostics, wee bit of margin decline, but nonetheless, stock up 7% thereabouts. And TVS Motors 4% higher, holding up so very well. Kirloskar Oil also up roughly 2%. I've pretty much marked all the gainers on the back of numbers outside of SBI, and maybe if we can flash a CAMS as well, up 1% or so. Those are pretty much all. In the broader markets as well, maybe an HPCL, BPCL, let's pull those up as well, 4% lower on the back of numbers. And IOB is down 2%, PNB is down 1.5%, and an ESAF, Small Finance Bank, that one down 5.5%, in fact down since the morning. That one as well. So we have plenty of stocks to talk about, of course, try and dissect. We also have the SBI presser, coming up very, very shortly. But let me quickly bring on board Rajesh Palvia of Axis Securities and Chakri Lokpriya of Red Strawberry. First off, Rajesh, on to you. Markets feeling a bit of pressure. Your evaluation both on the Nifty as well as the Nifty Bank.
Where we are seeing sustained supply pressure.
Rajesh, please give us a second. Rajesh, we'll have to cut across to the SBI presser as they are talking. We'll come back and get your views, please.
For the economy. Let me start first with a brief description of the present global and the domestic economic scenario. Global growth remains resilient with easing inflationary pressures and tight employment conditions, in spite of geopolitical and extreme weather event risk. The IMF, in its latest April 24 World Economic Outlook, raised the global growth forecast to 3.2% for the year 2024, which is 10 basis points higher than its January 24 update, and expect the global economy to grow at the same pace in 2025. Global headline inflation is expected to fall from an annual average of 6.8% in 23 to 5.9% in 24 and further to 4.5% in 25, with advanced economies returning to their inflation target sooner than the emerging markets and the developing economies. Commodities and energy prices can drag the economic and the growth prospect by infusing sudden shocks on the supply side, a collateral impact of escalating geopolitical tensions at multiple fronts. However, in this backdrop, as far as India is concerned, the conditions are, however, shaping up for an upshift in the real GDP growth, backed by the strong investment demand and upbeat business and consumer sentiments. CPI inflation has already gravitated to 4.9% in March, after averaging 5.1% in the preceding 2 months. CPI inflation is expected to moderate in ensuing months and is expected to taper to 4.5% in financial year 25 compared to 5.4% average in financial year 24. In financial year 24, the credit offtake of the all scheduled commercial bank recorded a growth of about 20%, while deposit grew at about 13%. And the momentum with some moderation is expected to continue in the financial year 25 too. I'll now discuss the broad bank's performance parameters. Once again, we have delivered excellent numbers. I'm happy to share that our net profit for financial year 24 is the highest ever at rupees 61,077 crore, showing an increase of 21.59% over financial year 23. Our net profit for the quarter 4 of the financial year 24 is at 20,698 crores, which has increased by 125.87% sequentially. This is despite incurring wage revision expenses of rupees 13,387 crores during the current year period as per the bipartite wage settlement, and after absorbing the additional liability to the tune of rupees 7,100 crore relating to pension liability and the DA relief neutralization in the third quarter as a one-time exceptional item. Our ability to absorb the above liabilities without significantly impacting the long-term profitability outcomes of the bank demonstrate the resilience of our balance sheet. ROA of the bank stands at 1.04% for financial year 24, and it has improved by 8 basis points over financial year 23. The ROE for the financial year 24 is at 20.32%, which has improved by 89 basis points over financial year 23. We have been consistently delivering ROE in excess of 15% for the last 7 quarters. The cost-to-income ratio of the bank is at 55.66%, including wage revision expenses and excluding the impact of the one-time exceptional item of pension liabilities and dearness relief neutralization in quarter 3 financial year 24. Excluding the wage revision and one-time exceptional item, the cost-to-income ratio would be at 49.34%, which is an improvement of 315 basis points over financial year 23. Non-interest income has shown a growth of 41.15% in financial year 24 over financial year 23. Our deposit has grown by 11% YOY and term deposit has grown by 16% YOY. We are mindful of our liability portfolio as it provides a stable stream of resources for us. We continuously monitor the concentration of our deposit profile daily, ensuring that dependency on the wholesale funding is contained within the prescribed levels. Liquidity coverage ratio stands at 124% as on 31st of March 24 and is well above the regulatory benchmark. I am happy to highlight that the credit growth has been robust across all the segments. Our retail, agri and MSME, which is popularly known as RAM, advances have crossed 20 trillion mark during the year. Out of the above, retail personal advances constitutes 13.5 lakh crore, which is 13.5 trillion. Agri advances are at 3.05 trillion and MSME advances stands at rupees 4.33 trillion, growing at the rate of 14.68%, 17.92% and 20% respectively. The corporate segment is also showing healthy growth at 16% plus YOY growth. I am glad to share the progress we are making in digital banking. 61% of our savings bank accounts are opened through YONO in financial year 24, and we are also leveraging analytics with significant business accretion. Now it stands at 1.37 trillion as against 1 trillion in the last year. This is essentially attributed to our analytical leads, which we are leveraging full, and it has led to about 32% growth in the digital acquisition of the business. With regard to asset quality, our gross NPA ratio has improved by 54 basis points YOY and stands at 2.24% as of March 24 and continue to be at its lowest in more than 10 years. Our net NPA ratio has improved by 10 basis points and stands at 0.57%. Slippage ratio for financial year 24 has improved by 3 basis points YOY and stands at 0.62%. The consistently improving asset quality is also reflected in our credit cost. For financial year 24, it stands at 0.29% and has improved by 3 basis points on a YOY basis. We are well provided for our loan book with PCR, including AUCA, standing at 91.89%, and PCR excluding OCA stands at 75%. While we are glad about the outcome in the current quarter, we are also conscious of our areas for further improvement. On the liability side, we continue to focus on increasing our share in current account while maintaining our leadership position in savings deposits. The cost base of the bank is high. However, the same also reflects our focus on compliance and establishment costs. We aim to lower our cost to income ratio by focusing on the income side. Our CET ratio now stands at 10.36%. It is the highest since the implementation of Basel III norms. Additionally, the current ROE profile of the bank remains above the credit growth trends, and hence we foresee CET1 accretion going ahead with the help of our plowback of the profit. However, the bank is open to raising equity capital if the growth trend so warrants. Our subsidiaries are also consistently performing well and continue to create significant value for all our stakeholders and most importantly for our customers. To conclude, I want to thank you all for your support to the bank and also showing the confidence in the bank's ability to perform. The bank, while pursuing its own progress, contributes to the progress and growth of the economy. We remain committed to rewarding your trust in us with superior sustainable returns over the long term. My team and I are now open for taking questions from all of you. Thank you.
Thank you so much, sir. Now we move to the question and answer session with media. To ensure seamless flow of the session, we will move from this end to that end, allowing everyone an equal chance to ask a question. We request you to please follow the format and restrict yourself to 2 questions. Focus on bank. Now I request Gopika from mid to start.
Congratulations, sir, good set of numbers. To begin with, could you tell me what led to the increase in fee income this quarter, especially the miscellaneous fee income? So sequentially, fee income has seen a good growth. Could you tell me that? My second question is on the recent RBI draft rules on project finance. How have you assessed it? What kind of an impact will this have on SBI's P&L?
Yeah, the first question is relating to your fee income, and fee income, the major contributor to the fee income has been the loan application fee that has gone up, and it has been contributed by CCG, Commercial Client Group, and also by SME also. And also that is nothing but a reflection of our growing loan book. And apart from that, of course, we are seeing good growth in terms of our forex income, and also we are seeing good growth in terms of our cross-selling income. So I think the fee income piece is something which is, I hope that we will be in a position to sustain this, because now it has become part of the way we conduct our business. Your second question, which is relating to the RBI recent discussion paper which has been brought in. Well, I think we have done some assessment, but I would say that as of now, this is too premature to really comment on that, because it is still a discussion paper, and we will be reaching out to RBI and also with our views on what they have proposed, and let us wait for the RBI final decision in this matter. But nevertheless, I would only like to say that we have made some broad assessment, and based upon those broad assessments, even the incremental provisions which are required to be done would not be really significant for us. We will be in a position to absorb those kind of additional provision numbers without much of disruption. And also the fact remains that if at all those become the reality, maybe the pricing of such loans will also be revisited.
Next question is from Joel from Economic Times. Good afternoon, sir. I wanted to understand, you all have increased your provision, though the asset quality is improving year on year. The provision, have you made any counter-cyclical provisions, or is it something different there?
No, see, what happens is even for the standard assets also we are required to make the provisions. So because our loan book is growing, so that is leading to additional provisions. It is not because of the quality issue. Yeah.
Also, net interest income is a little bit 4% growth, 3% growth, single digits. NIMs also have fallen here. I just wanted Firstly, why is net interest income? Is it because the cost of funds is increased? Is that the main reason?
See, the point is that there is always a time lag for the readjustment when it comes to the loan book and also the deposit book. But I think we have already plateaued as far as our deposit cost is concerned. So I don't think so that we'll have even more impact on this. And secondly, as far as the loan book is concerned, that also we hope that we will be having a repricing of the loan book also going forward. So I think the net interest income, what you are observing today, and what you mentioned in terms of the growth is something little than lower than what you expected. This is essentially attributed to that.
So it will only improve.
It is. We are only.
So the outlook for the
NIM actually, I think globally, if at all you will look at it in the industry, the NIMs have come down. But as far as we are concerned, we have assessed and we are hopeful that we should be in a position to maintain the NIMs at this level. And
Okay, that was, of course, Dinesh Kumar Khara, who is the Chairman Managing Director at SBI. Spoke about various pieces. Let me just try and sum it up. First off, on the upside, he's given plenty of positive commentary. PAT at record highs both for FY24 as well as Q4. Wage revision expenses, despite being incurred, yet the balance sheet was able to absorb all of those and churn out a PAT ROE in excess of 15% in the last 7 quarters, which is extremely positive. Credit growth continues to remain robust. He spoke about the RAM portfolio. He also suggested that FY24 slippage ratio is lower than FY23 by 3 basis points on a lower base, which is a very, very positive piece. On the liability side, he said that he's looking at strengthening the current account number versus savings account where they already lead. Cost to income is yet to come off from above that 50% number, so still need to see progress, and that's possibly a lever going forward. Fee income, he believes, is sustainable. It's a very strong fee income number, 50% sequential, 24% year over year. That's probably what has led to this beat in Q4, and he believes that that is expected to sustain. He didn't talk about how much of that number was a one-off, but it's expected to sustain, which is a positive, at least for me. And he's also spoken about RBI's draft paper and believes that possibly costing for some of these, or pricing for some of these loans may start to go up. He's also spoken about deposit repricing largely over and margin stability going forward. So plenty of positives coming through, Neeraj, with regard to the commentary from SBI, at least the first cut of that commentary.
Yeah, but it's showing in the stock still up about 1.5% on a day when the markets are down. Chakri Lokpriya with us as well, as is Rajesh Palviya. Gentlemen, thanks for being by patiently. Chakri, let me just first come to you on this SBI piece, and then we'll get in the market view, because that is the bigger worry. But let's just get SBI out of the way. What did you make of the commentary and the results?
SBI, I think, the numbers were excellent. It gives you a very good indication that the balance sheet is exceedingly strong. The outlook for the company is very strong in terms of its loan book. The balance sheet is extremely well positioned to absorb RBI's new provisions, even if they come about in its entirety. And their NIMs are going to be maintained at current levels, which is excellent, with an ROA improving to 1+, and an ROE is further improving, and its credit costs coming down. This is the perfect combination any banker would look forward to. And so I think, the next stop for SBI, it's a 1,000 rupee stock over the next 6 months. I think valuations are pretty much on its side. And this is the story for the broader market. Wherever we are seeing companies able to take market share, beat guidance, provide an outlook of improving scenario, will be rewarded.
Okay. Well, but the market at large seems to be a bit wobbly. Banks are correcting. Rajesh, sorry we had to cut to SBI, but let's get back to your thoughts, because we are now trading at the low point of the day, sub 22,000. Does it open up more downsides, or are you now starting to hunt for supports?
So Neeraj, Nifty is now trading almost near to 22,000 mark. So we have broken the important put-based concentration in this fall today. Now we are trading below to 22,200. Nifty now slipped below to 50-day moving average and now approaching to 100-day moving average support area. So looking at the recent fall in last 4-5 trading session, the near-term trend has turned on the bearish side. If at all Nifty breaks below 22,000 mark, then yes, this fall can extend further, and Nifty may slide further towards 21,800. That's the next important support area for the Nifty based on the put concentration at this juncture. Sell on rise would be the strategy at this moment till Nifty not able to take out about 22,250 on a closing basis. So whatever minor pullback if we get in the market should be used as a selling opportunity for Nifty, as the broader market is showing supply pressure. Most of the sectors which were in bullish zone are attracting the profit taking at this moment, and the underperforming sectors are getting more short selling at this juncture. The major dragger is banking sector at this moment. Bank Nifty has slipped below to 48,000 level, so that's the negative development at this moment for the Bank Nifty. So if it remains below to 48,000 level, then possible down move can extend in the Bank Nifty also, and then lower side target we could see towards 47,200 also. So for Bank Nifty, 48,000 is very challenging level at this moment for near term trend. So we believe that sell on rise should be the strategy for trader at this juncture for Nifty as well as for Bank Nifty.
Okay, more bearish, at least at the outset, Rajesh. Rajesh, let me, in this market, understand your picks before we move on.
So first pick is Titan, that is on the short side. Stock is now slipped below to 200-day moving average. The way stock has broken its important support area on daily, weekly time frame, that clearly shows that some liquidation is taking place, and we may see furthermore bearishness in the stock. We are projecting target towards 3,200 to 31 90 kind of zone on the downside. So Titan future one can go short. Keep your stop loss at around 33.10. The sector where we are seeing some buying interest, that is automobile, and from that space Hero Motor is looking promising. So here we are bullish for Hero Motor at this moment, as whole automobile space is still holding the ground on the higher side. So we believe that some outperformance is likely to there in automobile space, and Hero Motor is our preferred choice. We expect that Hero Motor, if it continues to hold above 47.30, then possible rally can extend for Hero Motor towards 48.50 to 48.80 kind of zone. So these two stocks at this moment we are focusing on for trading perspective.
One positive, one negative. Quickly, Rajesh, if I can have your views on SBI.
So overall, SBI structure is bullish, though market is volatile. That's why we are not seeing, despite results, stock is not able to give any pullback action. I think once market stabilize at a certain point, SBI is ready to show a good traction in terms of buying, and possible target for SBI we can see towards 860 to 870 also for short term basis. So I think SBI one can remain on the long side of trade. Keep your stop loss at around 805.
Okay. We need to slip into a quick break, but we'll come back from the break, talk about a bunch of other things. We haven't quite discussed Larsen & Toubro thus far on the show. Asian Paints is the other big disappointment today, and there are a host of mid-sized names as well. So we'll talk about all of those. Stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
Okay, welcome back. You're watching India Market Close here on NDTV Profit. Thanks for staying tuned. Let me quickly take it across to Chakri. Chakri, your views with regard to the heavyweight Larsen & Toubro. That one has corrected nearly 5%. Let's quickly check as to how much, but roughly 5% odd. Is this a good opportunity in your view?
Indeed, I think it's a great opportunity to buy Larsen & Toubro. The weakness is probably because, their margins came in slightly weaker. In the current environment of high interest rates, the fact that, they could still expect to grow their order book and another 10% going into the next year is a very strong indication of the kind of revenue growth that you can expect from the company. And as interest rates come down in the second half, whenever the RBI starts cutting rates, at that point, the margins again will start improving. Pricing overall will improve. I think L&T clearly is a buy, because it's all the various segments of the businesses are actually doing well.
Chakri, the fact that there is a bit of a lull around election season spending, does that not worry you? And if not just for L&T, but does that argument get extended to some of the other construction infra companies, that for the foreseeable future, there will not be new ordering, as well as execution might also see a bit of a pullback?
We're already in May. I think, as elections will be done and dusted in less than a month by June 2nd, 3rd. So, the ordering will be, whatever came to hold, will again come back to life in about a month from now. And, it is very clear that, the industrial activity is very strong. Today's, for instance, you spoke earlier about SKF. It's a company which benefits from strength in automobile industry, industrial segment, railways, and defense. And it grew like 45%. So it's a good indication that these various sectors that it caters to are all actually doing really well. So, while infra, usually traditionally, it slows down in this time of the year, election and additional factor will pick up in a month or so.
Okay. By the way, it's not just L&T. Some of the capital market plays today have come off. So Motilal Oswal is down about 8.5. Angel One is down about 5.5. I wonder if some of the others too are correcting in trade today. But it seems that the pressure is across the board. And it's also there on Asian Paints, by the way. So bring that stock up. That's the other index major, which after falling 2.5% yesterday is 4.5% down. I would reckon this would be 52-week lows for Asian Paints. I may be wrong, but I think these are the lows for the stock. Priyam Tolia, Senior Research Analyst of FMCG at Axis Securities, who tracks Asian Paints, joins us right now with his verdict there. Priyam, what did you make of the numbers?
So yeah, the results were pretty much lower than our estimates. Of course, the other results were missed on across line items. The most disappointing part was on the top line growth as well as on the margins front. So as management has highlighted that they have delivered a 10% volume growth. But this was on account of the price cuts which company undertook, mainly on account of the on increased competitive intensity from the graphene, as well as the weak demand environment. So yeah, the numbers were pretty weak for Asian Paints.
What's the outlook, Priyam, going forward? Do you therefore now start to change your estimates? I understand that the con call is still awaited, some commentary is still awaited, but what's your initial feeler? What's your initial sense? Do the estimates going forward start to get impacted given Grasim has come on board, and should one start to factor that into numbers?
So yeah, what we expect is that, and of course we have a neutral rating on the stock as of now, but we will look at the final numbers post the con call. But if you ask me from a near-term perspective, then of course there could be a margin pressure in the near term due to the price wars which is likely to come up on account of the new player which has entered. And of course the trend has not picked up. And if you see from a commentary from the press release, commentary from the management has said that they are positive in terms of the demand environment going ahead due to good monsoon. But what we feel is that the meaningful recovery in the paint sector will likely to start from the second half of the year. Right. So from a near-term perspective, what we expect is that there could be a pressure on the margins as well as the top line.
Sure, and recovery in decorative paints, we've seen some pressure there. Any visibility in your view? Sorry, yeah, please go ahead.
Yeah. So if you see decorative paints, the premium side of the portfolio continues to remain under pressure, which was also in the Q3. However, if you see from a value and value side of the paints, they are doing well, right? So consumers definitely are downtrading in terms of that, right? If the consumers are downtrading, there could be a margin pressure as well on that side, right? So what we feel is that the near term, that we don't see a meaningful recovery for Asian Paints, but going ahead, we will see how the things pan out in terms of the demand as well as the competition.
And with regard to rural, last off, we've seen rural commentary come in, talk of green shoots and the like. What's your sense of the impact on someone like an Asian Paints?
So again, we'll have to see how it pans out. Those more of the FMCG companies and other consumer companies have highlighted that they would see good rural recovery in this year. But from a paints perspective, as the competition intensity has increased, which will be the key monitorable going ahead, right? So how the competition intensity pans out, which will define the future course for the company as well as the industry.
Okay, thanks so much, Priyam, for joining us, giving us those insights, specifically with regard to Asian Paints. But let me take it across to Rajesh. Rajesh, Asian Paints under some bit of pressure today. What's the sense like for you? What are your trading calls on this one?
So there is an underperformance in the Asian Paint if we compare with other companies, other peer companies. Looking at the overall structure, stock is in a bearish trend at this moment, and now stock is approaching towards its critical support area of Feb 2023 swing low. So I think if stocks further fall from here, if it breaks below 2700 level, then this down move can extend further. As looking at the monthly, weekly time frame, stock is still in the bearish mode, and the stock has broken its important near-term support area also. Stock is slipped below to all its long-term, short-term moving averages. So below 2700, there could be another round of selling pressure we can see, and possible downside can be seen towards 2630 to 2600 also. So now on the higher side, 2760 and 2780 are likely to act as a major supply zone for any kind of minor pullback in the Asian Paint, and trend is likely to remain on the bearish side for some more time.
Okay. What's standing out, of course, are some green pockets, Hero Moto, TVS Motors, and Tata Motors. So autos, M&M and Bajaj Auto too in the green. Somehow autos have withstood the selling pressure quite convincingly, I might add, because these are not chop change gains. I mean, 3% is pretty serious for a Hero MotoCorp on any given day, and especially on a day like this. Chakri, a word on this very large market mayhem that we're seeing in volatility. and then followed up with a view on autos because they're kind of standing out very, very well post results.
Indeed, I think as we go closer to the June election date, I think, this volatility number will kind of increase because of the uncertainty about, day-to-day change of mood. What do you think is the outcome is going to be? And that actually is kind of throwing up some opportunities because you have some very strong companies reporting some very strong numbers. So if they, for example, that SKF we spoke earlier, now that whole segment, since you said autos, that's also an indicative demand. If SKF does well, NRB Bearings, Timken, all those companies do well. They're also doing well in part because autos as an industry, amongst other industries, is doing very, very well. Now, if you look at Hero Motors and TVS Motors, both have taken increased market share. Exports markets have improved. Margins are improving. And, the pricing is actually holding up. In a tough competitive market, if you can do all of these things, I think the volumes will only pick up in next half, in the second half of this year, and therefore I clearly continue to be positive on Hero Motors and Tata TVS Motors as well as Bajaj Auto.
Okay, but while autos are looking okay, we're now trading at the lowest point of the day for the Nifty. Keep that in mind, 21966, 1.5% lower for the Nifty. So it's now looking increasingly worrying from anybody who's looking at leverage trades on the long side, because save for autos, nothing else is working, and the index itself is trading at the lowest point. HDFC Bank, big contributor to the Nifty, very big contributor to the bank Nifty's fall as well in the session today, and hence I believe Rajesh was talking about how it's a sell on rise market, certainly not currently a buy on dips market. Rajesh, but autos have held out well. Do you see a probability of outperformance, or looking at the market scenario, avoiding longs is maybe a more preferred bet?
Yeah, I think avoiding long for trading point of view, yes, avoiding long is the best strategy at this moment, because the market sentiment is not good, and the way market is showing the selling pressure across the sector, that will not hold out auto also on the higher side. We may attract some profit taking in automobile also if market continues these kind of supply pressure. So I think for trading traders, I think they should avoid at this moment on the buying side of trade. Look for some opportunity when some pullback comes in the weaker sector and the weaker stocks. That stocks can be looked at to go short at this moment, or the stocks where we have seen very significant corrective move or trading near to the major support area, that can be looked at for some pullback action. But I think first Nifty needs to be hold out at certain level, because since morning we are seeing that continuous supply pressure is there, and even if you look at the now Nifty is slipped below to 22,000 level, and we have weekly expiry for these options, and the way put writers have are trapped in this today's fall, they are now shifting their position on the lower side, and they are adjusting their positions and losses. So I think that furthermore supply pressure we may see in the coming trading session also. So at this moment we advise to avoid on the buying side. Don't take a larger quantity even if you are buying at this juncture.
Okay, clearly not in favor of buying at the moment, Rajesh advising. Let me though switch focus to the auto pack. Neeraj did mention that that one is doing fairly well, holding up fairly well on a tough day of trade, 457% higher on the Nifty auto. We have Hero MotoCorp, which reported the highest ever profit, while TVS Motors also posted healthy margins. Both stocks have seen significant gains in today's trade. Look at the top two on the Nifty auto, 3.5% up, both of them. So what are brokerages suggesting, and what are those key takeaways from both brokerages as well as the results? Puneet joins in with all of that.
Yeah, thanks for that. So Nifty Auto being the biggest gainer today on the back of these two positive results. Just for TVS, the numbers came after market hours, revenue up 23% compared to the previous year, while EBITDA also grew roughly 36%, coming in at roughly 11.3%, which is now the new normal, as the company said. On the PAT level, profitability is up roughly 18%, and the positive view was supported by the brokerages as well. Key highlights for the quarter was the first time ever is the company selling upwards of 40 lakh bikes in a financial year. While they said that they will also be introducing multiple variants of the iQube, which will be key to compete with the likes of Ola as well as Ather. While they also mentioned that they will going to be starting to export the iQube to the other ASEAN markets. On brokerages, because of the valuation, Citi has a 22% downside from the current levels, coming in at roughly 1,550 rupees. They say that it was an operational beat on the numbers, as well as expecting high healthy demand for the two-wheeler industry in general. They say that the multiple launches in the two-wheeler and three-wheeler planned by the company is a key positive, and this same view was echoed by MK as well, which has a target price of roughly 2,250 rupees per share. Moving on to Hero MotoCorp, we see that the results, as you rightly said, highest ever profitability. Revenue growth was strong at roughly 15% as well, while margins was up 25%, coming in at roughly 14.3%. The company also highlighted that this would have been higher by roughly 130 basis points, but the EV division is currently loss making, so that's why the overall margins have come in at roughly 14.3%. Brokerages have been very positive on Hero MotoCorp, with Citi target price of roughly 5,500 rupees per share, which is an upside of 20%. Healthy realization as well as margin trends are a key focus area for the company, while premiumization focus, as we know, is going to be key going forward as well. MK has a higher target price of roughly 6,000 rupees per share, which is a 31% upside from the current levels. They've said that the Q4 performance is in line, while management has highlighted for the first time that the first-time buyers in the rural market might finally be back. So overall, a very strong picture on the two-wheeler space, started with Bajaj, both Hero and TVS today echoing the same. Back to you.
Okay, yes, so absolutely strong numbers. Another percent from here in terms of margins will be extremely strong. And MK has upped their target price along with a couple of other brokerages. MK's earlier target price was 5,100, now at 6,000. So clearly bullish. But let's slip into a very short break. More on the other side, so stay tuned. We'll continue to talk specific stocks, try and get you more perspective.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about And this is, of course, the volatility, the election trade, volatility on the Nifty. We know that VIX has been high, but this kind of signifies the kind of points that have happened from the first phase of the election thus till now. And you can clearly see the kind of divide that has come about in between a phase of a rapid rise, if you will, and then an equally swift fall. And a swift fall it is because now we are at nearly 2.5% or nearly 3% down for the small cap index, and the Nifty too is now very close. Forget 22,000, it's very close to 21,900 odd, about 30 odd points away from there. So it's actually very swiftly come off as the Nifty, 363 points now. Rajesh, you were rightly saying that this is not a buy on dips market because it's sunk further today. I'm just trying to understand whether or not you take a trade, but what are the levels that you're watching out for on the Nifty per se, or even for the small caps for that matter, which are down 3% now?
So I think, Neeraj, as I mentioned, 21,800, where we see that Nifty can continue this fall further. So I think another 150 point fall we can see in the continuation of this down move. The way Nifty has broken its 50-day moving average, and there is no as such recovery coming from any of the sector. It's a continuous supply pressure. So market is sensing something else at this moment. And despite of earning, there is no disappointment, major disappointment from the earnings also. Market is not giving any kind of thumbs up to those earnings also. And stocks are, continuously showing the profit taking. So I think some bit of cautious approach we can say at this juncture from the market participant, and they are taking some profit on table and they are booking the profits. That's why Nifty has now broken decisively below 22,000 level. 21,800 is the level where we are focusing for the Nifty in the continuation of this fall at this moment.
It certainly looked very, very wobbly, and just the point contribution shows how SBI now is the top contributor and to the gainers. But it's, except for that and autos, there isn't quite too much out there in terms of a cheer for the large cap space at all. So bear that in mind. Now, Chakri, today it was not just about results. There was also this whole spate of regulatory moves that are happening. And we know that what RBI has done to some of the NBFCs, but now this comment coming in about even gold loan companies and how the disbursals should be restricted, particularly on the cash side. And while the companies themselves have said that it may not be as big an impact, the market doesn't seem to be liking that.
Indeed, when the sentiment is kind of weak the way it is right now, any negative news is taken even more negatively. And I think because the RBI's provisions are, actually, if long story short, it'll actually improve the balance sheets and therefore make the company stronger, which would improve the multiples because, the valuation, the margins will improve. But, that's a story for another day. But on a weekday, I think, I think it's best to remain on the sidelines rather than chasing stocks which are already done very well.
Chakri, do you think it's just sentiment, or do you also believe that valuations are looking on the expensive side? In the run-up to maybe both the elections as well as Q4 numbers, were valuations looking on the expensive side, and therefore every piece of slightly difficult news is now met with a adverse reaction, and every positive news not really rewarded in that sense. Is that what is really playing out, or is it sentiment?
I think it's partly sentiment, because if you look at what happened, for example, with Titagar Wagons, Jupiter, those railway companies, they reported exceptionally strong numbers yesterday and a couple of days ago. And in spite of the stocks having gone up like 5 times, 10 times over the last couple of years, the stocks again went up. And you look at their multiples adjusted for the new order book, etc., the new revenue growth, their multiples are still reasonable. So there are enough pockets within industrials, railways, defense, even infra, and even banks for that matter, where adjusting for the earnings, the stocks are looking reasonable. So there's enough pockets that you can find to. But since there's already money made, I think on days like this, it's easier to take money off the table.
And in terms of a trade, Rajesh, with regard to Manappuram, Muthoot, should you venture at all in some of these? I know overall you're pretty adverse at this point, but Manappuram, Muthoot specifically, and what should one do if one is already holds long positions?
So I think structure for Manappuram is on the weaker side, and the way stock has broken its important support area on a daily as well as on the monthly time frame, that clearly shows that we may see furthermore supply pressure. Looking at the near-term, short-term structure, now stock slipped below to its importance moving averages. I think the next immediate support area for Manappuram is now placed at around 158 to 155 zone. If at all stocks holds those levels, some pullback action we can see from those levels. Though stock is already in oversold trajectory, this is the 6th consecutive day where we are seeing supply pressure is there in the stock prices. So I think around 158 to 159 zone, one can try to buy some contra bet around those levels with very strict stop loss of 155 for just to play a pullback action, because it's a very important and critical support area for the stock in this decline. So I think wait for another 2 to 3% kind of fall in the stock, then again review around 158 zone. For Muthoot Finance, stock is now almost trading near to its important support area of 50-day moving average. So here, yes, structure is on the bullish side. Stock is still holding the previous breakout which we have witnessed in last couple of weeks. So looking at the overall structure for Muthoot Finance, if it's a hold above 1530, 1535 level, then yes, this stock may attract some buying interest, and then possible upside towards 1640 to 1660 we can see in the near-term basis. So Muthoot Finance is looking attractive at this juncture on the technical side.
Attractive, at least got something from Rajesh with regard to a positive there. But let me quickly move across. HPCL in focus on the back of numbers, of course. Company came out with a strong quarterly growth in terms of earnings. Company also announced 1:2 bonus, but the stock absolutely languishing in trade. Mihika's here with both HPCL to give us the context, break down the details, as well as BPCL. Mihika, what can one expect?
Yes, for HPCL, now revenue beat estimates. EBITDA did miss estimates by 6%. However, profits were in line, and profits were up 5.3 times compared to the previous quarter. And revenue did see an uptick of 2.6%, which was expected, and margins were expanded 225 basis points. The company also approved a bonus issue, 1 share for every 2 shares held, and a record date for the same is June 21st. In terms of crude throughput, there was a 9.4% sequential uptick at 5.84 million metric tons, and the pipeline throughput was down 3% quarter on quarter to 6.5 million tons. The FY24, the average gross refining margins were down 25% at $9.08 per barrel versus $12.09 per barrel last financial year. However, it is key to know that FY24 did see an overall 9% uptick in Brent crude prices. When we talk about Bharat Petroleum, we do expect a 1.4% revenue uptick. EBITDA may rise 40% on a quarter-on-quarter basis, and net profit may rise 57%. Nomura has noted that Bharat Petroleum will benefit from the sequential rise in their refining margins. They estimate $15.9 per barrel, and they also expect rise in the marketing margins about the normative levels, and they also expect inventory gains on the back of higher crude prices.
Okay, thanks a lot for that, Mika. We'll watch out for BPCL and of course HPCL. It's corrected in line with HPCL as well. Chakri, quick thoughts here before we thank you on the oil marketing companies, and what did you make of HPCL results?
Given the volatility, in oil prices and, whether you will pass through or not, the prices, the margins are always suspect. So I think I'll stay away from HPCL and BPCL.
Okay, thanks, Chakri. Rajesh, your views and also quickly on your BTST ideas, if any.
So HPCL, if I look at the technical structure, stock is now approaching to its important support area on the daily chart, which is placed at around 495, 498 kind of zone. That is coincide with 50-day, 20-day moving average. So that needs to be closely watched for next 1 or 2 trading session. If it holds these levels, some pullback action we can see. On the higher side, 515, 520 is the key resistance area. If it slips below to 495, then I think this supply pressure may extend towards 485 also. At this moment, there is a STBT. UPL is short. Stock has given a breakout of its upsloping trend line. Stock structure is weak. Stock is making a series of lower top, lower bottom formation, and the way stock is going down in last couple of trading session, we expect that furthermore supply can continue. 450 is the downside target for UPL. Keep your stop loss at around 474. And the second stock is on the again on the sell side, that is Jindal Steel and Power. We see some selling pressure is again attracting in the metal space. Jindal Steel and Power is now negotiating with its 20-day moving average, looking at the supply pressure in most of the metal stocks, and throughout the day we believe that Jindal Steel Power can go down. 905 is the immediate target on the downside, so one can go short with stop loss of 938.
Okay, Jam, we'll leave it at that. Thanks so much for taking the time out and being with us, both Chakri as well as Rajesh. Really appreciate your time this afternoon on a tough day, I might add. But as the market's coming up to a close, we can only say that it's been more than a wobble, because this is some serious selling that has happened today. 21960, I'm really keen to note the FI numbers as they come and the turnover as it comes today. So it'll be important to see that. No prizes for guessing that most stocks are in the red. But if you just look at what's happened to the Nifty intraday, I mean, just the fact that we are closing at the lowest point of the day doesn't augur all that well. Right here, look at that. This is the lowest point of the day and we are ending here. And multiple stocks, HDFC Bank, Reliance Industries have contributed to this and not made the picture look very pretty. But yes, the top losers are LLT and Asian Paints. But if you look at, I think Reliance down about 2 percentage points and HDFC Bank about 2 percentage points as well. They would be amongst the top contributors, if not the top 4, but certainly amongst the top contributors. The fact that L&T has fallen 5.5 really makes it the biggest contributor to the losing cause. But like I said, it's not just the large caps. As 10 seconds left, the mid caps too have had a wobble, and Harsh will take us through that. But just pull up the BSE 500 picture. Nevertheless, while Harsh comes in, and the top losers and gainers will come up on your screen, and that will give you a sense of how bad the picture has been.
Well, yes, earnings heavy, Neeraj. Look at an SKF, look at a Godfrey Phillips. Tata Investment also up roughly 5% Paytm is one which stood out because last 2 trading sessions it's been on lower circuit, 5% lower. It hit its 52-week low earlier today morning and it's up 5%. So interesting to see what will happen to that one tomorrow. But some of the other earnings candidates, look at a Piramal Enterprises down 9% plus. Of course, some on the back of specific action like a Mannapuram. Also down roughly 7.5% odd. But it's been a tough day in general for the broader markets more than the benchmarks.
Yeah, and the capital market plays come into...
Yes, Motilal Oswal and the like, even an Angel one, probably the within the top 10. Even the PSU plays actually, Neeraj, now that you pointed out. Let's pull up something like an NMDC, an NHPC. Some of those really taking a battering in trade today. If we can also pull up maybe a BHEL to try and get context, nearly 5% lower for almost 4 to 5% lower for each of these. So some of those pockets seeing more, the selling more heavy in those pockets than others, but nonetheless, it's been a tough day. There you go, Nifty PSU down 3.2%.
Yeah, and it was evident in the large cap space as well, with the coal Indias of the world really coming off in the session. So PSUs have certainly taken a big knock. But well, glad the day is over. If you're a bull, you'd be happy that the day is over. For now, though, from Harsh and me and the team that has put this show together, thanks so much for tuning in. Tomorrow, starting 8 a.m., including election trades, we'll tell you all that you can do. Actually, starting 7:30 a.m., do join us to give you a complete snapshot of what could happen tomorrow after what has been a rather tumultuous day of trade.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downward,
Simplifying futures and options trading.
Don't worry about the future.
As we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Welcome to NDTV Profit. I'm Harsh Saita. We're going to talk quickly to the MD CEO at Muthoot Finance. We have George Alexander Muthoot, who's the managing director there. And we're going to talk to him with regard to, of course, the latest RBI letters which have been given to NBFCs clarifying that a disbursal of more than 20,000 rupees cannot be made against gold loans, or rather as gold loans against gold, of course, as security. Firstly, welcome Mr. Muthoot to NDTV Profit. First off, I want to try and understand from you, is there a violation that Muthoot has done of the income tax provisions or of any of the guidances issued by the RBI in their letter to you?
No, there is no violation in the Income Tax Act. The guidances from the RBI was not clear. That is why there were some grey confusion. So now the RBI has now clarified that going forward, everything should, all these 20,000 should be given in by bank transfers only. So there was no violation till now.
Understood. So, are you telling me that this was unclear in the past and therefore, while you were not in violation, other industry players were in violation?
We have been inspected by the RBI for the last 15 years. So, everywhere there is inspection and this sort of thing, violation has not been there.
Okay, okay, understood. So why is it that the RBI has written to you if there are no violations?
Sorry, that is something which I want to clarify.
Yes, please.
RBI has not written a letter to us.
Okay.
They have given a clarification to all the NBFCs, big, small, listed, unlisted. Everybody has been instructed not to give loans, not only gold loans, any loans above 20,000 in cash. Understood? It is not for Muthoot Finance, it is for all the universal NBFCs.
I take your point, and therefore, do you have a very good ear to the ground? Of course. Do you therefore suggest that this is a common industry practice of giving cash over 20,000 rupees in terms of loans?
It is just a convenience to customer. That is all. Some customers ask. It is not everybody is given about 20,000 in cash, etc. No way. No way. About 2 lakhs is always by check compulsorily. Some people, when they request, we give it as cash. So now there's a clarified. It is not to be done. It will not be done. Simple as that. Most of all the customers actually transfer their amounts through. All the customers transfer their amount through the bank only nowadays. So it is very easy for us to now do it.
Sure. And
No, it is not a challenge at all. Right from Demon time, most of the customers, big and small, they have been starting to use the online transfers, etc. So it is not an issue. It is just some inconvenience. So because for a business impact also, it is not going to impact because all the NBFCs are going to do this.
Sure. No, I want to try and understand and gauge industry and how it operates. What percentage, sir, of your loans do you disburse in cash typically in a year?
Below 20,000, yes, people ask for cash, we give. Even below 20,000, if they want a bank, it's very insignificant amount only.
Okay, okay, understood. And is that also largely how the industry works?
It is just a customer convenience, that's all.
Okay.
Anyway, customer is coming to the branch, it's not done online. Customer comes to the branch, brings his gold. Sometimes they ask for cash, we give cash, simple as that. Now we say, no, you take it through your bank account, that is fine. That's not an issue there at all.
Okay, so therefore, do you believe it's actually advantageous to you because you have been complying?
Probably some inconvenience to small customers. Sure. Probably a few of them may go to unorganized money lender, etc. That is far and few only.
Sure.
That's the only thing that can happen.
Okay, understood. And with regard to this gold loan business has been in focus since March. We had another player in the gold loan business and their business was embargoed now by the RBI. Several concerns at that point of time with regard to gold loans, and when we had spoken to the player as well as to some of the other players, they had suggested that there are several players engaging and it's pretty much common industry practice. Do you therefore believe that there are any concerns with regard to the overall gold loan business in India, the LTV and the like?
So I like to clarify this point. Most of the gold loan NBFCs were operating or headquartered in Kerala, and they were inspected by the Reserve Bank of India, Trivandrum, for the last 15 years. There has not been any serious violations till now, and no such violation, no such action like it was taken for an individual company in March has ever happened in the last 15 years in the gold loan NBFC. The first time it happened was in March. So several violations were noted. One of that was also this cash also. So now they clarified, don't give cash. Other than that, the other violations are all not related to this. They are different, and that will be taken up separately by the RBI.
Sure. So you're telling me your systems and processes are robust and there will be absolutely no impact of this on on your systems, on your processes?
No impact. So we have not given any guidance change also. We have given a guidance of 15%. I think we stick to that 15% guidance growth also for the next year.
Understood, understood. Thank you so much, sir. It's been a pleasure speaking with you and breaking this down with you. Thank you. We appreciate you coming in. Okay, so that was Mr. George Alexander Muthoot, who's the MD at Muthoot Finance, clarifying that Muthoot Finance largely unaffected by this. If anything, their processes are solid and robust is what he's come out and clarified. Let's slip into a very short break. More on the other side. Stay tuned to NDTV Profit.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Welcome back. You're watching NDTV Profit and you're watching the Small and Mid Cap Show. I'm Harsh Saita. We have with us an interesting management, in the second half of this show. We have Sula Vineyards to talk to us about the Q4 numbers. Of course, the stock under a bit of pressure in trade today. But let's talk to Mr. Rajiv Samant, the CEO at Sula Vineyards, to try and break this down a little bit further. Welcome, Mr. Samant. What's transpired in this quarter, Rajiv, and how do you see this quarter when you're looking at it from a rear view lens?
Hi, Harsh. One thing that I want to emphasize is that wine it's a long-term story. It's been another quarter of growth. Sure, the margins don't look as good as a year ago, but you're going to have some blips along the road. But the long-term growth story is very much intact, and it remains a story of premiumization. So we've seen another quarter of strong double-digit growth in our premium wines. That's the way we see it moving ahead. We're very bullish for FY25 and the future. That's our outlook on it.
Understood. So Rajiv, talk to us. Where has the margin hit come from? Because your gross margins seem to have expanded. So where do you think the impact has, or could you give us an understanding of where that impact has come from?
So, until now, we've been very dependent on our two main markets, which are Maharashtra and Karnataka, which are much more profitable markets. In this last quarter, and in fact, in the year in general, it's been our secondary markets, so I would call them non-traditional wine markets, that have grown faster than the traditional wine markets. Now, I believe that this is very good news for the long term. However, in the short term, is there going to be some margin impact due to this? Yes, there is. I've been maintaining it since the past 1 year that margins had reached probably a peak, and we would see some margin moderation moving forward. That's what's happened in Q4. So, I would just point out that our fastest growing market this time was the CSD, was the Defense Forces. Terrific growth. Our second fastest growing market in the year was Rajasthan. Third fastest growing market is Telangana. All these markets where wine really was hardly a player. So it's very exciting for the future. However, does it mean some moderation in our margins in near term? Yes, absolutely it does. So that's what's playing out.
Understood. So where should therefore margins start to, should they be in the 24% kind of range itself? Or do you see more margin pressure going forward as you continue to expand?
See, in FY24, we've closed with EBITDA margin of around 30%. Now, I would term that to be an all-time high. No, I definitely don't see margins coming down to 24%, nothing close to that. But would I see maybe a couple hundred bips moderation in margins? Yes, that's totally likely. Of course, I don't have a crystal ball, but that's very much likely. That's still a pretty high margin business. And, our priority right now needs to be to drive wine consumption and penetration in non-traditional wine markets. That's where the future lies for Sula. So will that mean that in a few quarters, a little bit of margin moderation here and there? Yes, it's going to happen, but we want to ensure double-digit growth for our premium brands moving forward, just as happened in the rearview mirror. That's what we're focused on.
Sure, I take your point. So I just want to quickly clarify, a couple of 100 basis points from the 30% benchmark, right?
Yes, very likely.
Understood. And that should play out over the next year or two, or you will continue to expand state-wise, and therefore for the foreseeable future you expect margins to be around the 27-28% kind of band?
I wouldn't be surprised, but of course I don't have a crystal ball, but I wouldn't be surprised with that.
Understood. Okay, so that's a good enough understanding. Now, just in terms of how sales is evolving, you remain reasonably confident of a double-digit plus kind, maybe a 15% plus kind of a growth rate going forward. Is that what one can start to pencil in, given these expansions you are starting to embark upon?
Let's differentiate between our premium portfolio and our regularly priced portfolio.
Okay.
What we've seen in this past year is, and in fact, in the past 3 years, is much faster growth in our premium portfolio than in our regular portfolio. So I wouldn't like to comment on the regular portfolio. Quite frankly, it is not a priority of the company. This is what I've been stating quarter in and quarter out. It's the premium price portfolio that's really our priority. There, yes, we are targeting strong double-digit growth. I don't want to comment on exactly 15% or not, but definitely strong double-digit growth in our premium portfolio. Sula wants to grow our wine sales at a price point of 700, 800 rupee plus. That's really where the money is made, and it's the most interesting part of the market. The 200, 300 rupee wine, there are too many players, there's too much competition, there's too much discounting. It is not a focus on quality, it's a focus on discounts for the consumer. That is not going to be our job. That has not been our job, and that will not be our job playing out. We continue to gain market share in the premium segment. That's the great news. Even though we have today, something more than 65% market share in that segment, we've continued to gain market share there. That's where we're going to concentrate.
Sure. Just for viewer perspective, Rajiv, I want to clarify 75% of your top line is the premium segment, right? So it is the major chunk of your revenue.
Yes.
Understood.
And it's more than 85% of the profit. So, when it comes to a profit mix, it's even more important. and compelling for us. The other great story of Q4, that's maybe missed a bit, is our growth in our wine tourism. It's been a fabulous year for wine tourism. This is really important for us for the future for three reasons. The first is this is where we really introduce our wines to so many new consumers. And so it's extremely important. The second, this is a place where we mostly sell elite and premium wines. So it's highly, highly profitable for us. And it supports the overall business. So all of these things being so important, we have a very exciting pipeline in the works for expansion of our wine tourism business. Third part here is, the entire margin is ours there. There's no distribution margin. There's no retailer margin. We have just opened our first standalone tasting room outside one of our wine campuses that's close to Nasik Airport. And we have some exciting plans ahead.
Understood. And I want to try and break this down a little bit, on your wine tourism versus overall revenue. What's the kind of mix like and how is it shaped up over the last couple of years? Because you've done plenty of expansion on the tourism side of things.
Yeah, so when you include the wine sales that we do at our tourism, we're looking at wine tourism having been somewhere between 15 to 20% of our revenue in FY24, close to 100 crores when you actually also take the wine sales. So it's pretty significant. And the margins there are very nice, much better, I would say, than our overall business margin. So that's why it's so important to us. I see in FY25 wine tourism going perhaps more than 20% of our overall business with extremely strong margins. So that's the way that I see the wine tourism playing out. So strong double-digit growth in wine tourism moving forward. That's what we are forecasting.
Very interesting. I also want a bit of a breakup, a bit of a flavor. Premium versus economy. What's the kind of margin like? Just to try and understand profitability metrics.
Look, I won't get into too much detail, but it's far more profitable. Of course, these are two completely different categories. In the premium business, you are using wine grapes. In the economy segment, it's mainly these wines are made from table grapes. So from that point of view, in the grape cost, there is a bit of a difference, meaning it's costing you more for premium, but your realization per bottle, your ex-winery price per bottle for the premium is more than double, maybe even triple of your economy segment. So that's where the gross margin is very heavy.
Sure. And how's the pricing environment really?
Just approximately around a 10% higher, you can say, gross margin, 10 to 15% higher.
Right.
If one is around 75, the other is around 60, 65, but that's very high level numbers.
Understood. Got it. Okay. No, but that's very helpful for perspective. Also, with regard to, how is pricing evolving? I want to try and understand that because you're clearly hinting at a shortage in premium and therefore you will have a very high pricing power there, I would assume. But I would like to understand how some of these metrics are working and as you expand geographies, you try to grow the popularity of some of these things and at the same time price it. So how is the pricing environment really evolving?
Right. No, I have not alluded to any shortage of premium. I want to emphasize that we've had another fantastic harvest. So again, 2024, it's our fourth great harvest in a row in terms of quantity and quality. So supply is absolutely not an issue of any of our wines. There's no shortage of premium. In terms of pricing, we try to price appreciably below inflation. And we have been very fortunate that our cost of goods has not been rising as fast as some of our other Alcobev players. So that's been very much in control. So pricing, 2 to 3% a year, that's really the way it's playing out. That's the way we expect it to continue, which we don't believe is going to be a burden on our consumers, and that much price we need to take. But very good news on the cost of goods front. Last year, we did see a packaging cost increase. This year, in fact, we've started the year with a packaging cost decrease, which will play out during the year.
Sure. Very, very quickly, with regard to CapEx, what's the plan like? Because I have just about 20 seconds.
We have about a 60 crore capex plan. Large part of that is in renewable. I want to quickly talk about the VAT refund. Also, we received around 90 crores of inflow just on that account in the last day of the financial year. So that's also going to play out nicely in Q1, etc. Interest costs should moderate nicely as a result of some of that being used to pay back debt.
Excellent. So lots to look forward to in FY25. It's been a pleasure speaking with you, sir, and understanding all of those metrics.
Cheers, Harsh.
Right, completely out of time on this one. We're going to, of course, please do stay tuned to NDTV Profit, but we're going to slip into a very short break. More on the other side. Stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy
Benchmark logged the worst fall in over 3 months. Both Nifty and Sensex end more than 1% lower. All sectoral indices barring Nifty auto decline. Benchmarks do better than the broader markets. SBI's Q4 profit beats estimates, jumps 24%, aided by higher other income, while for Punjab National Bank, profit doubles on the back of lower provisions. Mutual funds see strong inflows in April despite KYC hurdles. SIPs continue record streak with inflows worth 20,371 crore rupees. Air India Express terminates 30 cabin crew members for disorganization due to premeditated sick leave, gives ultimatum to others. Maruti Suzuki launches fourth generation of its best-selling hatchback Swift, hikes the price by 24,000 rupees. Company plans to export it to Africa, Middle East and South America, MD and CEO tells NDTV. Hello and welcome. You're watching The Reporter on NDTV Profit and I'm your host Pragati Oberoi. As always, the show aims to bring you the market headlines along with national and international news. As we kick off the show, it's time to see how the markets fared during the day. My colleague Harsh joins us for a quick wrap of all the market action.
Well, absolutely. It's been a tough day, especially on the benchmark itself, down 1.6% almost, 350 point knock that we've seen. We've ended the day above 21,950, but for a brief set of moments, we were below that number as well. It was across the board selling, and the Nifty Bank 2 down roughly 1%, almost 1.1% down. The Nifty Mid Cap down 1.7 and the Nifty Small Cap down 2.7. So clearly pressure across the board. But let's pull up the heat map itself, try and see which pockets have done well, and it's clearly auto. That one, as well as HCL Tech, a positive CLSA note, Infi positive as well, but SBI on the back of numbers. So auto, SBI, and a couple of IT names. But outside of that, just look at the universe. It's a difficult day. You look at the bottom maybe 30 and all of them have declined over 1%. The bottom 32 companies have declined over 1% in trade today. That just shows how deep the selling is across the board and how broad the selling is. Let's pull up the contributories and what we'll see is very similar to this picture. But in terms of pure contributories, look at the three big ones. Reliance, L&T, HDFC Bank. Those three itself have contributed to 150 negative points on the Nifty 50. Outside of that, you also had an ITC, which was lower. Let's pull up the sectoral heat map as well. And what we'll see there is outside of auto, pretty much everything in the red. You had PSUs down 3.4%, which is where the biggest gash is. But outside of that, pretty much a whole host of sectors which were under pressure. Nifty FMCG, which we were lauding just a few days back, was up 2%, today down 2.5%. So erasing all of those gains, and you're seeing metal, energy, as well as pharma do badly, 2% plus down on all of those. Let's pull up the BSE 500 to try and take stock. Some names with regard to earnings, some names in specific pockets like a Paytm, which has done badly through the week, seems to have recovered a bit. But outside of that, and SKF was up 7.5% on the back of numbers. But outside of that, the negatives were far stronger. Look at a Piramal Enterprises down 9%. Motilal, despite no news, down 8+%, and Angel One was also in a very similar basket. Growth stocks as well as the ones which have done well are taking a bit of a beating now. Manappuram on specific news, Muthoot also on specific news down. The VIX, of course, has been higher since or has been steadily going up, and the reason for that is this graph in front of you. Look at the gain and the loss. Of course, it's the election trade which is playing out at the moment, and look at the way in which it's playing out over the last few days. That kind of sums up the current mood. Of course, we have to wait and watch how tomorrow plays out.
That was Harsh with the market wrap for you. Now let's take a look at the AMFI data for April. Mutual funds saw strong inflows in April at 2.39 lakh crore rupees, and this was despite the KYC hurdles. SIPs also continued record streak with inflows worth 20,371 crore rupees. I am now joined by my colleague Alex Matthew for more details on this. Alex, thanks so much for joining us. What was the SIP contribution for April and what are the numbers now looking like?
Strong numbers for the mutual fund industry in terms of inflows for the month of April. On a consolidated basis, mutual funds in India saw inflows worth about 2.4
lakh crore rupees. Now, a bulk of this, of course, coming in from fixed income, but the number that was interesting, in my opinion, was the inflows into equity mutual fund schemes, which stood at 18,917 crore rupees. Now, interestingly, when you saw a very small outflow in small cap mutual funds in the month gone by, that is in March, in April you saw inflows of about 2,200 crore rupees for small caps and as much as 1,793 crore rupees into mid-cap schemes. You saw significant inflows also in sectoral and thematic funds, which saw inflows of over 5,000 crore rupees. As a whole, fixed income mutual funds saw inflows of about 1.9 lakh crore rupees, and this is par for the course. It is the start of a new quarter and indeed the new financial year, and quite a lot of inflows come in, particularly from institutional investors. There was also an interesting update for the hybrid schemes, which saw inflows of over 19,860 crore rupees, a bulk of which came in the form of arbitrage funds, which are seen as an alternative to liquid and overnight funds. So that's one to watch. The other interesting number, of course, was the SIP figure, which stood at over 20,000 crore rupees for the first time, in fact, and was quite a sizable number to talk about, and it stood at 20,371 crore rupees. Now, all of this is interesting because there are certain issues with regard to KYC norms that were changed at the start of April, and that was thought to cause a little bit of a problem in terms of inflows. That hasn't come to pass. In fact, according to representatives of the mutual fund industry, as many as 97 to 98% of the transactions that are being tried are actually going through. So it's not as big a problem as it was thought to be. Good numbers for the mutual fund industry.
Well, good numbers for the mutual fund industry. That's what Alex brought us. Now let's take a look at some banking news. SBI's fourth quarter profit jumped by 24% year-on-year to over 20,900 crore rupees. And this was on the back of higher other income. Let's go across to our colleague Harsh once again for more on the earnings. Harsh, another strong quarter for SBI. What are the numbers looking like?
Well, an overall very solid set delivered by State Bank of India, the largest bank in the country. Your margins have held up very, very well. 3.28% is where that margin number came in at. Same, absolutely the same as the last quarter. And when you're looking at the decline from the top also, not as significant as most analysts would have projected. And it seems it's now bottomed, because that's really the commentary coming in from Dinesh Kumar Khara, who's the chairman, Managing Director at State Bank of India. But let me take it across to where the key metrics are. Your OPEX largely flat, 2% down on a higher base of last quarter, 2% up year-on-year. So really largely flat. And therefore, what you are seeing is operating profit play out. The other play on operating profit was other income. Fee income was extremely robust. You saw 24% growth on overall other income, which has really led to a beat in operating profit, which has thereby transcended to the beat in profit after tax. Now, your ROA is closing in on 1.4%. You have record PAT, and you have record both quarterly as well as annual PAT, and you have record ROAs coming through now. The highest ever PAT number clocked by SBI for both FY24 and Q4 in quarter and year. So therefore, you're seeing extremely strong numbers overall. On the growth side of things, 5% growth on the advances side. The deposit side also growing healthily at 3% odd. 16% is what they've done now on advances. So overall, a very, very strong set. It's a beat as per what our poll indicated. And overall, a very, very good set with asset quality ratios also improving.
Well, that was a wrap on the SBI numbers, but let's take a look at what happened at the post-earnings press conference. It's too premature to comment on RBI's draft guidelines on project financing. That's what SBI's chairperson Dinesh Khara said at the SBI's post-earnings press conference to the media person. He also had more to say about reviewing the loan pricing. Take a look.
We have done some assessment, but I would say that as of now, this is too premature to really comment on that, because it is still a discussion paper, and we will be reaching out to RBI and also with our views on what they have proposed, and let us wait for the RBI final decision in this matter. But nevertheless, I would only like to say that we have made some broad assessment and based upon those board assessments, even the incremental provisions which are required to be done would not be really significant for us. We will be in a position to absorb those kind of additional provision numbers without much of disruption. And also the fact remains that if at all those become the reality, maybe the pricing of such loans will also be revisited.
Well, not just SBI, even Punjab National Bank reported its Q4 numbers. Another strong set of numbers coming in from another PSU bank on many fronts, in fact. Now, if you look at the net profit, it was up about 2 times, almost 160%, which also beat the analyst estimates. Now, this profit was up on lower provisions, which went down significantly by almost 60% compared to last year. Even the NPA-related provisions were down almost 50% to 1,960 crore odd rupees. You can see the figures on the screen as well for your benefit. The net interest income or the core income of the bank rose just about 9%. Hence, it was not a major contributor to the profit. Asset quality for the lender, if we have to see, improved sequentially with gross NPA ratio at 5.73% and the net NPA ratio at 0.73%. So, good set of numbers. But after the announcement of the fourth quarter numbers, Atul Kumar Goyal, CEO of PNB, also spoke to the media. And he had some very interesting comments to make on the RBI's draft guidelines on project financing. Take a look.
It is a draft guideline. It is not going to be implemented because RBI has given the draft guideline for consultative, because all the stakeholders, whether it is a borrower, whether it is a bank, everybody has the right to submit their views also, point number one. Even I have told we don't have any idea as on there to reduce the infrastructure, because in one of the questions I have told you 98,000 is my exposure to the infra, but that is entire exposure. If you link with this, there is so many exposure where DCCO is not applicable. Suppose I am financing to the InvIT, that is classifying in the infra. But that particular circular is not applicable, so you should not think 98,000 sare pe applicable. Your another question which I was trying to tell, because as on rate, as per the draft guidelines or the regulator, it is applicable to all type of the project finance, whether it is a infra, non-infra, without any amount, even it is a 1 crore rupees. It is applicable.
That was PNB's MD and CEO for you. While a strong pack of numbers from the banking law during the day, Asian Paints, on the other hand, reported subdued set of fourth quarter numbers, but largely in line with the analyst estimates. The company's revenues were in fact impacted by weak demand and down trading. I'm now joined by my colleague Sesha Sen to tell us more on this. Sesha, weak set of numbers, but in line with analyst estimates. So what are you picking up from this?
Right. So the revenue has declined, largely because of weak demand for the decorative paints business and down trading, but also there were price cuts across the price segments that Asian Paints undertook to weather tighter competition following the entry of Grasim, and that affected revenues as well. Now, EBITDA was down 9.3%, while margin contracted around 19.4% versus 21% a year ago on higher brand investments. Net profit marginally was up 1.3%. Now, the other key highlights from the management was that the domestic decorative business volumes grew 10%, which is quite well. The international business continued to see good double-digit profits at 12% despite headwinds in some of the markets like Nepal and Egypt. The home decor business, in fact, continued to see a better quarter with new categories making headway. But within decor, again, two categories like the kitchen and the bath segment are not growing really well. Sales for kitchen business grew just 3%, while that of bath fittings actually fell 8%. The company had earlier said that it expects the home decor segment to be closer to 8 to 10% of its overall decorative sales by FY26. So we'll have to watch the commentary on the outlook going forward. We'll bring more as we know.
Right, Sasha, thanks so much for bringing us that update. Moving on to a burning issue from the aviation space. Now, Air India Express, as of this morning, has terminated close to 30 cabin crew members for disruptions due to their premeditated sick leave. Now, the airline has rather given an ultimatum to several others, asking them to come back to work. The company has also curtailed its flight schedule for next several days due to this mass sick leave by the section of a certain cabin crew.
It is the day 2 of the Air India Express crisis, and today also the flight operations remain impacted. 74 of the Air India Express flights have been cancelled across India. This includes the international as well as the domestic flights. Now, Air India Express has in fact issued a fresh statement where they have said that today they will be operating 292 flights, and Air India will also be operating on 20 of Air India Express's routes to help them, to support them in this time. Now, what is also important to note here that in the statement they have also said that while we continue to engage with our cabin crew colleagues with a commitment to address any concerns, we are taking appropriate steps against certain individuals as their actions have caused grave inconvenience to thousands of our guests. Now, this certainly, this certainly hinting at the dramatic developments that we saw today, how in fact all those employees, that had taken this mass sick leave that impacted the operations, some of them already have been sent termination letters. Now, what the number that we are getting to know at this point of time is 30 employees of the Air India Express have been sacked, and in that termination letter it has been written that because they did not turn up for their duties, this goes against their employee code here. Now, shortly after that, an ultimatum had also been issued to all of these employees to join back their work by 4 p.m. today itself. Otherwise, the management can take action.
That was the update on the ongoing Air India Express crisis. Now let's take a look at some auto news. Maruti Suzuki India launched its 4th generation of its best-selling hatchback Swift. Now the new car is powered by a 3-cylinder engine with mild hybrid technology. Now both the variants also have a fuel efficiency of about 25 kilometers per litre. The car gets standard airbags, which is a first for the company's hatchback in India. Ex-showroom price of the car is seen at 6.49 lakh rupees, which is about 24,000 rupees more than the previous model. NDTV, in fact, also got a chance to speak to the MD and CEO of the company about the EV models that are to be launched in India.
In India, as I said, it's almost 50% of the total Swift customers in India. But also for export, this is really important because this is the icon of Suzuki in overseas market as well. We are planning to export this car with annual target of nearly 30,000 cars for export market.
And which markets will you be exporting to?
We are exporting this car to Africa, Middle East, South America, but not limited to that. We are exporting, whole around the world.
And what are your expectations from India business? What do you think can be the volumes of Swift?
I can't tell you the target of this car for Indian market, but you can understand the level which we want to achieve from the past record.
And you also have a plan for EV. By when can we expect the EV to come in the market?
Our preparation for EV is going well, and we are going to unveil our first ever EV in this financial year, and the production will commence in this financial year as well. The start of sales or start of export will differ market by market, but that will happen accordingly.
Well, it's time to slip into a short break, but do stay tuned as we bring to you our special coverage on General Elections 2024.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence.
Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option.
Welcome back. You're watching The Reporter on NDTV Profit, and now it's time for NDTV special election coverage. Srinagar will see the battle between two young politicians from the National Conference and the PDP. Nazir Masoodi brings us a ground report.
Election fever at Srinagar's iconic Lal Chowk, once an epicenter of separatist politics and a perpetual security hazard.
This is the first election in Kashmir in last over 3 decades, which is being fought without fear of violence or boycott calls by separatists. This election is not just about who wins or who loses. It is reviving politics that was in a state of suspended animation, as Jammu and Kashmir is without an elected government for last 6 years.
The battle for Srinagar constituency is mainly between two young politicians, Agha Ruhullah Mehndi of National Conference and Wahidur Rahman Para of PDP. One is a victim of terrorism and the other was jailed on terror charges. Para was key player in BJP-PDP government's youth outreach program in Kashmir, but after scrapping off Article 370 in August 2019, he was booked under stringent anti-terror law UAPM, now out on bail.
You would get praise from the none other than the Home Minister of India for organizing major youth rallies at a time when things were horribly wrong in 2017, 16 and 18. But then you are the same person who is a terror accused, who is facing UAPA charges. How you would define yourself, a man who is being praised by the Home Minister for involving youth in the mainstream, or a terror accused?
I think this is a story of every Kashmiri, every young Kashmiri who wants to express himself democratically. There are structural issues we face. Even the Home Minister of India, or the Chief, I was working directly with the Chief Minister Mahabubaji closely. So irrespective of, we had so much of, like the Home Minister would openly say, will praise my work. But then you saw how I was treated. I was booked in 2 terror cases by NIA, by SIA, then, tortured, humiliated and kept in detention for like 2 years. I think this is what's happening to every Kashmiri, and this has historically happened to us. My message to people of India is that Kashmiris are like you. We are not born terrorists or stone pelters or militants.
National Conference candidate Agha Ruhullah's father, Agha Sayyid Mehndi, an influential Shia cleric, was killed in a deadly IED blast by terrorists in 2000. Agha's consistent stand on key issues and staunch opposition to revocation of Article 370 has won him praise even from political opponents, including main rival PDP. Despite being a victim of terrorism, he publicly apologizes for failing to stop migration of Kashmiri Pandits in 1990.
In your repeated, speeches, what you are talking about August 5, 2019 was a black day, and you don't accept, and people don't accept that decision. So you are saying that you will going to represent that voice in the parliament Is it still a relevant issue for the people?
It is. You can see from the response of the people and the sentimental outbursts when you talk about it. You can see it in their tears and eyes. People have not forgotten how we were treated and how our dignity and rights were snatched from us, and that too undemocratically, without our asking for our consent and wish and will. So that was a humiliation for us as a nation. So it remains with us. It is relevant. It is relevant until we get our rights and dignity back.
Okay, so is Article 370 scrapping the central issue of your election campaigning?
It's not only the central issue, it's the driving force for my campaigning.
The Srinagar Lok Sabha seat is spread across 5 districts, from the Zojila Pass that separates the valley from Ladakh, and right up Peer Ki Gali or Peer Panjal Mountains in South Kashmir. In Pulwama, which is part of Srinagar seat, it will be the first vote for these enthusiastic residents. In previous elections, they had boycotted polls.
पिछले इलेक्शन में आप लोगों ने वोट डाला था या बाइकआउट?
हमने नहीं डाला हमने बाइकआउट किया था, उस वक्त नहीं डाला था। वही साहब जैसे लीडर
If participation of people in election campaigning translates into votes, Srinagar constituency is expected to defeat boycott politics before electing its new MP. There are clear signs on the ground, and it appears people are leaving behind Srinagar's boycott legacy. In Srinagar, Nazir Masoodi for NDTV.
Well, that's all the time that we had for you on The Reporter, but please stay tuned to NDTV Profit for all the latest news and updates, and of course our continuous coverage of the Lok Sabha elections 2024.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Hello and welcome. We have with us the management of Arvind Limited to talk to us about the numbers. You're watching NDTV Profit. I'm Harsh Saita. We have with us Mr. Puneet Lalbhai, who's the Vice Chairman at Arvind Limited, to talk to us about the Q4 numbers.